A couple of times for the next 24 hours. One, 4 p.m. Eastern time from the Rose Garden. You know that. The address from the President of the United States unveiling the tariffs we've all been waiting for. Tomorrow morning, here's another one. 2, 8:30 Eastern time tomorrow. Reaction from the Commerce Secretary, Howard Lutnick. A conversation you do not want to miss. In anticipation of these tariffs, we have seen GDP cuts across Wall Street from just about everyone. Mohammed mentioned Goldman Sachs down to just 1%. We've had price target cuts on the S&P from SocGen, Ejardeni twice, Goldman twice, RBC and Barclays. This morning we're down by 0.6% on the S&P. We're down by 0.75% on the Nasdaq 100. Under surveillance this morning, reshaping the global economy.
In all these global shocks we've seen, if you think about COVID, if you think about the Russia-Ukraine crisis, the US has outperformed, it's been less exposed. Now you're seeing a shock that's internally generated inside the US. It's leading to US underperformance. We are undergoing transformations to international relations and geopolitics that we haven't seen for many, many decades.
So here's the latest this morning. Uncertainty around President Trump's tariffs threatening to undercut U.S. exceptionalism. The former Obama economic advisor Jason Furman writing in the New York Times, where economic relations go, political relations will follow. This week's tariffs are another step towards hurting the U.S. economy. I'm pleased to say that Jason joins us now for more. Jason, welcome to the program, sir. When you write the book, if you write the book, in 10 years' time, will today get its own chapter?
It probably will. I mean, you rarely see economic policy just turn on a dime and the economy turn on a dime. But that's what we've seen in a very, very short period. A big deterioration in confidence, a big increase in uncertainty, and a big change in the outlook for the economy.
Jason, do you think trading partners would be willing to unilaterally lower their trade barriers without the president taking these kind of approaches?
What trade barriers? I mean, we have trade barriers. They have trade barriers. If we all want to lower them together, it's called a free trade agreement. I'd be way for that. But average tariffs in Europe are 1 or 2% on the United States. Average tariffs in the United States are 1 or 2% on Europe. We had, during the Obama administration, been negotiating a free trade agreement with Europe. I'd be thrilled if the Trump administration wanted to revive that. That doesn't appear to be what they're doing, though.
There's a feeling that maybe this actually is all leading up to widening the division between the U.S. and China, which is a bipartisan type of outcome. Some people, including Peter Scheer of Academy Securities, was saying right now it's kind of doing the opposite. You're seeing China actually get closer to a number of former trade alliances. How do you see some of the geopolitical rearrangement that's already happening versus what could or would or should happen?
Look, the United States is a big, important country. That gives us leverage in the world, but we are not infinitely big and not infinitely important. We really need allies if we want to succeed. The majority of countries in the world, their main trading partner is China, not the United States. If you made them choose, I'll bet they would choose China over the United States. The only way we can deal with China is to work together with the rest of the world, and that just doesn't work if you're putting tariffs on the rest of the world and driving them closer to China. Makes no sense as a geopolitical strategy.
So Jason, take us forward. What do you think the Fed will do, and what do you think the Fed should do when it wakes up and we've implemented tariffs across the board?
Look, the Fed has no choice at this point but to be behind the curve. A rising unemployment rate says cut rates. Rising prices says raise rates. Is that price increase temporary or permanent? Is it being built into expectations? They really have to wait and see, and cannot afford to act proactively when so many different variables are moving in different directions. And that itself is a bad place for a central bank to be. But that's where they have to be, given that we started this with high inflation and we have a very complicated shock hitting the U.S. economy.
Just to build on that, there are a lot of unknowns. There are more unknowns than I could ever imagine. At the same time, there are a couple of sort of knowns that people are putting out there, that the Fed is destined to be late to look for the hard data to really confirm some of the weakness, and that you are seeing sentiment shift lower significantly in corporations and consumers. Based on that, how likely is it to reverse those realities versus project those realities out into the future in terms of reducing economic expectations and increasing inflation?
Look, I think we're going to see slower growth. I think we're going to see higher inflation. I certainly don't think the Fed should even be contemplating an interest rate cut until the unemployment rate is 4.5% or higher. And, you know, by the time the unemployment rate is 4.5% or higher, it might even be too late. But there's not really an option to get ahead of this when we also have seen inflation expectations rise. So it's not just inflation, it's inflation expectations. I know people say this is one-time inflation. In some sense, all inflation is one-time. The 2021, 2022 inflation, that was also one-time inflation. That doesn't mean you can look through it and not react.
Jason, do you think there's a chance we could see the tariff inflation, which the Fed has called transitory, move to other things that are not just goods, services like haircuts?
Yeah, absolutely. I mean, first of all, some services like auto insurance depends on the price of autos. So there's some direct pass-through of tariffs to some service prices. But we've seen inflation expectations rising. When prices are higher, workers are going to demand higher pay. There's certain businesses that are going to be willing to pay them more because of their higher prices. And that sets that wage price cycle in motion. That's what higher inflation expectations are. That's how they show up in inflation. And that's a real risk. And remember, we started all of this with an inflation rate above 2.5%. Before the tariffs even came into effect, I was worried about a no landing situation continuing.
Jason, appreciate your time to break this one down ahead of what could be a major announcement later on this afternoon. Jason Furman there, the former Obama economic advisor. I guess by definition, everything is transitory if your time horizon is long enough, but no need to get philosophical this morning. Mohammed, the takeaway from that conversation appears to be, once again, the Fed is destined to be late. This goes back to how we are all thinking about this moment with regards to the Federal Reserve. Can they look through this moment, or will they have to react?
I think Jason put it really, really well. I think that he said the Fed has no choice. He also went and said the Fed shouldn't even be contemplating a cut right now. And I think he's right. But that's not where the market is. So the market believes that there's a Fed put out there. And we're going to have to work that out in the next few weeks.
It was the big takeaway from the news conference with Chairman Powell just a number of weeks ago, Lisa. We talked about it repeatedly. This market enjoyed the reality conveyed by the Federal Reserve Chair that higher inflation wouldn't mean higher interest rates. The problem we might have in the months to come is this market ready to embrace the idea that lower growth won't mean more rate cuts. That's the tricky situation we're in through the rest of 25.
Based on pricing, this market's not ready for that. Let's see what happens when you start to get more rhetoric, like Friday after the jobs report.
Straight after Chairman Powell addressing this global economy going into the weekend following payrolls and a big address from the President of the United States. Up next on the program, Binky Chana of Deutsche Bank, Tom Fitzgerald of TD Cowen, Julia Coronado of Macro Policy Perspectives, and Matt Dezuk of Merrill and Bank of America Private Bank. From New York, this is Bloomberg.
Joe Walk is helping steer J&J into a new phase of its history, expanding the frontiers of healthcare by discovering drugs and advancing medical technology.
Developing digital robotic capabilities where it's not just the robot doing a surgical procedure, it's garnering information from that procedure for your specific demographic or the patient's demographic, and then informing the next procedure down the road. It's getting smarter. I would say it's starting to morph into personalized medicine, which we know will lead to the best outcomes.
Innovative medicine and medtech are run as separate business divisions, but in the culture of research at J&J, they interact.
If you look at some of the spaces that we're in today, specifically oncology, there is a lot of dialogue going back and forth. I think it's something that will position us extremely well as we talk about not only a continuum of care, but also a continuum of knowledge.
The convergence of technology and medicine is driving innovation in both sectors, with scientific and commercial possibilities just beginning to come into focus.
I'd like to actually see some partnerships down the road happen between healthcare companies and technology companies. I think we'd get to better outcomes faster if we did that. Right now, technology companies don't have the healthcare knowledge. Healthcare companies probably don't have the breadth of knowledge they need for technology. If we can figure that out together with great minds from both sides, I think that leads to a much better place.
From our studios in New York and San Francisco, our expert hosts have the data and analysis from the companies you know and the startups to watch, plus the interviews you don't want to miss. Watch Caroline Hyde and Ed Ludlow on Bloomberg Technology, the only daily business show dedicated to tech, right in the middle of the trading action. Live every weekday, only on Bloomberg Television. Context changes everything.
In case you missed it on the China show.
Compared to a 10% tariff on Chinese export to the United States, I mean, even the entire determination of the fentanyl industry in China is totally worth it.
I think this is a monumental moment for global AI development. DeepSeek did was not only just make the products free, but also they released the entire research open source so you can see how they did it. This has forever democratized this current most advanced version of AI.
How do your students feel about their jobs prospects?
There are a lot of opportunities in this AI application fields. On the other hand, if you look at traditional manufacturing, I think the main problem is that there's a lot of mismatches between supply and demand.
Don't miss the China show live every weekday.
The countdown is on. Everything you need to get the edge at the end of the market day.
Big tech earnings kick off later this afternoon.
Gilead is coming out right now.
We have take two numbers. Back to the markets, right? Our bread and butter.
NVIDIA is one of the best stories in the tech space.
That actually matters a whole lot more.
It might shock some of your viewers.
You're watching The Close.
Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything. U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers Jobs Day like Bloomberg.
Wednesday will be big. What we really want to focus on is what's known versus unknown.
It's been incredibly clear what the Trump administration is trying to do. How much disruption are they willing to tolerate?
What we know about tariffs is tariffs increase costs. How much they increase consumer prices remains to be seen.
Tariffs are stagflationary. They have an inflationary effect, but they also have a deflationary effect.
I don't think these worst-case outcomes are coming to pass.
This is Bloomberg Surveillance with Jonathan Farrow, Lisa Abramowitz, and Anne-Marie Hordern.
The third hour of Bloomberg Surveillance starts right now, 90 minutes away from the opening bell, with equity futures declining by 0.75% on the S&P 500. On the Nasdaq 100, a little bit lighter, softer, negative as well. We're down by 0.9%. In 15 minutes' time, you actually get some economic data. Is anyone going to look at it? ADP at 8:15 Eastern Time, because the big one's taking place at 4 p.m. An address from the President of the United States.
It's a great question at a time when people are pricing in 3 rate cuts by a Federal Reserve, more than 3 rate cuts by the Federal Reserve, even though an increasing number of people say this is a Federal Reserve destined to be late. Will the ADP move the needle? Will the jobs report that we get on Friday move the needle? It is hard to see how this market responds well to the idea that the Fed is not going to be reacting in any material way to weakness.
And a lot of this anxiety is coming from the White House. Kellyanne Shaw, who worked in Trump 1.0 as a trade negotiator. She did phase 1 trade deal with China. She says ambiguity is part of the process, which is why we are talking about today at 8 a.m., 8 hours before this announcement, about the 3 potential paths the president can take, whether it's universal tariffs, a tiered approach, or absolute reciprocity when it comes to trading partners.
Anne-Marie, you know better than this, than everyone sitting around the table. Usually a Trump White House is very leaky. Usually ahead of time, you've got a decent idea of what you're going to hear from the President of the United States. This time around, it seems like investors and officials, even officials in the White House, don't have a clue.
Because I don't think they've made a decision. That is what we are hearing. They have not made up their mind. And there are some leaks. You see it in the Wall Street Journal. You see it in Fox. You see it at Bloomberg. I think what you see is rival factions within the administration pushing for what they think should be the appropriate response to all the grievances the president has. And that's part of the problem. What is the solution he is trying to solve with today with these tariffs? Is it full reciprocity when it comes to trade? Is it to have better deals, so come a negotiation? Or is it really to raise revenue to offset the rest of his agenda when it comes to taxes in Congress?
So what do you hear at 4 p.m.? How do other countries respond to it? What do companies do? What do suppliers do? And can consumers tolerate it? All the kind of things we've got to consider for the next few weeks and months.
Yeah, and do they have something concrete to really discuss? Meanwhile, people are coming up with concrete responses in markets. I keep going back to Jordan Rochester of Mizuho because he came up with a really nice flow chart of what you should do in each scenario. Effective tariff rate of 10% equals a risk rally is a good amount. Effective tariff rate of 10 to 15%, risk rally slightly, but basically status quo. 20% or higher, forget it, all bets off, stocks down. And at a certain point, you have to imagine that's going to be the knee-jerk reaction.
Sounds like a Goldilocks bedtime story, or a nightmare, depending on what you want to see a little bit later.
Are you creeping and listening to my household bedtime stories?
Is that when you read the kids at night?
I tell them, you know, let's talk about tariffs.
I'm sure you do. Everyone believes you.
Actually, to be completely honest, we were discussing tariffs last night, and someone said, what's the point? And I said, good question.
Did you answer it?
I did. I started to lay out some of the points. We don't need to discuss this anyway, but it was great. Very educational.
I'm not surprised. No one is. Equity futures right now. Session lows. We're down by 0.8% on the S&P. Coming up this hour, Binky Chadha of Deutsche Bank on why he's still bullish. Tom Fitzgerald of TD Cowen on how trade tension is shaking up air travel. And Julia Coronado of Macro Policy Perspectives on the chances of a U.S. recession. We begin this hour with stocks edging lower ahead of President Trump's tariff announcement. Binky Chadha at Deutsche Bank writing, a credible relent on trade policy is necessary for upside risk to materialize. The clock is ticking. Binky joins us now for more. Binky, good morning, sir.
Good morning.
You're still at 7K year end.
Year end is a long ways out.
I agree.
I would just like to.
But if you're still at 7K,
like to correct the record that I am not bullish near term. We expect basically the sell-off to continue.
Still bullish year end.
That's 9 months out. It's 3 quarters out. If you think about what happens if we have sort of a mild recession, let's say the second and the third quarter. The tried and tested equities playbook would tell you that equities bottom in the middle of the recession. So that would be June 1st, recoup all of their losses. And that means at the prior peak by the end of the third quarter.
Just to be really clear, you think this year we could have a recession and still end the year at 7K?
I do believe so if it's a mild recession. That's actually what typical playbook would tell you. So where I would say, the pushback in your tone is really, are we just going to have a 2-quarter recession? Are we going to have a recession?
To be fair, for somebody who comes out and has a 7,000 price target at a time when everyone's downgrading it below 5,500, and you say, well, I'm not bullish, well, everybody else would look at it and say, you're pretty bullish.
So we're already at 5,600, so we're going to stay here for 9 months. The equity market's not good at staying in the same place, though I would point out that in Trade War 1.0, the equity market went nowhere, and neither up nor down, huge moves, but nowhere for 18 months, actually. So we are very well aware of that period, and it does play into how we think about things.
Is this predicated on the idea that some of the soft data is not going to be predictive of hard data, and that potentially you get some resolution in the near term, some clarity on policy, and potentially a Federal Reserve that helps out?
I would say not quite. What I would say is actually there's two distinct sources of basically soft data. I would say the low consumer confidence is not necessarily very predictive for what consumer spending and the business cycle is going to do, but consumer confidence is extremely important for presidential job approval ratings, and after an initial honeymoon period, job approval ratings tend to go down to consumer confidence. And the way I would just note or remind is consumer confidence is exactly where it was when President Biden left. And so there's a lot of room for us to go down, and we would go down on bad growth news, bad inflation news, political developments. Now, I would say the other part of the soft data, which is CEO confidence, is extremely important driver of the actual hard corporate data and indicative of it. Now, CEO confidence is tier 2 data, so we don't have very regular reporting and the like, but there are some measures that have basically fallen off a cliff. We're now below 2022 levels on the CEO magazine. We are European financial crisis 2012 levels. Whether that translates to a good and comprehensive measure of CEO confidence remains to be seen. The measures all generally move, together. So there's every reason to believe it. Maybe not the extent and degree, but I think the biggest risk here is corporates go right back into the bunker. And once they go back into the bunker, they don't come out very quickly. So,
what policies in Washington do you need to see to get to your year-end target?
That basically the tariffs are, in negotiation, a relent, just as happened in Trade War 1.0.
And you think it's wrapped up in 9 months?
I think, if there is a relent or rationality, if you want to call it that, we could get there pretty quickly.
So Benga, I want to take you away from your 7,000 target and ask you the question.
December 31st at 4 p.m. Yes, yes.
Over the last quarter, the S&P has underperformed the Euro Stoxx 600 by 17 percentage points, which is remarkable. Some people think this is just the beginning, that we are going to have a normalization of valuations over the next few quarters. Some of it think it's overdone. Where are you on this?
We think it's got a long ways to go, basically. And really the issue is whether Europe can grow. We have, again, the cross currents that we've been talking about. We have the tariffs, as the negative. But, if I look at euro-dollar, I mean, it's sitting right at 108, which is a very reasonable place to sit. So
if you believe that...
If growth starts to pick up, and I would say the ingredients for growth to pick up in Europe were already basically there before all of the German developments. So the German developments, are another positive and another reason to believe that growth will come. And if growth comes, we will get the earnings, and that's all that you basically...
But isn't that a problem for your S&P 7,000? Isn't that a problem that some of the oxygen now gets sucked out by Europe? Flows are no longer persistently to the U.S. The U.S. no longer sucks up global capital, and you lose a critical technical that has supported your bullishness about the S&P. Isn't that an issue for you?
At the margin, yes. But I mean, right now, what I would do is I would be overweight Europe, which is what we are, and I would also overweight the U.S. I mean, remember that we're already down, around 8%. So it is looking better. And if you look at relative performance, tends to form in a channel. We have just moved from the U.S. relative to Stoxx 600. We were at the tippy top. We are now exactly in the middle. That's why I say, we're just about
What are you underweighting? So you're overweighting everything. What are you underweighting?
I'm just looking at, that was about the S&P relative to Stoxx 600. In local currencies, we are right in the middle of the channel. So there is more room for the U.S. to underperform without really changing the trend. And so what has happened so far, the 17 point, that's half of, we're in the middle of the channel, so it can continue without basically upsetting the channel. But for the channel to continue, or for the channel to break, it's really about whether European earnings start to grow.
For as long as I've known you, for a long, long time, you've been bullish and right, and I've been skeptical and wrong. But this is the most bearish 7K conversation I've ever heard in my life.
I'm glad you didn't ask me what my 2026 target is.
What's your 26 price tag?
No, I don't have one. So.
What gets us to 7K in the United States?
Look, the economy is still in good shape. We are closer to the edge. The risks have grown. There's no question about it. And there's no obvious large, big imbalances outside the U.S. government, I would say. And so it's all very possible. But yes, we are getting close to the edge, and the risks have gone up a lot.
So what would make you turn bearish?
No relent on trade. Trade policy continues the way that it is, and just general lack of clarity in policies. I mean, what I'm saying is, if policy stepped out of the way, the equity market and the economy would be just fine. It is policy that is the big negative right now.
Is there a statute of limitations where there needs to be some clarity, before which the damage becomes more entrenched and you have to start to model it out?
That's exactly right, yeah.
What is that statute of limitations?
That statute of limitations is once, we get to a point in the slowing that potentially nonlinearities start to kick in. I mean, if you look at the labor market in the U.S., it's a pretty delicate balance. I mean, it's been very, very steady, so I'm not sure delicate is the right word, but it is delicate behaviorally. It's just been stuck right there for quite a while in terms of hiring rates and firing rates. Both are at very, very low levels, so it is kind of stuck.
Binky, you're a good sport. It's good to hear from you, as always. Thanks for catching up with us. Binky Charlie there of Deutsche Bank. Still looking for 7K year-end on the S&P. Equity futures right now in the S&P, negative by 0.8%, with an update on stories elsewhere. With your Bloomberg brief, let's cross over to Yahara Hackers. Hey, Yahara.
Hi, John. China is restricting local companies from investing in the U.S. According to People Familiar, several branches of China's top economic planning agency have been told to hold off on registration and approval for firms looking to invest in the U.S. The decision does not appear to impact existing commitments or China's purchases of U.S. financial products. Meanwhile, Manhattan home sales surged in the first quarter, up 29% from the same period last year. Buyers are taking advantage of small dips in mortgage rates, with 42% of sales financed. Luxury deals also showed strength, with the median price climbing almost 19% last year to $6.87 million. And movie star Val Kilmer has died. Kilmer came to fame playing Iceman alongside Tom Cruise in 1986's Top Gun. He was also well known for his roles in Tombstone, Batman Forever, and The Doors biopic, in which he played Jim Morrison. Kilmer was 65 years old. That's your Bloomberg Brief. John?
Yahara, thank you. Absolute legend. Appreciate it. More from Yahara later on this hour. Up next on the program, the Morning Calls Plus. Breaking data from ADP. ADP employment change with Mike McKee in just a moment. And reaction from Mohammed Al-Arian. The number we're looking for, 120K. The previous number, 77. The actual number drops next. Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
This is Bloomberg Technology.
This is the Asia Trade.
This is Wall Street Week. Welcome to Balance of Power.
This is Bloomberg Television.
Asia is at the forefront of some of the world's biggest stories. I'm Sherrian in Tokyo.
And I'm Heidi Stroud-Watts here in Sydney, where the trading day begins. We're here in the center of all the action to get you set up with the numbers, news, and knowledge you need for the day ahead.
The demand is indeed recovering. We've been waiting for this moment.
The opportunity of a century.
Join us on Bloomberg The Asia Trade. Weekdays only on Bloomberg TV. Context changes everything.
U.S. tech is influencing global markets.
Technology is driving business across Europe.
Companies in Asia are betting on tech.
The opening bell is 1 hour and 13 minutes away. Equities are declining by 0.8% on the S&P, down by 1 full percentage point and some on the Nasdaq 100. All are waiting for the same announcement, looking for 4 p.m. Eastern Time from the Rose Garden at the White House. The President of the United States unveiling the reciprocal tariff push we've all been waiting for. So equities are softer. Let's get you some morning calls. First up, Citi, upgrading Charles Schwab to buy, pointing to an improving capital return story. That stock is higher by 1.3%. Your second call from Bank of America, lowering its price target on Morgan Stanley to 144, noting downside risk driven by policy uncertainty. We're down there by 0.8%. And finally, Raymond James downgrading United Airlines to mark perform, expecting the, quote, policy roller coaster ride to continue. That name is down by more than 2%. Delta earnings on deck a week today. Look out for the airlines just a week away. And then JP Morgan the following Friday. Lots of earnings still to come. We've got to get through the economic data first. ADP out just moments ago. Mike McKee has the number. Good morning, Mike.
Good morning, John. You asked a few minutes ago whether anybody's going to pay any attention to this, and I'm not sure they are. It's kind of a weird number. 155,000 jobs, according to ADP, added in the month of March. That is significantly higher than the number of private sector jobs economists are forecasting for Friday is 135,000. And there's some underlying numbers in here that are a little odd. Manufacturing, according to ADP, added 21,000 jobs. According to the Economist survey, non-farm payrolls will find 0 jobs added in manufacturing. And we did see that disappointing hiring number from the ISM manufacturing report yesterday. Also, according to this, 41,000 jobs lost in the West, 29,000 of them in the Pacific. Maybe that has to do with the Los Angeles fires, but it seems a little late for that. The rest of the country adds a lot of jobs in New England, 89,000 jobs, never mind the weather in New England over the last month. So not sure what to make of all this, but there you go.
Well, Mike, we've put it together with all the other economic data we've had, particularly the survey data we've seen. You mentioned the ISM. We can look to consumer sentiment from you, Mitch, too. Mike, as we anticipate 4 p.m. Eastern Time, can you describe the position the U.S. economy is in going into this announcement?
I think somebody in the last week called it fragile, and that's probably where we are. There's underlying strength in especially the labor market, but there's a lot of concern among people about what might happen down the road. And as you get down into the lower economic strata, more worries than from the wealthier people. So, yeah, people could start pulling back if they come out of this announcement today with the feeling that things are going to get worse for them.
Mike McKee, appreciate the breakdown. Michael, thank you. ADP out just moments ago. Upside surprise, 155K. The estimate in our survey, 120. The previous number, a revised 84. The headlines we've had on the economy in the United States over the past week. Factory activity contracting. Prices paid, the highest since 2022. Consumer sentiment, the lowest since 2022. As for long-term inflation expectations, the highest going back 32 years. Anxiety around unemployment, 2/3 expecting unemployment to rise in the year ahead. Looking at that sentiment survey from you, Mitch, on Friday, that number, the highest reading going back to 2009. Mohammed's still with us. Mohammed, are things really that bad? When you hear those headlines, are they that bad?
I think people are worried, John. They're very worried. They're worried about demand slowing. They're worried about prices going up. And when you are worried, not only do you express your worry, but you start changing your behavior. I have talked to one CEO after the other, and they're saying, we are going to wait and see. They are postponing major decisions, and for good reasons. You don't want to make a mistake right now. Just you're waiting for clarity. The problem is if we all wait, we create the reality that we're afraid of.
So this is really important. So we start the year, confidence is sky high. We're on this program, all talking together, hoping because we all have the same trade on. We're long the US economy. We want America to succeed. We want that confidence to translate into hiring and investment. Then all of a sudden you describe a C-suite that goes into wait and see. How long can you sit and wait and see before things start to break in the wrong direction? Not hiring, but firing. Not investing, but something else.
It depends on your balance sheet. And that's why Mike was absolutely right when he said, look at the different levels of the income distribution, because people lower down do not have the resilience. A reality is we've run down both human and financial resilience over the last few years. And therefore, you cannot, there's certain segments of the population, there's certain segments of the corporate sector that do not have the resilience to simply wait. You know, the hard thing is, I think, if you ask most people, certainly if you ask me, if you're betting on an economy for the next 5 years, which one would you bet on? I say unambiguously the US, unambiguously. then ask me, so how do you reconcile? When does this transition happen? And that's where we get paralyzed. We know that there's a transition out there, we simply don't know when it happens.
We should bring Binky back to bring some joy to the set. You know,
7K year-end.
I feel 7K. These things are going to just absolutely rip. The policy uncertainty will go away. It raises this question of whether this market is discounting the good data too much. And I say this with ADP employment change, and I understand it's ADP, but when it's bad and it confirms a bias in the market, then all of a sudden it's relevant. This is better than expected. Nobody seems to care. The markets aren't trading on it. If anything, you see equity futures roll over. I just wonder, are we ignoring data at our peril?
So we're ignoring data because this data is irrelevant compared to what's coming in the next few hours. And I think it's completely rational to ignore this data. I certainly would do the same thing. The information content of current data is much less, given that we have major paradigm shifts going on. Lisa, the last high for the S&P was a month and a half ago. This market and the investors have been conditioned over and over again to wait for the next high. That's been the absolutely right trade for years. So it takes a lot for the market sentiment to turn bearish in a permanent, in a sort of longer term sense than just a short term.
Well, but to build on what John is asking then, at what point does the idea of uncertainty as a policy become entrenched? And the idea that we're not going to get Binky's resolution that could lead to that 7,000, that there will be this sort of prolonged sense where people lack the confidence to make decisions.
So we heard it from Kalyan, ambiguity is the style. We heard it from Anne-Marie, it's not a bug, it's a feature. So I think if we all expect this uncertainty to lift at 4:05, we're dreaming. It's not. It's going to continue. And I understand why. It is good negotiating power. That's why I love the construct of game theory. This is not a game, but if you use the construct of a game theory, you understand much better. Is it a cooperative game? Is it a non-cooperative game? Are the two sides equal or not? They're not equal. Is it one round or is it multi-round? And if you start describing it like this, you find that it's in the incentive of the US to maintain ambiguity, to play a multi-round game, because it has the stronger hand. And that's, I think, what we're going to see from the administration.
When it comes to consumers, investors, executives, is it all driven, this anxiety, by policies and the tariff proposals, or was there a slowdown in the economy underneath policies before Trump even walked in?
There was fragility, to use Mike's term, at the lower end of the income distribution, but there was strength overall. Now we have uncertainty has spread both in the household and in the corporate distribution. So that is what's different. What we haven't talked about is Doge. I know a lot of people that are worried about the jobs, and they are looking at not just concerns about higher prices, but about income security. And we also need clarity on Doge. Are you remaking the government, streamlined, debt dynamics under control, more efficient government, or are you breaking it? And remake versus break is an issue that we're going to also have to follow very closely going forward.
It could be an issue for this labour market. Mohammed, you're going to stick with us. We've talked about this repeatedly over the last few months. The transition from the public sector to the private sector is ambitious. It might turn out to be a good objective, but in the meantime, there might be some pain, and the administration themselves have talked about the so-called detox. In a moment, we'll talk about this economy. We'll catch up with Julia Coronado of Macro Policy and Matthew Dizok of Merrill and Bank of America Private Bank.
From the beating heart of global finance, economics, and politics, and wherever newsmakers are moving markets, Bloomberg brings you conversations that allow for deep discussions and important insights. What do you think the future is for inflation? Is this new normal? Are markets too optimistic? How do you worry about the things that are outside your control? How does the current fighting completely stop? I'm Francine Lacroix, and this is The Pulse, every weekday only on Bloomberg.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg. Bloomberg loves earnings.
I know it's like your Super Bowl, right?
I can't wait. It's like opening presents in the morning.
All right, it will be exciting.
Nobody covers earnings like Bloomberg.
Listen carefully. Can you hear the rhythm in the markets? Not just in the syncopations triggered by inflation, but in the preludes leading to global elections, in the dissonance that moves the Nikkei, and the rising course conducted by AI. There's music in the markets, and if you want to learn to listen for it, we'll show you how.
60 minutes away from the opening bell and equities heading south. We're down by 1% on the S&P 500. On the Nasdaq 100, we're down by 1.3. On the Russell, by 1.25. Binky Chatter at Deutsche Bank getting a hard time on this program for a 7K price target. We've had cuts across the street from SocGen, from Yardeni twice, from Goldman twice, from RBC, from Barclays, and they have one thing in common. They all still expect this equity market to finish 2025 higher than where it is right now. Equity softer in the bond market, 2-year, 10-year, 30-year. Yields look like this. Yields are down by 3 or 4 basis points across the curve. The 2-year 385, the 10-year 412.50. Moments ago, the ADP report dropped, came in better than expected. An upside surprise, 155 versus an estimate of 120, and no one blinked. No one's paying any attention. The only thing they're paying attention to is at 4 p.m. Eastern Time, we'll hear from the President of the United States unveiling tariffs. And Fed Presidents Tom Barkin, Austin Goolsbee are both warning that tariffs could create a big challenge for the central bank. On the Fed Speak, here's Mike McKee. Good morning, Mike.
Good morning, John. Well, it's basically what everybody from the Fed has been saying. We don't know what everybody everywhere has been saying. We don't know what the president's tariff regime is going to be like, so we really can't act on it. And that's what they're hearing from all of their constituents. Austin Goolsbee, the Chicago Fed president, saying yesterday that uncertainty is tinged with fear. And he says his business contacts are concerned and they want to sort of sit back and watch. Barkin suggesting a cage match between inflation and growth and basically laying out a stagflation dilemma for the Fed. So it is a situation where they don't know, so they can't say. Some people say that puts the Fed behind the curve. But really, in this case, I think doing nothing is one of the options. So they could be right on the curve at that point. I do think it's interesting, though, that Mohammed said it in the last hour, that the market doesn't believe the Fed is stuck. So it's going to be interesting to see what kind of reaction we get when we get to Jay Powell on Friday.
Mike McKee, looking forward to the address from the Fed chair on Friday, going into the weekend, following payrolls as well at 8:30 Eastern Time. We heard from the former Fed Vice Chair, Richard Clowder, on this program just yesterday, who essentially implied this Fed would commit to being behind the curve, being late instead of early.
If they're waiting for the hard data to show this idea of slowing growth, they're going to be behind the curve because the leading indicators, if they are to be believed, are already indicating some sort of downturn. And if you get unemployment up to that 4.5%, as we heard from Jason Furman, at that point, is it just too late?
Let's talk about this economy. Here's a take from Julia Coronado of Macro Policy Perspectives, writing, a recession has not become the baseline, though investors see the combination of Trump policies as a supply shock that the Fed's tools may not be able to address. Julia joins us now for more. Julia, you're super dialed into the FOMC, so let's get straight into it. Just from a cost perspective, by definition, the tariffs are paid by the importer. We've got that. How do you think the costs will be shared through the economy?
Well, it's going to be split between profit margin pressure and consumers' loss of purchasing power. And exactly how that breaks down sort of depends We're not in the pandemic, so consumers they're not flush with cash. They're not just going to accept any price increase. And we've heard that in some of the comments to the surveys that have come in that, businesses are struggling with how to pass that on. How much will consumers bear and how much must they absorb? But it's going to be a hit in either way. It's going to be a hit to profit margins. It's going to be a hit to consumer purchasing power. And it will come with a burst of inflation. And that's the problem for the Fed. They're already above their target, never got back down where they wanted to be. And it looks like it's going to be a while before we get there.
Julia, one argument is that this Federal Reserve is very aware of the scarring that takes place when unemployment rises to a certain level, and they want to cater to the economy first, even if inflation does run a bit higher. Do you think that this market right now is misguided in their understanding that the Fed could cut rates by 3 times, even looking through some of those one-time inflationary pops?
I think the tension right now in the market pricing, as far as I can see, is it's perfectly reasonable to think that the Fed might lean towards the unemployment mandate and cut 3 times, but that means the economy has to be really bad. It means that the unemployment rate's not just up a tick or two. It means it's risen and is rising beyond 4.5%. We're sort of heading into a recession. And they need to start insuring the economy. That is the scenario in which the Fed cuts 3 times. It's a perfectly plausible scenario. We're sort of leaning in that direction ourselves. We could see a rising chance that we could see a recession in Q3 or Q4 of this year. And it's not just about the tariffs. It's about the combination of policies. One thing that we don't discuss enough is the disruption from DOGE cuts and contracts and disruption to sectors that are usually very stable, like healthcare, like state and local governments, that may start feeling the pinch, and they've been driving job gains. So we could see a turn for the worse, and that could lead the Fed to cut, but that doesn't seem to be the sort of sanguine middle road that the market is pricing in terms of equities.
So I'm trying to understand, Julia, how hard are you leaning into? Because the dominant view right now, to the extent there is a dominant view, is that the soft patch is in the next few months. By the time you get to the end of the year, you have deregulation kicking in, you have favorable things kicking in. Whereas you said the risk of recession is highest in the 3rd and 4th quarter, if I heard you correctly. So
I have a very different profile from this idea we go through a soft patch. What drives growth up in the second half? Tax cuts. That's going to be that's a high bar because of the extension of the TCJA. You can play all the budget tricks you want. The reality of the macro impulse is that you're just not going to get that much fiscal impulse, very likely. And in fact, what we're seeing on the DOGE front is that you're going to get a lot of disruption in fiscal policy, whether or not those contracts are ultimately paid. Cutting them off and injecting uncertainty across a number of sectors is likely to dampen their enthusiasm or willingness to hire employees. Deregulation, we constantly hear this. I can see that in the finance sector. I can see that potentially more M&A, less bank regulation, or at least a lighter touch. But where else am I going to see it? Energy, already we had massive production, low prices. In fact, prices are too low to get much more production. Where else? Tell me the channel that deregulation is going to boost the economy in the second half of the year. What sector benefits from this?
Julia, when it comes to this holistic approach to the Trump administration, tariffs, deregulation, tax cuts, what you're saying there is that deregulation and the tax cuts, which to your point really are just tax extension of current policy, aren't enough to offset what the investors view as bad policy or less optimistic policy when it comes to the markets of the tariffs.
Exactly. And then remember, we're not just talking about tariffs. It's uncertainty around the tariffs. President Trump likes to hold that uncertainty over other countries, over essentially the economy. And so it's not going to just go away today. That today is just another sort of step along a road of an ongoing trade war of tariffs and retaliation. Then let's layer on the DOGE disruption to federal contracts. Then let's layer on the very restrictive immigration policy that is so draconian that it is leading a lot of workers, or at least some workers anecdotally, not to show up to work, not to engage in economic activity for fear of being snatched off the street and deported. And that has been, all of these things have been real tailwinds for the macro economy. The immigration piece is not insignificant. To go from an abundant environment of labor supply and growing demand to one where it's shrinking is a big shift in the environment, and we haven't yet seen that flow into the hard data, but I think the soft data is starting to pick that up. I noticed the comments to the Dallas Fed service sector survey yesterday were very interesting along these lines. They talk about the hit from immigration. They talk about what it's going to do in terms of constraining the construction sector. So, you know, in Texas, we feel that. It's very direct. So, you know, I think these things are going to come forward and show up in the hard data, and we're just focused on tariffs, but there's a whole range of policies that are not growth friendly.
There's a lot to get through. Julia, appreciate your perspective. Thanks for joining us. Julia Coronado there of Macro Policy Perspectives. We're looking ahead to that address from the chairman of the Federal Reserve on Friday. By the time he speaks, he'll have all this information. We'll know what we get from the president at 4 p.m. Eastern Time. We'll know what the payrolls report is at 8:30 Eastern on Friday. He speaks at 11:25 in the afternoon. We joked about this earlier this week. Obviously, somewhat aggressively rewriting this speech, like later today and again tomorrow and again Friday morning.
I mean, this is fascinating to me that he wants to speak right after the non-farm payrolls. What would he like to tell us? And this, I think, is really interesting. If Julia Coronado is correct, the bond and stock markets are singing from different hymnals. And how does he address that? The idea that the bond market seems to be predicting some sort of big downturn, and the stock market's super happy. So go figure.
Let's get to this bond market at the moment. Equities aren't happy. I wouldn't call them super happy this morning either, but let's get to this bond market. 2-year, 10-year, 30-year. 10s at the moment, yields at new lows for the year. The high for the year was the middle of January, it was 480. So we've dropped some 67 basis points off the highs of the year. We're down another 3 or 4 this morning. So are bonds back? Matt Dezok of Maryland Bank of America Private Bank joins us now. Matt, are bonds back?
They never left. They never left. 60-40, the death is 60-40. Like Mark Twain said, his death was greatly exaggerated. So was the death of 60-40. No bad bonds, just bad prices. We had some really bad prices in 2020. When you got negative 2% real rates, listen, folks, not a lot of good things can happen. When we got to 2 to 2.5% real rates, good things can happen. You don't need commodities or other things to diversify your portfolio. When you have real yields, bonds will do that. And that was the story we were telling clients. Very concerned about tariffs being inflationary, not our belief, and I think the market is demonstrating that now, that the impacts of growth offset the bump in inflation. Bonds are doing their job in portfolios now, in our opinion.
So going forward, you're comfortable with 60-40 going forward? Are you comfortable with a globally diversified portfolio? What are you telling clients right now in terms of what will work going forward? So
we think 60-40 is too simplistic. We absolutely do believe, as you just alluded to, opportunities outside the U.S. Now, we believe in U.S. exceptionalism as a concept, but that doesn't mean that U.S. asset prices are always going to be the best. We are now in the 17th year of international developed equities underperforming U.S. equities. That is a pretty long period. Now, these cycles do take long times. It can be 10, 15-year cycles. But if you look at valuations abroad, they are cheap and extremely cheap to their usual level. They should be cheap, right? There's more old economy, financial services, energy, et cetera, outside the U.S. But even to a baseline level of cheapness, are quite cheap. So we do want investors to diversify throughout the U.S., but also we have added to Europe over the last couple of months in our portfolios. But we do want a healthy allocation to bonds and alternatives for clients who can take advantage of alternatives.
So what inning are we in, if you like? We've seen 70% outperformance of Europe vis-a-vis the US in the first quarter. We're seeing a somewhat of a convergence in valuation. But like you say, it's, in historical term, it's pretty de minimis so far. How far do you think that convergence goes on? And at what level overall? Is it a convergence from the bottom? Is it convergence from the top? What happens?
Convergence more from the bottom. We think we're going to see an uptick in international valuations relative to the U.S. I'm thinking it's closer to 8th, 9th inning, possibly extra innings, but it's about time, we believe, for developed markets outside the U.S. to perform. Now, we might need to see a weaker dollar to actually have the come to that fore. But there's not a lot of things that would have to go right for international to do quite well. A weaker dollar could do it, better valuations could do it, sit here, get paid to wait with dividends can do it. So there are a lot of ways for a rebalancing of some performance from international equities to help out the U.S. portion of the portfolio.
And who is playing in this game? Is it the Mets or is it the Yankees? No, I'm kidding. Don't worry. We're Mets fans.
I'm living in 1986, so I'm still with the Mets.
There we go. Thank you. I appreciate that. I wonder if there's some conflict here with respect to this sort of bullish sentiment that bonds can work of all varieties and of all types. Bonds are back. This idea that credit can also work at a time when right now, if Julia Coronado is correct, the Treasury market is pricing in some more protracted downturn, at least than I've sensed from the stock market, which is not necessarily sad, but still, definitely not exactly pricing in recession. Is there a contradiction here in some of the pricing of some of the credit instruments beyond just treasuries?
It's very interesting. And Mohammed made some great points earlier on that game theory and multiple stages here are the way to think about it. What I think we're seeing for the bond market, and again, we're not overly enthusiastic about bonds right now. We like them more. We like duration more, closer to 5% on 10s. Now, low 4s on 10s, approximately close to 5% on the ags. We're neutral duration, neutral sectors. We think what the market is telling you is obviously the uncertainty around tariffs going to bring growth down. But everything here in the U.S., we have the strongest hand, as Mohammed said before. That's the right way to think of it. We got pocket aces, or worst case, ace-king suited. We have the greatest hand relative to the U.S. People want to come here, right? Demographics are a problem. Any problem you can think about, demographics being one, we can address that better than anywhere else in the world because people want to come to this country. So any problem we have, whether it's spending, whether it's demographics, we have the opportunity to solve that. So I think what you're seeing in markets is, should valuations come down a little bit? Should we have to see a little pain to get inflation off the 3%? Should there be a transition? Absolutely. But on balance, I think the markets are looking through this, that there's going to be some pain, but manageable, and both fiscal and monetary policy can recalibrate to get us through this without a recession at this point. But the window for good Fed rate cuts as opposed to rate cuts to deal with the problem, that window for good rate cuts, that is closing, to be fair.
So, and I have to be honest, my head's kind of spinning for a lot of reasons. I'm trying to think about cutting 3 times this year and how much that increases the chance of protracted inflation if we get ahead of any kind of downturn. If you get ahead of any kind of downturn, doesn't that allow the strength of this country that you just described to perpetuate any kind of inflationary shock that comes from the tariffs?
So, again, we're always very humble on what a policymaker is going to do. However, we think 3 rate cuts is probably too much. And actually, we saw a fraying of the 2-cut baseline. If you looked in detail at the last Fed meeting, 4 voters moved from 2 cuts to 1 or none. Only 2 more people moved. You got to 1-cut baseline. If you watched Chair Powell talk at the press conference, sometimes he was very, very confident. When he asked about a recession, didn't say that at all. When he got asked 3 times about the 2-cut baseline, he got a little less serious about that, because you can see, again, 4 people moved against that direction. So we would not expect 3 rate cuts. We're officially, Bank of America Research, expecting no cuts this year. But again, the point is, some of this uncertainty might be necessary. As Mohammed also said earlier, lower income is struggling, but higher incomes have still been spending. Huge asset price increases in housing and stocks. Yep. If you really want to slow down spending by higher income, then asset prices coming down a little bit, moderating a little bit, might actually be what you need to get those spenders to retrench a little bit, to help the Fed get inflation back to 2%.
Matt, appreciate your time. It's good to see you, sir. Thank you. Matt Dezok there of Merrill and Bank of America Private Bank. I want to pick up on that word humble. Humble, open-minded. Got to be open-minded. Consensus has been wrong at almost every single turn since the pandemic, coming out of the pandemic, as everyone's trying to call this market and this economy. And let's see what we get later on this afternoon. With an update on stories elsewhere this morning, here's your Bloomberg Brief with Yahara Hackers. Hey, Yahara.
Hi, John. We start with Rivian. Shares are falling 2.8% after the company reported first quarter production and deliveries that beat estimates. The EV maker delivered 8,640 vehicles, more than the expected 8,610. Rivian also reaffirmed its 2025 delivery range guidance of 46,000 to 51,000 vehicles. Turning to the Wisconsin and Florida special elections. In Wisconsin, the candidate backed by Elon Musk, Brad Schimmel, lost a judicial race despite Musk pouring millions of dollars into the campaign. And in Florida, a win for Republicans with Jimmy Patronis and Randy Fine, both winning special elections bolstered by President Donald Trump's endorsement. And President Trump has said for months that the U.S. will take over Greenland one way or another. Now that rhetoric may be turning into policy. According to the Washington Post, the White House is drawing up a cost estimate to take over the Arctic territory. The report says one option being considered is to offer a sweeter deal to Greenland's government than Denmark. That's your Bloomberg Brief. John?
Yahara, thank you. Thanks for this morning. Up next on the program, we'll set you up for the day ahead. There's only one thing to look for. 4 p.m. Eastern Time from the Rose Garden, the President of the United States.
Today's CFOs are reshaping the C-suite. Bloomberg's chief future officer shines a spotlight on these dynamic leaders.
What's the hardest part of being a CFO?
It's hard to come up with that. It's the vast responsibilities, the need to be engaged in different topics.
It's remembering which audience I'm speaking to and what I can say in that context.
The job is not just being the executive of the finance function, it's being an executive for the company.
I would say it's prioritization.
Complete the sentence. The hardest part of being the CFO is
telling people no. It's hard. It's the right thing to do, but it's always hard.
So being just like a touch of a heartbreaker, basically.
Yeah.
We have a plethora of good opportunities. Some are really, really good, but as we strive for the great ones, sometimes those really, really good ones have to be left behind.
New episode premieres April 23rd, only on Bloomberg.
Africa, a region rife with potential for growth and opportunities, but not without its challenges. Bloomberg highlights the biggest stories, interviewing key players, and reporting on the issues impacting the region. Join us as we get to the heart of African business, politics, and economics, and ask the question, what's next? I'm Jennifer Zabasaja, and this is Next Africa. New episodes every month, only on Bloomberg.
Always on the heartbeat of the tech
spread across global markets.
The real-time data aspect is going to be important.
We're going to bring you expert analysis on that. Sure.
Don't miss Bloomberg's interview with the
Equities at the moment down 0.9%. The opening about 38 minutes away. On the Nasdaq 100 down by more than 1 full percentage point. As we count you down to the big one at 4 p.m. Eastern Time. This is what things look like for the next couple of days. At 10 a.m., factory orders and durable goods. At 4 p.m., you'll hear from the President of the United States. Then on Thursday, those tariffs, many of which will take effect, including autos, get a round of jobless claims as well, so look out for that. On Friday, 8:30 Eastern Time, you'll have payrolls, plus Fed Chair Jay Powell will be speaking. Let's head down to Washington, D.C. and catch up with Mike Shepard for more. Mike, for people just waking up, just tuning in, getting ready for a long day and night, what is going to happen at 4 p.m. Eastern Time?
Well, at 4 p.m., we're going to hear from President Donald Trump making this announcement of what he has been heralding as the beginning of a new chapter in U.S. trade policy. He is intending to unveil these so-called reciprocal tariffs, as he's called them, that are designed to create a more equitable playing field for U.S. companies and for U.S. Exporters and for U.S. goods abroad. They have singled out different, what they see imbalances in trade with trading partners, including the European Union, and this will be an extension of the trade war he has already begun, with measures taken against Canada, Mexico, and of course China. And we're going to see also how that sits with those trading partners and with companies and investors. What kind of response will they take? Will we see trading partners immediately come back with some sort of reprisal or retaliation? The European Union has already responded in part to the tariffs that he has imposed on steel and aluminum. Canada, of course, has responded with tariffs of its own against the U.S. measures taken against the country just weeks ago. And China, too, is making steps of its own, calling for the U.S.
Washington, D.C. Mike Shepard there of Bloomberg. Just enough time around the table to get a final word. Mohammed, first of all to you, please. A final word ahead of 4 p.m.
I'm not sure what that final word is, other than wait and see. And remember, this is a multi-round situation, not a single round.
That's the issue this market's got. What are we going to hear at 4 p.m.? How are other people going to respond? By other people, I mean the Europeans, the Chinese. How will companies respond? What will consumers do? Will they be able to tolerate higher prices? All things we need to think about going into 4 p.m. and beyond.
I'm less interested in the near-term response in markets than the longer-term timeline of the uncertainty and how long it remains in the system. And if people get the sense that this is a longer timeline, how much does that suppress some of these 7,000-like projections of the S&P 500 at a time when the uncertainty itself is having a drag? And that, I think, is what I'm looking for.
Today will not be the final word. To Mohammed's point, Kellyanne Shaw, I think, nailed it today. Ambiguity. That is how the president likes to operate. So when you go in today and you think about all these three proposals on his desk, universal tariffs, reciprocal, the tier approach, I think potentially we could see a hybrid of the two to assuage a number of concerns he has within his base and the larger Republican Party. But it is just the start. Then you're going to see negotiations take place, and also a very long line of companies that call the Oval Office, that call Howard Lutnick, that call Kevin Hassett and say, we have invested X amount of dollars into the United States. We hire this many people in a factory in South Carolina, even though we are a German brand. We're going to need exemptions. That's the next conversation.
That's what's difficult about this moment. Mohammed has said it repeatedly through this morning over the last 2 hours. I don't know. We don't know. And based on our reporting, even people inside the White House, they don't know either. Only one man gets to decide, and you'll hear from that man at 4 p.m. Eastern Time, live from the Rose Garden, an address from the President of the United States unveiling what he calls Liberation Day. From New York City this morning, a special thank you to Mohammed Al-Arian. Up next tomorrow, Bob Michael of JP Morgan Asset Management, Jim Zelter of Apollo, former senior Trump trade advisor Katie Kalukowicz, and the U.S. Commerce Secretary Howard Lutnick, live on Bloomberg Surveillance at 8:30 Eastern Time tomorrow morning. From New York, thank you for choosing Bloomberg TV. This was Bloomberg Surveillance.
From our studios in New York and San Francisco, our expert hosts have the data and analysis from the companies you know and the startups to watch, plus the interviews you don't want to miss. Watch Caroline Hyde and Ed Ludlow on Bloomberg Technology, the only daily business show dedicated to tech, right in the middle of the trading action. Live every weekday, only on Bloomberg Television. Context changes everything.
What legacy I would love to leave is to make sure that in my village I have infrastructure. So long when I'm gone, things are still working, then I have done my job. And if some people get inspired through my work and then try to engage themselves for their community and create something that is inspiring for everyone, I will be happy.
What's the best piece of advice you would give to someone young who wants to make a difference actually in this world? In architecture or with something else?
Wow, I'm not the right one to just do that.
I think you are.
Yeah, but with the pressure you have, and then you try to be the good one, the fancy guy, the intellectual one, I have no advice than to believe in yourself and really work hard. You know, when I started, No one would have imagined that I will be able to see my name connected with Aga Khan or Pritzker or sitting at Bloomberg to talk about sustainability, about future of sales. No, Marcel, 5 years ago, if you told me that, I will say no. I will never imagine. So I will encourage everyone to believe in what you're doing and not try to run after the newest of the newest. Just be consistent. Just work on things that matters for you. Really, at the long term, it pays.
The incidence of cancer, which is to say people getting it, is higher than it was 20 or 30 or 40 years ago. Is that because detection is better than it used to be?
All right, so the dirty secret is we have no idea. We don't collect data well in the United States. What we do know is that there's not a dramatic rise in cancer in the United States, but what we are seeing is a troubling trend is younger people are getting more cancers. That's real. We have no idea why, but we are seeing younger people, more colon cancer, more breast cancer, and other cancers in younger individuals, 20, 30, 40-year-olds, that we never used to see.
What do you think could possibly be the cause? I assume pollution or the environment in some ways?
We assume it's either something in the environment, we assume it's diet, it's ultra-processed foods, it's microplastics, it's changes in the microbiome. We really don't know.
Bringing you up-to-the-minute tech news whenever and wherever it happens. I'm Ed Ludlow in Las Vegas, and this is Bloomberg.
All right, today's the day, and we're looking at stocks down big. 30 minutes until the start of trading. I'm Matt Miller.
I'm Shonali Basak.
And I'm Katie Greifeld. Bloomberg Open Interest starts right now.
Coming up, the clock is ticking. Final deliberations over Trump's tariffs are coming down to the wire. All eyes on the Rose Garden today at 4 p.m.
Meanwhile, China is already taking action. Beijing reportedly restricting local companies from investing in the U.S. Details ahead on that Bloomberg scoop.
Plus, Tesla is about to reveal just how brutal the past 3 months have been. The car maker reports first quarter sales this hour, and with that in mind, let's get a quick check on the shares. You take a look at Tesla right now. Analysts are expecting 390,000 deliveries reported for last quarter. That's down from the nearly 460,000 that had been projected in early January. You can see the shares moving right now because actually we just got the news and it delivered 336,000 cars there. So less than expectations and well below those expectations heading into the year. Tesla shares down about 5% right now, Matt Miller.
Yeah, that's a big miss for Tesla. NVIDIA is the second most traded stock pre-market. Those shares are down 17% this year, and it could be another 2% at the open. Investors awaiting details on tariffs, and they will impact, of course, chip makers like NVIDIA.
And we're looking at the health sector, too. We're keeping an eye on chips. We're keeping an eye on pharma as well. In this case, Hims is down sharply this morning because it plans to sell weight loss drugs like Zepbound on its new telehealth platform, but investors aren't really responding. It's down more than 6% pre-market. And remember, this is a stock that is still up more than 28% really before this drop for the year. Now, President Trump's team is finalizing plans for those long-awaited tariffs. Investors are looking for any sign of clarity.
What I would want to do when I see the announcement, right, is just bring the heart rate down, take a look at what's on paper and what they're saying.
Once people have a chance to sit down and figure out whatever tariffs we're on, they're like, ooh, this is not good.
So if we have a 20% tariff across the board, prices are going to go up. So that's disconcerting.
The United States is a big, important country. That gives us leverage in the world. But we are not infinitely big and not infinitely important.
I think we have been in the process of destroying the American brand, and this hope that country after country would come and beg for a deal is changing rapidly.
The majority of countries in the world, their main trading partner is China, not the United States. If you made them choose, I'll bet they would choose China.
So anticipation building into 4 p.m. today, but Trump's tariff plans are still being worked on, according to White House sources. Let's get the latest from Bloomberg's Akayla Gardner joining us from D.C. So the White House has not reached a firm decision on their tariff plan. That was as of Tuesday, per people familiar with the matter. Akayla, talk us through some of the options that are on the table right now that are being hashed out.
Well, anyone looking for clarity is likely not going to get it until 4 p.m. today when the president makes this announcement in the Rose Garden. Anyone who knows this president knows nothing is final until he says it, till it's on paper, till it's on Truth Social. But right now we're hearing a few options are on the table. One would be a two-tiered approach where potentially countries could see a 10% tariff or a 20% tariff based on how the administration believes they treat them. One could be a more tailored approach based on countries' current tariffs on the United States and non-tariff barriers. Others are also reporting potentially just a flat 20% rate. But regardless, countries are already signaling that they're prepared to retaliate. We've heard from the EU, Canada, China. They're all preparing to really ramp up what has become a trade war. And President Trump is really willing to have that fight. We heard White House Press Secretary Caroline Leavitt say he's willing to get on the phone, he's willing to negotiate, but no signs that there's going to be plans to change any of these tariffs before they're announced and implemented tomorrow.
Well, what about after they're announced? With that much uncertainty still on the table leading up to that Rose Garden event, how much might things change even after they're announced?
Well, like I said, the White House is really open to negotiating. We've seen them do the same in the past with Canada and Mexico. But some have seen those negotiations and said, is it really worth it? Ultimately, those tariffs are going into effect when it comes to Canada and Mexico. The president has said he's not happy with their efforts when it comes to fentanyl. So some people are wondering, we might as well just put these retaliatory tariffs on the U.S. to show that we're willing to have this fight. But again, the White House saying that President Trump is willing to negotiate and make those phone calls.
All right, Akayla, thanks very much. Akayla Gardner there talking to us about what we can expect from President Trump this afternoon. Now, Tesla first quarter deliveries missed estimates by a long shot. We were looking for 390,000 in the latest survey of analysts, and they actually gave us 336,681, beaten out by BYD of China, which delivered 416,000 fully electric vehicles in the first quarter. Bloomberg's David Welch is in Detroit to discuss. So, David, Tesla just continues to disappoint. Is this all because of Elon Musk's other activities, or have the sort of, first adopters already filled their garages?
It's kind of all of the above. So you can't have BYD gaining that much share, gaining that much in sales without it coming out of somebody's hide, and Tesla's a big player in EVs in China. So you got to think some of it's competition, whether it's BYD in China and Europe for that matter, or General Motors, Hyundai, Kia, gaining share, albeit slowly, but gaining share in the U.S. That's going to take some buyers away from Tesla. It's his political leanings, getting a lot of EV buyers in the U.S. are Democrats, according to some surveys I've seen. So those people are probably going to at least consider somebody else, if not run to another brand. And then, look, you do have the Model Y changeover. That's going to take down some production in plants. And generally, you bring up a good point. You have early adopters, luxury buyers who like EVs. They've got one or two in their garage already, so we're at the flat part of that S curve, as they say, looking for a catalyst for EV sales to pick up stronger growth again. And when you have more competition, less growth, and some other, let's call them, internal factors unique to Tesla, it's all really just driving down their sales at the moment.
And this, of course, follows their first annual sales drop in over a decade last year, David. So clearly these problems extend beyond Musk's political activities, if you phrase it that way. But talk to us about the potential bullish case for Tesla here. Obviously, there's so much bad news priced into the stock. You mentioned that Model Y switchover. To that point, Tesla did say that the ramp of the new Model Y continues to go well. There's some hopes and dreams built on robo-taxis. I mean, what is the best case scenario for Tesla to turn this around?
For investors to get excited about that, you have to believe that the smaller, affordable Tesla is coming soon, and will sell well and make them pretty good money. You have to believe in the AI and robotics autonomy case that the robotaxi is going to bring in a whole new kind of revenue that is lower cost for them. I mean, it would basically be subscription-based revenue for vehicles that are either out there or going to be sold. And it could be quite lucrative if it works. But we really haven't seen a Tesla model out there on public roads like we do with Waymo and some of the other companies like May Mobility, who are actually running out among other motorists, among pedestrians, fire trucks, and all that stuff that makes it very difficult to run self-driving vehicles. A lot of people have lost a lot of money betting against Elon's technology promises, but that one seems to be just a really difficult one to get out there and get generating revenue anytime soon. But you have to believe that if you're going to take the bull case on Tesla.
David Welch in Detroit, we thank you for your time. Good to see you so much this week. Of course, a lot to talk about autos and Tesla in particular. We're going to stick with it. We're going to bring in now New Street Research Global Team Head of Technology, Pierre Ferragu, who has a buy rating for Tesla, more than 465 here as a price target on the stock. Pierre, you're known as a Tesla bull, but these numbers, they've come in more than 50,000 below estimate. What do you make of them and the turnaround here for Tesla stock? You're certainly not seeing it this morning.
Yes, the number itself this morning is a particularly dire surprise, negative surprise. All the work analysts do to check channels, manufacturing, etc., were indicating like a bad quarter, but not that bad. Now, the underlying drivers of this bad quarter, what are they? The first one is that there is a new model Y being produced that stopped production for multiple weeks. It is the first time a car of that volume got upgraded across the world, like in all factories at the same time. So that's in itself a big disruption. That is a one-off. Then the second aspect is we've known now for 18 months that Tesla has a significant issue. Something is standing between them and their growth potential. That's the price of their cars. Tesla is selling premium cars at an average selling price that is still in close to $40,000. And with that kind of expensive cars, it's difficult for them to grow more than they've grown already. So they need to bring to the market less expensive models, and that's still something that is planned for later this year, and that's going to help growth. And then last but not least, the economic environment, the uncertainty on the economic environment has historically had an extremely strong adverse impact on demand for premium cars. So people who like to buy a Mercedes, a BMW, or a Tesla, when they see stocks coming down and things like that, they think they're 401k, and they delay the purchase of their car. So that's the combination of these three factors that hit Tesla this quarter, and things should improve from there.
Pierre, I mean, it doesn't really matter, I'm guessing, for your forecast, if they sell 1 million cars a quarter. They could sell 2 million cars a quarter. It still doesn't work out to value this company at well over $1 trillion, which is where it would be if it were trading at 465. So why do you have a buy on this stock? It's certainly not about car sales.
Yeah, so I think the way the stock has been moving in the last few weeks is 100% related to car sales still. But the valuation, if you think about it as a multiple over like today's earnings power of the business, yes, you are totally right, Matt. It's all about the potential in robotaxis and the potential of Optimus, the humanoid robots. And there is like an order of magnitude higher earnings power in the deployment of these businesses than there is in purely selling cars. And so the reason why we have such a high price target is because what we've seen since the Robotaxi Day in October last year is that now investors are pricing into Tesla, in the multiple of Tesla, really like the potential of these businesses that are still going to take a few years to deploy. But this year we'll have very significant catalysts, very significant early indicators. The first test fleet of robotaxis by the end of the year, and the first mass production of Optimus, the humanoid robots. And these things, of course, are going to help investors look multiple years ahead when looking at Tesla, the same way they were looking at Tesla, in the mid-2010s.
Well, Pierre, as Shanali said, you're known as a Tesla bull, but you also cover a number of semiconductor names as well. So I want to bring you a Bloomberg scoop from this morning that China has restricted local companies from investing in the U.S. This is according to people familiar with the matter. The idea here is that this will give Beijing more leverage in trade negotiations, and that brings us to this afternoon, 4 p.m. We don't know what's going to happen necessarily just yet, but you think about these chip names that you cover, a lot of them are firmly in the crosshairs of these trade negotiations between China and the U.S.
Yeah, absolutely, Katie. So if you look at the situation today, let's take like a very simple example like NVIDIA. When NVIDIA is selling a chip $30,000 in the US, they're actually, the final assembly of that chip is in Taiwan, for instance, or we could take another example in China, and then they buy that chip for $6,000. So it's a very, very high gross margin business. So the impact of tariffs on that kind of business is only on the bill of material. And if you have like an 80% gross margin, it's a relatively small impact. You have to think about it like the worst case scenario, a 25% tariff would be 5 points of gross margin for NVIDIA from 80 to 75%, or like a 5% increase on the selling price of the chip. Now, why is China reacting with this idea of keeping their company from investing in the US? Well, simply because the idea of the administration is to force reshoring, to force investment in the US, to bring back blue-collar jobs in the US, to bring back manufacturing expertise and capability in the US. And so here we're seeing like a poker game where the US says, okay, we're going to add like a 25% tariff to force you to do things in the US. And then China is saying, well, we're going to tell our companies they can't do things in the US, which is like bringing up like the stake. Now the next stage could be if the US wants to go even further to say, well, fine, in that case, American companies with operations on the US soil are going to take the business away from the Chinese players. And then the negotiation is going to continue. And at some point, hopefully things will land in a place that works well and protects the interest of U.S. companies, and with like I would hope like a reasonable balance between offshoring and keeping some of the activities inshoring and keeping some of the activities offshore.
I think you make a good point, and that is that this move from Trump and the response from China could just escalate this thing into a trade war out of control. Pierre Ferragu, really appreciate your time from New Street Research. Thank you so much for joining us on Open Interest. Coming up, Big Pharma is bracing for uncharted territory as well as Trump's tariffs are set to take effect. This is Open Interest.
Listen carefully. Can you hear the rhythm in the markets? Not just in the syncopations triggered by inflation, but in the preludes leading to global elections, in the dissonance that moves the Nikkei, and the rising course conducted by AI. There's music in the markets, and if you want to learn to listen for it, we'll show you how.
Today's CFOs are reshaping the C-suite. Bloomberg's chief future officer shines a spotlight on these dynamic leaders.
What's the hardest part of being a CFO?
It's hard to come up with that.
It's the vast responsibilities, the need to be engaged in different topics.
It's remembering which audience I'm speaking to and what I can say in that context.
The job is not just being the
the executive of the finance function. It's being an executive for the company.
I would say it's prioritization.
Complete the sentence. The hardest part of being the CFO is?
Telling people no. It's hard. It's the right thing to do, but it's always hard.
So being just like a touch of a heartbreaker, basically.
Yeah.
We have a plethora of good opportunities. Some are really, really good, but as we strive for the great ones, sometimes those really, really good ones have to be left behind.
New episode premieres April 23rd, only on Bloomberg.
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm David Gura in Rio de Janeiro, Brazil, and this is Bloomberg.
Bloomberg brings you breaking news 24 hours a day. Powered by more than 3,000 journalists and analysts in more than 100 bureaus across the globe. Bloomberg Television. Context changes everything.
Well, the pharmaceutical industry is bracing for tariffs that may upend the drug world. In fact, nearly 90% of U.S. biotech companies rely on imported components for at least half of their FDA-approved products, according to industry estimates. Here to talk about the possible fallout is Sam Fazeli. He is senior pharmaceutical analyst over at Bloomberg Intelligence, joining us on set. It's great to see you in person, Sam. So we don't know a lot, but what we do know is that President Trump said on Friday that specific pharma tariffs were coming soon. Give us a sense of just how integrated the manufacturing supply chain for a lot of these big pharma countries are, because Ireland is popular for a reason.
It is, and the reason is tax, right? So if you manufacture your stuff there and then transport them over to the US at whatever transfer pricing these companies set for themselves, then you can avoid paying the US tax and pay much lower tax in Ireland. That's what's been going on for quite a long time now. And that's why the sector in Ireland is benefiting from that. The big thing for the 90% of companies that you suggested there is what type of product do they buy? If they're just buying product that's coming from China or from India or from Ireland or from, excuse me, Switzerland, if it's just as simple as that, it's not intercompany transfers, then it tends to be the lower cost active ingredient type things where they then finish the product in the US. So the impact of that on earnings and cost of goods should be lower because they're usually cheaper. It's the branded product that takes the price, right?
So, first of all, you have a PhD also in pharmacology. So you're not just like a Wall Street analyst guy. You also are read in. What kind of damage will these tariffs do combined with halting grants to universities, research universities in the U.S., which are the best in the world, right? We should, I think, be proud of them. What kind of damage will that do to pharmaceutical drug research, to healthcare in America?
Yeah. Matt, I have to say, you could take it beyond that. What kind of damage are these things doing to STEM in general? Now, mathematics perhaps is, but technology, right? A lot of DOGE cuts are going to be impacting the acquisition of technology from technology companies, right? And if you're also cutting the investment in the science side, whether it's drug research or tech research or whatever it is, then you're potentially putting the leadership of the United States in STEM at risk. And that is something that I'd like to take a deeper look at and look and see how far that can go. The other question is, where would this science move to, right? Because it's like you're squeezing here. Who else can invest at this level across the globe? You tell me.
Sam, I wish we had more time because for everything from branded drugs to generics, that's a whole other issue to be discussing, as well as the supply chain from academia. A lot to discuss and a lot of change. Sam Fazeli of Bloomberg Intelligence. Now, retailers, they're also bracing for Trump's tariffs. Walmart, in particular, is continuing to push Chinese suppliers to cut prices in order to offset the tariffs, despite getting pushback from Beijing. A recent drop in corporate and consumer confidence is forcing brands to cut their earnings outlooks. Let's discuss this with Telsey senior research analyst Joe Feldman. Every industry is really feeling various degrees of pain. When it comes to retailers in particular, where is the brunt of it?
Yeah, the brunt of it is really in things that deal with hard goods, metals, and really heavy exposure to China. So you see it in things like electronics and sporting goods, like hard goods, sporting goods like bicycles, toys, appliances. Some of those categories are most exposed to China and some of the other tariffs. Now, as this broadens out, we'll see what happens today at 4 o'clock, but it could have a big impact on quite a few companies in the retail space. Some are better positioned. We think like a Walmart has a broader, assortment of goods. They have, 60%, 70, 65% of what they sell is groceries. So that's mostly a domestic supply chain, so you don't have to worry too much there. But then there's others like Best Buy, unfortunately, over 80% of what they sell is China and Mexico. Produced in China and Mexico. So, you have that issue. You have the dollar stores have a lot of product coming out of these countries. So there's pressure in certain parts of the market.
Well, to that point, Joe, Bloomberg News exclusive this morning that Walmart is continuing to push Chinese suppliers to cut prices to offset the impact of tariffs, again, according to people familiar with the matter. So we'll continue to keep an eye on that. But you think about the impact of tariffs, and there's actually two different sources of pressure here. You have, of course, input costs, what you were saying in terms of manufacturing and how these companies are exposed to China. But there's also the impact on the U.S. consumer, who might be tightening up their purses, their wallets, for example, and might not want to spend as much. So it really feels like it's coming from all angles here.
Yeah, that's a great point, Katie, that, you're really going to see it on the consumer side, because every retailer we've spoken to, every consumer brand has some amount of their pricing is going to go up. They're trying to work with the suppliers and share some of the burden there. The retailers and brands will eat some of the cost themselves, but a good chunk of it, maybe a third, maybe more, will get passed on to the U.S. consumer. And so it really will raise prices. Now, what we've seen historically, areas like food, for example, even when prices do go up, people obviously continue to eat. And so you're going to see that spending pullback on discretionary goods. And that's just going to further make more pressure on that side of the aisle within the retail space.
Hey, Joe, I wonder about Home Depot and Lowe's, not only because I would expect lumber costs and steel costs to be rising significantly, but of course, with mass deportations, you're going to have a dearth of construction workers. How is that affecting those companies?
Yeah, we're hearing a lot of pressure from those elements, especially on the deportation side. We've seen that in some of the service industries where you've seen a lack of available labor. Really, whether it's restaurants, hospitality, and retail, those are some big ones. And beyond just retail on the customer-facing side, it's the back end of it too, right? It's the supply chain. It's in the warehouses. You see that pressure. You see, as you just mentioned, anything with steel and aluminum. Think those items are going up in price. It's just going to be more pressure for the consumer. Lumber and building material costs go up in price. We've seen lumber prices already start to really jump through the roof. And that just puts pressure on the whole ecosystem. Everywhere you look, whether it's building stores, building homes for new, when we don't have enough homes in the country, we're not keeping pace with the population growth. So you need more production and industry on the retail and consumer side. And this is going to be a dampening effect for sure.
Joe, great to get some time with you. Thanks so much for joining us. Telsey Senior Research Analyst Joe Feldman talking to us about the effect these tariffs may have and other Trump policies on retailers. Looking at futures, we are sitting at session lows with S&P futures down more than 1% just 4 minutes ago until the start of trading. We're going to start the day with Nimrit Kang of North Star Asset Management and ask her what she thinks about the stability we'll get from this Trump announcement at 4 o'clock. This is Bloomberg.
2015, I was not optimistic because nobody was working on the hard problems. The energy R&D budgets had gone down. The venture investing in climate had gone down. It was completely out of fashion. So I don't know what people were optimistic about then. The fact is, we built essentially from scratch, you know, with lots of supporters, a really mind-blowing level of innovation against emissions. And, you know, in the last 9 years, that's gone better than I would have expected. So only now could you even, you know, plausibly be optimistic about the path of emissions. And someone who said, hey, nobody's ever scaled things up very like the speed that we knew to before, they're welcome to say, hey, I'll believe this when I see it. You know, in the meantime, some people who care about this issue are really out, you know, trying to think, do we need permitting reform? You know, do we find, what new ideas haven't we found yet? You know, how do we fund people with those new ideas? How do we get the costs of these things down? How do we collaborate on a global basis? So we're still not at the point where it's guaranteed or even that it'll be easy, but at least there's a theory of change.
Asia is at the forefront of some of the world's biggest stories.
And we're here, where the action starts in Sydney.
And in Tokyo, get ahead as the global trading day begins.
The Asia Trade, weekdays only on Bloomberg. Bringing you up-to-the-minute financial and geopolitical news whenever and wherever it happens. I'm Francine Lacroix in Davos, Switzerland, and this is Bloomberg.
We are moments away from the start of trading. This is Bloomberg Open Interest, and it's Liberation Day. That's what Trump calls it, at least. He's going to tell us the tariffs he'll put on our major trading partners at 4 o'clock after the bell rings. Right now, we're seeing stocks, futures, I should say, at session lows. S&P 500 down 1.1%, NASDAQ down 1.4%, as is the Russell 2000. So the pain is spread across stocks. You see Smart Stop Self-Storage. They're not grumpy, right? They just raised over $800 million in an IPO. It's a REIT. Down on the NASDAQ market site, you have the Make-A-Wish Foundation, and I guess you can ask President Trump at 4 o'clock for what you want. In terms of the actual movement here, in terms of the stocks that are making moves, there are so many to choose from. Katie Greifeld, which ones have you chosen?
Well, I'm obviously looking at Tesla right now. We have that breaking news at the top of the 9 a.m. hour that global vehicle deliveries fell 13% in the first quarter, dragged down by the changeover of its most important model. We're talking about the Model Y there. Also, international backlash against Elon Musk. You can see that being expressed in shares right now, down another 6%. They were down 34% or so into yesterday's close for 2025, Sonali.
Katie, we're looking at dog days for the Magnificent Seven. If you look at the NVIDIA decline today, now another 2.6%. Shares are now down more than 20% on the year. All around uncertainty around the tariff impact on AI growth, worries about AI bubble-like behavior, a lot going on here, but we will digest the tariff impact more, Matt.
Yeah, that's a big heavy weight, so it's going to drag hard on the S&P 500 and the NASDAQ. In the health care sector, Hims is down sharply this morning. It plans to sell weight loss drugs like Zepbound from Eli Lilly on its new telehealth platform, but I guess this is not the day to make that kind of announcement, as we expect tariffs on pharma companies and pharmaceuticals as well. Joining us now to talk about all this is Northstar Chief Investment Officer Nimrit Kang. Nimrit, I guess President Trump is branding this Make America Wealthy Again, his tariff event. How do you expect it to affect the economy and the market?
We see it going two different ways later on today. You know, the first one is, of course, we see more of what we've seen before, just drip drab, big numbers, but really a lot of back and forth on implementation. That's one scenario that we expect. The other scenario, of course, Matt, is that it is a clearing event. We actually see a big bang number put out there. Maybe it's 20%. The market has a clearing event. Analysts can start pricing in what this mean for corporate earnings. We can start looking at, what that means for the portfolio positioning and so forth, and we can move on from there. We think it's going to be more of the former than the latter, and we're going to continue to see this drip drap of news continuing to paralyze corporate activity, continuing to weigh on the consumer sentiment, and we expect that to go on at least for the next several months here.
Well, Nimrod, it's interesting to hear that you expect 4 p.m. today to be a clearing event, because there's plenty of folks on the street who are taking the other side of that. And actually, you had Barclays, the global head of equities tactical strategies, saying that his main concern today is that Trump's announcement will leave room for interpretation. Trade policy will continue to be in flux. I know it's not your base case, but if that's the situation, that we end up with more questions than answers, what do you think that will do to sentiment?
Katie, we think that continues to weigh on the sentiment. What that means is a lot of choppiness for the equity markets, right? The equity markets, S&P is down about 8% before today, as of end of yesterday, right? And if you go back to the Trump 1.0, the equity market S&P 500 was actually down 20%, and it took over 3 months for that to happen. This time, it's a lot more broad-based, both in scope and magnitude. And this time, there's a lot more what we expect an aggressive retaliation response from our trading partners. So we would expect this to continue on for at least several months, and continue to weigh on sentiment, both the consumer and the corporate sentiment.
Speaking of sentiment, I just want to pull up how sectors are performing today, Nimrod, because you don't see investors just pressing the hold button. You see people selling. And almost every sector to start the morning is in the red on the day, minus consumer staples, which is barely in the green. Of course, that is quite a defensive trade. Why do you think all the sour sentiment is still out there when the news we have so far about the direction of tariffs is still so sparse?
Shonali, one of the big things is, the market moves well ahead of estimates. We started the year off with a S&P growth for about 13%. We're now at 9.5%. But basically, the broad-based nature of the tariffs that we're expecting, it's going to hit every sector, really, other than maybe some of the very domestically focused companies. So that's what's affecting the sentiment. That's what the market is trying to get ahead of here, because, with S&P 500, almost 40% of the revenues coming from international, and 40% of our cost of goods coming from outside of the U.S. It is a material exposure. And this time, to layer on just the tariff impact is the retaliation impact. I mean, you were covering Tesla just before that. You only have to look at Tesla and the year-to-date performance to know what happens when, the consumer sours on the brand. And so, do global consumers of U.S. Products sour on the U.S. brand? That's what's weighing on, and that's why we see this just, get me out of the market, get me out of all these stocks. And of course, investors are sitting on a lot of gains that we have realized over the last 2 years.
I just want to point out that New York Mayor Eric Adams has had his criminal case permanently dismissed. So it looks like his trip to Mar-a-Lago paid off. He got his wish from President Trump. Can you look at, the winners in this market, Nimrod, or can you narrow down a group of companies that won't be affected by big tariffs and, put your money on them? For example, U.S. steel makers seem to be quite happy about this whole situation.
You can definitely do that, but we think those are more trades, tactical trades, short-term trades. We would say that now might be the time to take that longer-term perspective. We're seeing a lot of dislocation in the equity markets. There are a lot of valuations are getting a reset. So this might be the opportunity to have some of that long-term thinking. If I take a step back and I say, over a 5-year viewpoint, where do we see actually underlying growth drivers? The U.S. Civil Engineers just put out a report, which they put out every 4 years, showing how first of all, they gave the U.S. infrastructure a C grade. Secondly, there's so much need for investment in our water and public infrastructure back here in the U.S. And if remanufacturing, getting the reshoring back here, manufacturing in the U.S. is a real thing, we're going to need to invest in our infrastructure. So with that viewpoint, why not take this time to do the work, look at some of the companies that are going to benefit longer term from that infrastructure spending back here in the U.S. and take some starting positions there.
Nimrit, great to have you this morning, of course, ahead of that tariff announcement, highly anticipated. That is Northstar Chief Investment Officer Nimrit Kang. Now let's get a look at some other stocks on the move with our own Bloomberg's Nora Melinda.
Shanali, I've got a few names here for you in the red this morning. I'm taking a look at telehealth company Hims & Hers. We're seeing shares lower after a 5% climb yesterday. And this is after the company announced that it'll actually be selling Zepbound, which is Eli Lilly's drug for weight loss. And this is really marking a departure from the company's focus on cheaper and compound drugs. But we are seeing shares lower as analysts and investors really digest the fact that Eli Lilly has reiterated the fact that they are not associated with Hims & Hers in this decision making. But much to keep an eye on here. Also keeping an eye in the banking space. Looking at shares of Truist, they're down just a touch this morning. And that's after Raymond James cut the stock to market perform from outperform. They're doing this ahead of earnings. We know bank earnings are on the way really swiftly. They're saying that they expect reduced financial guidance and EPS revisions from the company. But this is really just this idea that bank stock valuations are showing that investors are really leaning more toward the bear case for banks becoming a reality. And last but not least, let's take a look at Newsmax. This company has really been a high-flying stock for the past 2 days since it IPO'd on Monday. But we are seeing shares of the company that's owned by former New York Post journalist Chris Ruddy lower this morning, falling double digits after rallying more than 2,000% over the past 2 days. So we really are seeing this meme stock moment starting to wrap up a little bit. We'll see where it looks moving forward.
Yeah, I don't know who had Newsmax becoming a meme stock on their bingo card, but I certainly didn't. Bloomberg's Nora Melinda, great roundup as always. Now coming up, Bernstein analyst Daniel Rosca warns that tariffs on auto parts could, quote, break the system. He joins us next on Open Interest.
Let's cut right to it. This is Bloomberg's new show, Primer. Technology is $1 trillion game. Won, lost, won again, just by backing the right science at precisely the right moment.
My life has been focused on how can you elicit intelligence from brain cells in a dish.
This is the fundamental building block of our fusion technology.
We're doing things that have never been done by anybody, ever.
Everyone is selling the future. If you want to understand what's coming, you'll want to watch Primer, because details matter.
Lasers on.
So do lasers.
There we go.
Oh, and it's on all these lovely channels. Hope you're jotting this down.
Welcome to the world of decentralized finance.
Massive outperformance from Bitcoin.
Bloomberg is covering all things crypto, the people.
The tectonic shift emanating from Washington.
All we're looking for is clear rules and an ability to build in the United States.
Crypto shouldn't be partisan.
The transactions.
Really a record-breaking moment.
Crypto VC is back.
And the technology.
It's really the beginning of a global on-chain economy.
And if America doesn't embrace it, we're going to be left behind.
Bloomberg Crypto, only on Bloomberg. U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers Jobs Day like Bloomberg.
U.S. tech is influencing global markets.
Technology is driving business across Europe.
Companies in Asia are betting on tech.
It's the countdown to the market open as we bring you the first trades across Europe.
We'll debate the most important stories and what will drive the big investment decisions throughout the morning. I'm Guy Johnson.
I'm Kriti Gupta.
And I'm Anna Edwards. Join us every weekday morning for the opening trade, live at 7 a.m. here in London.
Only on Bloomberg. Context changes everything.
Welcome back to Open Interest. A quick check on stocks. You can see the S&P 500 pairing gains right now, down only 0.5%. We were down by more than 1% just a few minutes ago. Of course, volume is very low right now because all the action is at 4 p.m. We'll continue to beat that drum, but it's time now for our top calls. Some of the analyst action in focus this morning, and first up, United Air is getting downgraded over at Raymond James, with the analysts moving to the sidelines because of increasing macro uncertainty. Next up, Citigroup upgrading Charles Schwab to a buy. The firm is expecting shares to benefit from increasing market volatility. And finally, Deutsche Bank downgrading Paramount, saying that other competitors are better positioned to weather a cyclical downturn. Matt Miller.
Turning back to cars, Bernstein analyst Daniel Rosca says the auto industry is facing an existential threat as Trump's tariffs loom. Rosca writes, even if tariffs prove short-lived, the risk of long-lasting operational damage is real. Investors need to ask, is the system ready for this? Daniel Rosca joins us now at the desk, and it's a real pleasure to have you here. Thanks so much for your time.
Thanks, Matt.
Do you think that investors have priced in the full cost and chaos, to use Jim Farley's words, that these tariffs are going to cause?
No, they've not. What the market's priced in is a 6 to 9 week vehicle tariff, but definitely no parts tariffs, and definitely also not that these vehicle tariffs will last longer than a quarter.
I think another important part of this is, fine, you might have the auto tariffs up front, but there's another layer here where the parts could also face significant tariffs. How would that add to the calculus here?
Yeah. So the auto tariffs, 25% on all imported vehicles, is about $70 billion of cost headwind for the sector. If you add the parts, you add another 30 to 40 billion. But the bigger problem is actually that there are very small suppliers, and suppliers typically only get their money after 60 to 90 days from their customers, the bigger suppliers, but they have to pay the border control after 10 days. And so there's a real working capital headwind that will happen at the border if these parts tariffs go into effect.
So that would obviously be ugly for the auto companies. Let's talk a little bit about the impact on consumers, because it's interesting. We've had a lot of delivery numbers come out in the past 24 hours or so. You saw GM and Hyundai sales jump because consumers are trying to get ahead of these tariffs and basically buy their cars now. I mean, putting together what you're saying, it sounds like maybe that's the move here.
Absolutely. Look, consumers are pulling forward, but that also means even without tariffs, we're going to see lower sales for the rest of the year. That also has an impact on the stocks because investors won't care in this uncertainty that they've already sold the cars. They only think about what's going to happen tomorrow. And then if you add the tariffs on, you would need to raise prices by 12 to 15% to offset the entire impact. That is not going to happen. The consumer will not be able to sustain that.
I saw recently that subprime defaults, or at least delayed payments, have risen to now pre-COVID levels, or at least early 2020. What kind of price effect do you expect this to happen? Because people are already looking at like $600, $700 payments. I think 15% of payments are over $1,000 monthly payments.
Yeah. I mean, you are going. If they raise prices, you are going to see significant
is it an
declines.
if, Daniel? I mean, is some automakers, GM, going to say, "Oh, we'll just take this hit to our bottom line. We don't need to pass it on to consumers"? Yeah.
Well, he's been giving mixed messages on that, but I think the problem is that in each individual vehicle segment, there is somebody who sees quite a low tariff impact. So if you take large SUVs, GM is actually well positioned. While we think GM has a huge tariff bill on many cars, not in large SUVs, and that means they don't need to raise prices that much. Nissan will see a 20% impact of additional cost on their large SUVs. And so I think the price will be determined by the company that sees the lowest impact, and that's probably somewhere between 4 and 5% across the sector.
I'm going to test out a new Armada this week, actually, and I guess it's going to be too expensive for me.
Yeah, after Liberation Day, you're still going to be driving cars, but let's talk a little bit about who will be least impacted. I'd take a look at your coverage universe. You cover Ford, GM, Stellantis, Rivian, Polestar, the list goes on. I mean, who is best positioned in your wheelhouse?
So since we don't cover Tesla right now, but Tesla is the name, right? So Tesla is least impacted by this because they make all of the cars they sell in the U.S. domestically. And the U.S. content in those cars is very high. It's about 60% of the value in a Tesla originates in America. And so they're actually the least impacted company.
It's funny to hear you say that. You wouldn't know that by looking at the shares that Tesla is best positioned here.
Yeah, but how have they done that, Daniel? I mean, how do they get so much of their stuff from America, and why can't Ford and GM do that too?
Well, one, they've, of course, started with the factories here. They then built the battery plants to support those cars, and that's a big part of the supply chain. They still get wiring harnesses and seats from other places, but it's just that a lot of the high-value components are made in the U.S. And for Ford and GM, they've used labor arbitrage to move the very heavy, intensive labor components to Mexico, where you've got a labor cost of about $5 an hour compared to, well, the lowest in the U.S. is probably around 20, and a UAW wage starts you around 80.
Daniel, we got to leave it there. Of course, a lot to break down and a lot in flux still as we wait for that Rose Garden announcement and those thereafter. That is Bernstein's Daniel Roska. Now, coming up, we're talking about it, the Newsmax rally. It's hitting the skids after an incredible run, a more than 2,000% one that just yesterday brought it above the market value of Fox. We're going to take a look at the news outlet that has become the new favorite meme stock. Still hitting a little bit of a wall today. Next. This is Open Interest.
Bringing you up-to-the-minute financial news whenever and wherever it happens. I'm Michael McKee at the Federal Reserve, and this is Bloomberg.
Bloomberg has the Fed decision under surveillance with the fastest coverage and exclusive analysis, including Powell's press conference. Nobody covers the Fed like Bloomberg.
Jumpstart your trading day on Bloomberg Open Interest.
2 hours of single stock stories that are driving the opening bell action.
We'll take you to Wall Street, Main Street, the C-suite, and beyond.
These are companies that are growing their market.
The great companies in the U.S. are the companies hitting the cutting edge. That's a different story.
Get the inside track on what's buzzing in markets.
With the players who are shaping the narrative.
If you have bad earnings reports, you're going to get punished.
They're not buying what the industry is selling. Join us on Bloomberg Open Interest every trading day, only on Bloomberg.
Get your fixed income fix. Watch Bloomberg Real Yield around the world right here on Bloomberg. Context changes everything.
This is Bloomberg Open Interest. Let's get a check on stocks. On tariff day, we don't see the drops that we were seeing at the start of trading or in futures. Right now, only 1/3% off the S&P 500, 0.2% off the NASDAQ. So some volatility in this market, to say the least. In terms of the individual movers, NVIDIA right now down only 0.75%. It had been down more than 2%, and that's a huge relief. Apple only down 0.25%. Trump Media and Technology, we're going to talk about that with Bailey Lipschultz in just a moment, but off another 6% today. And Newsmax down 36%. Okay, it had been up more than 2,300, and it's still worth double-digit billions of dollars, but some huge volatility there. Katie?
Yeah, it has been a wild ride with this media outlet. At one point, it had a larger market cap than Fox Corp, which is, of course, the parent company of Fox News. And it's still up about 1,400% over the past 3 days. So I don't think too many people are crying in their beer yet. But let's bring in Bailey Lipschultz. Of course, he covers IPOs, everything else at Bloomberg News. And Bailey, we were talking about how there's speculation that there's retail behind this move. The speculation being, take a look at the share price. Can we say that with authority, though, that this is a retail name?
Yes and no. When we look at some of the chatter on things like StockTwits, it definitely was the #1 trending ticker yesterday and the day before. One thing that I keep a close eye on is buy orders on Fidelity's platform, which they do still publish. That was a top 5 name yesterday, with buying still outstripping those to sell. It's hard to kind of parse through the data like we did back with GameStop, where there was so much excitement on StockTwits, Wall Street Bets, and other forums to outright call them retail-driven meme stocks. But when you see a company up 2,000% and you see people calling it America's stock and the company talking about buying the IPO, there definitely is a flavor of retail there.
Right. The flavor is interesting because when we're normally talking about IPOs and environment, you're looking for profitability. This is not that, is it?
No, not at all. And I think that's been one of the interesting things when you look at this IPO backdrop. Obviously, we talked about CoreWeave pricing poorly on Friday. It's now up 44% from its IPO. We did see buying in a few other small, tiny IPOs the last few days with some of these big rallies. So the big question is, when you have an IPO, you only have a small amount of shares actually available for trading. So with a company like Newsmax, how much is actually being flipped over by either Wall Street or Main Street? And how can you make a sense of some of this volume when, again, you're seeing the float flipped over essentially every day right now?
It's so weird to see. I mean, why would DJT be down 6% on Liberation Day, on Make America Wealthy Again Day?
Well, they filed to open the door to sell more than 142 million shares total. So actually, as part of that filing is Donald Trump, who owns 114.75 million shares of the company, filing to start the process, if they so choose, to tap the $2.1 billion in value. So you're seeing selling pressure. You're seeing a lot of speculation over if Trump will end up selling. He did move his stake in the company to a trust overseen by Don Jr. at the end of last year. Again, starting the process, it does not imply that sales are taking place now or will take place in the immediate future. This filing does actually need to be declared effective by the SEC, and that can take a few days. But certainly when you see a company that has been so heavily tied to Donald Trump's wealth, paper and real, that's why it's under pressure.
Right, it leads to the question, and if everything the Trump family touches, is it gold or not gold? In this case, Donald Trump Jr. driving down the shares of DJT. We spoke to Eric Trump yesterday. Hut 8, American Mining, Bitcoin held a little bit of a bid. They lost some of that yesterday, Katie.
Yeah, we'll have to continue to watch that one. But at least for today, we know that DJT is down pretty mightily. Bailey Lipschultz, it's great to see you. Let's take a look at the traditional market right now. The S&P 500 down about 0.4%, pairing its losses, but again, I told you to watch volume, and this is why. Volume is 18, nearly 19% below its 20-day average. We do have some selling pressure right now, but we know that the big event is at 4 p.m. We're not quite sure what's going to be delivered. Our latest reporting suggests that the White House team doesn't know either, so it's hard to make a big bet in this market.
I mean, Donald Trump himself has said that he already knows what he's going to do.
I'm just going off of our Bloomberg News reporting.
I'm just telling you what the president said out of his mouth, right? Okay. So we'll see what actually happens. The silly thing is that some people expect stability after this. Coming up in the next hour, former Undersecretary of Commerce for International Trade, Stefan Zelig, joins us in the studio, plus a read on the supply chain with FreightWaves CEO Craig Fuller. This is Open Interest.
House, you were asking a question of President Trump, and he didn't quite answer the question, and he asked you a question. So the question he asked you was something like, why are you not banking certain groups? What is the answer? I don't think he gave you a chance to really answer that question, but what is the answer to that question?
Well, first off, the Bank of America has 70 million consumer customers and millions of small businesses all over the country, all over the world. And so we bank everybody. But the real question was about overregulation, frankly. And so as you look, what's happened is because the interpretations of AML, anti-money laundering, BSA, Bank Secrecy Act, KYC, know your customer's customer. You know, there's a lot of burden upon the banking system to both report suspicious activity reports and do a lot of analysis. And we have to close accounts, so we can't tell people why we did it. And often we're told by authorities to close accounts. That creates confusion. Another area comes up in this discussion is in the crypto area where the regulator said you can't bank crypto operating companies, employees of crypto companies, et cetera. We are allowed to do, we bank everybody, but the operating company, they said that's a high-risk activity. Ask us for authority, and guess what? You would have never gotten the authority. So that came up as an issue. So at the end of the day, it's about getting these regulations right.
Bloomberg Surveillance covers the latest in global markets and the political events that influence your world. Join Jonathan Farrell, Lisa Abramowitz, and Anne-Marie Hordern. Only on Bloomberg. Context changes everything. It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ. Only on Bloomberg.
News on the Hour, sponsored by Progressive Insurance.
I'm Deborah Rodriguez. Tesla shares down more than 2.5% after word this morning sales are sinking. Correspondent Michael Wallace has our top story.
Deliveries of Tesla's electric vehicles dropped 13%, more than analysts had expected, even though it offered big discounts and 0% financing. It was the company's worst quarter since 2022. Tesla has an aging lineup, it's facing tougher competition, and it's facing backlash from Elon Musk's foray into right-wing politics.
About those politics, the more than $20 million Musk spent on the conservative race for Wisconsin's Supreme Court didn't pay off. Brad Schimmel lost to Democrat-backed Susan Crawford. CBS's Ed O'Keefe.
Crawford made a point in the closing weeks of running against the Musk money. Her victory secures a liberal majority on the state's highest court. Although mega donors aren't new to politics, this became a rejection of the world's richest man and his attempts to sway an election in a key state.
CBS News has learned President Trump will be joined by auto and steel workers when he announces reciprocal tariffs in the Rose Garden this afternoon. CBS's Kelly O'Grady.
The concern is that if consumers are worried about tariffs and tariffs increase prices, increases inflation, consumers could pull back on spending.
The tariffs are set to go into effect immediately. Economists say it may take a while, though, before you see the impact. The Dow down 190 right now. Breaking news from New York, where a federal judge has dismissed a historic corruption case against Mayor Eric Adams. Judge Dale Hull acquiescing to an extraordinary request by the Justice Department so Adams could help with President Trump's crackdown on immigration. The judge has also denied prosecutors the ability to potentially bring back the criminal case after the city's mayoral election in November. The Supreme Court hears arguments today in a years-long dispute over Planned Parenthood and Medicaid. Legal contributor Jessica Levinson.
So South Carolina has tried to stop reimbursements for healthcare providers that provide abortions. And the question is whether or not that violates a federal statute that provides patients with a right to choose their provider under Medicaid as long as that provider is qualified.
Gamers on your marks.
Let's go!
Nintendo says the new version of its Switch console will launch June 5th. The Switch 2 will include a new chat button that allows players to talk to each other while they're at the controls and share game screens. A new Mario Kart game for the console will be called Mario Kart World. S&P's down 22 right now, NASDAQ 58. This is CBS News. Britain's secret intelligence agency, MI5, has opened its archives for a new exhibit chronicling more than a century of spycraft.
Among the items on display, a 110-year-old shriveled lemon.
This lemon was fatal for a German spy.
Curator Mark Dunton says the spy used it to write letters in invisible ink to his spy masters in Germany ahead of World War I. He was tried,
found guilty, and executed by firing squad at the Tower of London.
The exhibition covers MI5 from its founding in 1909 to the present day. Vicky Barker, CBS.
Family member on his New Heights podcast with brother Jason.
You want to see your new niece? Yes, I want to see my new niece. Jason, you only sent one picture.
Virtual introduction included newly minted mom of four, Kylie Kelsey.
Hey, little muffin. Look at you. Is hanging out with mom? Hey, Kai. Jason hasn't told me if you guys picked a name yet.
Finley and Kelsey joined the team Sunday. Deborah Rodriguez, CBS News.
This is Bloomberg Intelligence with Alex Steele and Paul Sweeney.
The real outperformance has been in U.S. corporate high yield.
Are the companies lean enough? Have they trimmed all the fat?
The semiconductor business is a really cyclical business.
Breaking market headlines and corporate news from across the globe.
Do investors like the M&A that we've seen?
These are two big-time blue-chip companies.
The window between the peak and cut changing super fast.
Bloomberg Intelligence with Alex Steele and Paul Sweeney on Bloomberg Radio.
Good Wednesday morning from the Bloomberg Interactive Broker Studio in New York City to our worldwide audience. We are streaming live on YouTube as well, so head over there and search Bloomberg Podcast Live. Alex Steele, Paul Sweeney, looking at a down day in the markets. It is tariff day, 4 p.m. Wall Street time. Supposedly is when President Trump will begin to announce his tariffs, and that is what the market has been focusing on. Coming up, we're going to check in with Miles Miller, Bloomberg Television managing editor, on this Mayor Adams case here in New York City. Cases, the charges have been dismissed. We'll get the latest reporting there. Jordan Fabian, Bloomberg White House editor, he'll give us the lowdown on some of the top political stories coming out of Washington, D.C. Jay Plofsky, Chief Investment Officer, co-founder, TPW Advisory, give his thoughts on the markets. Then we'll check in with Michael McKee and get his thoughts on some of this economic data coming out today and the remainder of the week. So we got a busy couple hours coming up. Let's kick it all off. John Tucker and get a Bloomberg Business Flash.
All right, this Bloomberg Business Flash brought to you by IBKR. Will the U.S. Consumer Sentiment Index exceed 70 in April 2025? At IBKR Forecast Trader, the yes was recently at 29%. Start predicting today at ibkr.com/forecast. Last trading day for this contract, May 13th. Trade war fears again in the driver's seat for investors. Tesla, worst performing stock in the S&P 500. Vehicle sales there falling 13% last quarter. Tesla shares right now, they are down 1%. It's the 9th biggest weighting in the S&P 500. Meantime, Amanda Gotti at PNC Bank says uncertainty still rules the day.
It is really hard to do a crystal ball forecast and make some accurate predictions about what might happen in May when we can't accurately predict what's going to happen at 4 p.m. today. There's such a wide range of potential outcomes.
Well, the S&P 500 right now, 10 points lower, down 0.2%, 56.21 in the index. The Dow 91 points lower. And the NASDAQ 100 right now, 23 points lower. That is down 0.1%. And we check the markets for you all day long right here on Bloomberg Radio. I'm John Tucker. That's your Bloomberg Business Flash. Paul and Alex.
All right. Thank you so much, John Tucker. Alex Steele here alongside Paul Sweeney and John Tucker. This is Bloomberg Intelligence Radio. Happy Wednesday, everybody. Happy Hump Day. Happy Tariff Day. All right, let's get to some of the news of the morning that just broke that a federal judge has now dismissed corruption charges against Eric Adams, the first sitting New York City mayor in modern history to be accused of federal crimes. Miles Miller is Bloomberg TV managing editor, also a long history of covering politics within the New York City region. Miles, walk me through how we got here.
Well, it's Liberation Day for Eric Adams. This is a case that now goes away. So how did it get here? The U.S. Attorney's Office in the Southern District, Damian Williams, who was the U.S. Attorney at the time, brought a case against Eric Adams alleging corruption, alleging that he, was getting basically upgrades on flights and free hotel stays in Turkey. And then they also allege that he accepted illegal campaign donations from those same Turkish officials. All of this, they said, was in an effort to push forward a permit for a Turkish consulate office tower right across from the United Nations. It was a tower that was rife with issues. It currently does not have a permanent occupancy license to operate in the city. And so they believe that this is the reason why they said that Eric Adams had sold out his position as Brooklyn Borough President and that it extended into his mayoral race. Fast forward to him getting brought into court, and then the issue that happened with the Trump administration. The Trump administration wanted Eric Adams to do much more when it came to immigration policy and in terms of helping ICE get rid of people who were in the country illegally. Eric Adams argued that he couldn't work with ICE himself because he doesn't have a security clearance. Because of this case, his security clearance was taken away, and so he said his hands were tied. Working with the Trump administration, his lawyer, Alex Spiro, who was Elon Musk's lawyer, went to the Justice Department just a few months ago and said, his hands are tied, can we make this case go away? They've said from the beginning that he did nothing wrong. And so in this case, Trump's former attorney, Emil Beauvais, who is a top official at the Justice Department, went to a federal judge, Dale Hull, in district court here in Manhattan, and said, we plan to get rid of this case. He had alleged that some of these prosecutors brought this case because it was politically motivated. He pointed to certain text messages that showed that Damian Williams, the former U.S. attorney, had some political motivations. But the judge said today there is no evidence, zero, that any of those prosecutors had any improper motives. But he said the reason he was getting rid of this case with prejudice is that the Justice Department, if they were to revive it later, they would do so just because they could, number one. And number two, it would remove the specter that Eric Adams is working with the Trump administration on ICE policy just because he was let free of this case, and he would have that case hanging over him. The judge in this case said he wanted to get rid of that completely.
Okay, real quickly, the Southern District of New York, right? Are they going to take this? I guess there's no next step.
That's it. Okay. So this case is gone. Eric Adams is free to run for mayor without the case against him. Yep. But all the people who run against him, from Andrew Cuomo on, will be mentioning this.
Miles, thank you so much for joining us. Appreciate it on short notice. Miles Miller, Bloomberg Television managing editor, giving him the latest reporting on Mayor Adams. Good day for Mayor Adams. All right, right now let's get back to these markets here. We've got some sell-off here. S&P 500's off 25 points. That's almost 0.5%. The Nasdaq's off 92 points. That is 0.5%. Stocks on the move today and companies to watch with Bloomberg's Isabel Lee. Isabel, what are you looking at?
Tesla, we're seeing the shares edge lower by 3%, so sales slumped to the lowest since 2022. Vehicle sales fell 13%, and it's dragged down by multiple reasons. So Tesla delivered 336,681 vehicles in the first 3 months. That's compared to the 390,000. So the figures speak to the extent of the disruptions that Tesla's business earlier saw. And the company also retooled factories around the globe to make the redesigned Model Y, leading to lost output. So that's common when car makers transition from one vehicle generation to the next. The uncommon factor was Elon Musk's involvement in geopolitical global politics that sparked protests across the US and Europe. I've seen memes on Twitter with people sticking stickers in their Tesla saying, I bought this car before someone
went crazy. I saw that too. It was like, I bought this car before Musk went crazy. However, this is just the first quarter, so I'm really wondering how much of it is impacted by Elon Musk's involvement in the government, and then how the tariffs kind of wrap into it. It feels like the second quarter is when we're going to get a cleaner read of that point.
That's a good point. I mean, you see it already in Germany and in other countries like Europe. People are outrightly saying that they're pulling back their support, whether not using their Teslas or not buying anymore because of this. But you're right. What will the second quarter bring?
Encino? Am I pronouncing that right?
That's
This
how
is
I
another
would say
stock.
it.
What is this?
Encino.
Are you making up words now?
I'm just looking at it.
A stock we're watching is called Encino.
It's
Tell us
down
about it.
25%.
Okay.
They provide cloud banking solutions.
Yes.
Okay.
That clears it up.
NCNO is the ticker.
With
Okay,
a
go ahead.
capital C, actually. So that's why it's
very good.
Encino. So it was down as much as 35% in pre-market trading. Now it pared back some of those losses, but still 20%. So they gave a weaker than expected outlook. So they prompted multiple downgrades, almost more than half a dozen. We have William Blair saying that the outlook was well below street expectations, and they called the guidance disappointing. We have Morgan Stanley saying that the company was weighed down by challenges from international sales execution and the onboarding of what they call DocFox. So I had to look it up, and it automates onboarding experiences. So that also was a disappointment. And across the board, from revenue to adjusted EPS, it was below analyst expectations.
And wrapping it up here with Newsmax.
So this is interesting because the past days, we've seen a pop, but now shares are edging down by 35%. But still, we've seen a 2,230% rally since its debut on Monday, and it officially cemented itself as a meme stock. And because of that rally, it has now a greater market value, more than Fox, more than Warner Brothers, more than News Corp.
Yep.
It's actually really wild to see.
All right, Isabel, thank you very much. We'll leave it there. For more conversations like this, listen to our new Stock Movers podcast. Subscribe for 5-minute episodes on the biggest winners and losers in the stock market. Listen to Stock Movers on Apple, Spotify, or anywhere else you get your podcast. I want to get back to Washington, D.C. Jordan Fabian joins us, Bloomberg's White House editor. Jordan, on the tariffs today at roughly 4 p.m. Wall Street time, is there any reporting at all about where he may go with some of these? I'm shocked there hasn't been any leaking.
Well, we know a lot of options are still under discussion as of this morning. So far, no final decision that we've heard of have been made. He's still going back and forth between this idea of universal tariffs, so a flat rate on all U.S. trading partners, and this reciprocal idea where he customizes the rate for each country. That's, of course, a very hard endeavor, a little more complicated to implement quickly, which seems to be his imperative here. So we'll see what happens. We're not sure we're going to get any kind of readout before the 4 o'clock announcement, so we're all waiting to see what the president decides.
Who's in the room?
Well, the president himself, obviously, Peter Navarro, his trade counselor, Commerce Secretary Howard Lutnick, Treasury Secretary Scott Bessent, the U.S. Trade Representative Jameson Greer are among those, including Stephen Miller, the chief White House policy advisor, are crafting these proposals. And there are some ideological splits there. I should mention Kevin Hassett, too, the president's top economic advisor. And so there are splits there between the universal camp and the reciprocal camp, and I think it seems like they're all trying to guess, where the president himself is going to come down on this ultimately.
Any pushback on this tariff narrative? We haven't heard much of that from either party.
There is some rumbling in Congress. Senator Tim Kaine, a Democrat of Virginia, is introducing a resolution to try and curb some of the president's emergency powers to enact these tariffs on their own. That would, of course, though, require Republican support, given they control the chamber. Not clear they're going to get that. Pretty unlikely that passes. But this is awakened some members of Congress, at least, the idea that the president does perhaps have broad powers to do these tariffs on their own, although I should note that groups like the U.S. Chamber of Commerce and others could file lawsuits challenging Trump's ability to do this unilaterally, depending on how he chooses to implement these tariffs coming up at 4 o'clock.
All right, Jordan Fabian, a Bloomberg White House reporter, very busy today. Thank you very much for joining. And to that point, how President Trump uses what instrument to put the tariffs on will also dictate how long it will be until it goes on, how quickly it can come into effect,
right,
and then how it can be managed. So that actually is quite significant into how that winds up coming out.
Yeah, absolutely. So we'll see that 4 o'clock today, and I suspect they're to some extent maybe still crafting some of these policies.
I know, as you said, no leaks. Very strange. All right, coming up, Jay Pulaski is Chief Investment Officer and co-founder at TPW Advisory. His outlook on the markets going into tariffs, and Michael McKee of Bloomberg to break down today's economic data. This is Bloomberg. Happy Wednesday.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker, the Bloomberg Newsroom with this Bloomberg Business Flash. Well, if you were looking for clarity, the tariff plan still isn't finalized. President Trump's team is said to be still finalizing the level and the scope of the new import taxes. And a measure of global trade tensions, you can see that in treasuries. The 5-year note yield, right now, the lowest level since October as we get a bid to treasuries. Macy's clawing back more than $600,000 in cash bonuses from its executives. This comes after that accounting scandal led to inflated pay. Tesla, second most actively traded stock right now in the S&P 500. Again, it has the ninth biggest weighting in the index. Those shares down 1.7%. They reported first quarter deliveries below analyst estimates, touching the lowest level since the second quarter of 2022. And we check the markets for you all day long. Well, let me give you the averages right now. The S&P 500 down 13 points. That's down 0.25%, 56.19 on the S&P 500. The Dow Jones Industrial Average 77 points lower. The Nasdaq 100 right now down 45 points. That is a decline of 0.2%. And we check the markets for you all day long right here on Bloomberg Radio. I'm John Tucker. That's your Bloomberg Business Flash. Alex and Paul.
All right. Thanks so much, JT. Alex Steele here alongside Paul Sweeney. This is Bloomberg Intelligence Radio. We are broadcasting to you live from our interactive broker studio right here in Midtown Manhattan. You can also check us out on YouTube. So here was a really fun piece out that JP Morgan's, their trading desk, they gamed it out. They said, look, you get a low 10% or less blanket tariff, and you're going to get a little bit of a relief rally. 25% tariff, and you see stocks fall between 1% and 2%. 35% tariffs, and the S&P is going to fall 2 to 3%. I don't even know how you game this stuff out, to be perfectly honest. But Jay Pulaski is Chief Investment Officer and co-founder of TPW Advisory. Hey, Jay, is that like on your list? Or are you like, all right, 10% I do this, 25 I do this? How are you thinking about it?
Yeah, Alex, great to be with you and Paul. And, it's a great amount of uncertainty, right? Markets hate uncertainty. So hopefully we're going to get some clarity. And I think with clarity, we probably get a bounce. I think it's a situation where sell the rumor, buy the news could be quite prevalent, given that there's been such a buildup and people are so worried and so nervous. And the selling's been pretty aggressive. The positioning has been pretty aggressive. And one tell might be that the volatility indices, the VIX for stocks and MOVE for U.S. Treasuries, peaked about 3 or 4 weeks ago and are below where they were in early to mid-March. And that may suggest that, for all the headlines in the press, the market has digested a pretty good amount of this.
So are there some sectors here that in this environment with all this uncertainty that maybe screen a little better for you than others?
Well, not so much sectors, Paul. I mean, we're a global macro house, thematic long-term investors. And so for us, we've had a big call going back a year or so that we want to be overweight non-U.S. equities. We want to be overweight commodities. And those things are working out well. It was the worst quarter, Q1, the worst quarter for the S&P on a relative basis to acquiesce to U.S. since the great financial crisis. And the other point is that commodities were the best performing asset class out of stocks, bonds, and commodities in Q1. And I think those things are really telling us that we're early in a secular leadership change away from U.S. equities to the rest of the world.
How you said early. We've also run, though, really hard, really fast for Europe, for example, and it feels like we priced in very quickly that stimulus from Germany that has yet to actually be put in the ground. Do we need to take a break here?
Yeah, that's a great point, Alex. And we talked and have written over the last couple of weeks about how we want to sell U.S. RIPs. So let's say we get some clarity. I think the market just wants some clarity from Trump today, and the markets will respond. Let's say there's a rip because stocks have been pretty depressed, selling sentiment, all those things suggest a bounce. We would sell that because we think the upside for the U.S. is capped. Trump is an uncertainty agent. We're going to have confusion and poor policy making, for the next several years. We want to buy non-U.S. dips because we've had that rip. That was the end of the beginning, as we titled it in a piece a couple weeks ago, right? But going forward, we expect continued good news, good policy making out of Europe, out of Asia, and money flows, and importantly, capital repatriation out of the United States, back into Europe, back into Asia. The U.S. has been the place to be for 15 years. Everyone's massively overweighted. We expect to see continued dollar weakness as people recognize that the policy mix in the U.S. is not particularly constructive for risk assets, and the policy mix outside the U.S. is improving and getting better in terms of its impact on risk assets.
So developed markets or developing markets? How do you make that allocation, Jay?
Yeah, we're overweight. You start with stocks versus bonds versus commodities. We're overweight stocks, overweight commodities, underweight bonds. We think, in essence, that the playbook that the U.S. used, the fiscal spending playbook post-COVID, is over in the U.S. Budget deficit at 7%. That's why we're having all this tariff stuff. Trump wants tax cuts. He needs money to pay for it because the budget deficit's at 7%. That playbook is now migrating to Europe and Germany, as Alex said, and to China, where both countries have significant fiscal space. And so we expect the U.S. bull equity market to go global and the bond bear market to go global. And so we're overweight non-U.S., so developed, okay, Europe and Japan. We're overweight EM as well, with a focus in particular on China. We're very bullish China tech. We're bullish China large caps. And we think while they've had to move, there is significant room to go in China.
And before we let you go, gold, you mentioned commodities, gold. I cannot believe this run that we see. That chart looks crazy. You buying gold?
We're buying the miners, GDX. We've had a position there for quite some time. We believe the commodity cycle is for real because global growth is for real. We're talking about the U.S. and everyone's talking about recession. The point is that the U.S. is part of the world. It's not the entire world. You know, Europe is going to grow. Asia is going to grow. Commodities are telling us that. Commodities breaking out tell us global growth is fine. So precious metals, industrial metals, ag, energy. XLE, the energy sector, was the best performing sector year to date. Everybody hated it at the beginning of the year. That's telling us something. So we're long across the commodity complex.
And of course, the most important question of the day, Jay, how bullish are you on your Duke Blue Devils this weekend?
There you go. Well, I'm more of a football guy, but, you know, we're proud of our hoops brethren. And, you know, it's an impressive team. Love to watch them. Very smart, talented, deep, tough. I think we got a shot to go all the way.
All right, Jay, thanks so much. We appreciate that. Jay Pulaski, Chief Investment Officer, co-founder of TPW Advisory, joining us on Zoom from New York. Michael McKee darkens the door here, Bloomberg International Economics and Policy correspondent here today. I don't know, we'll get to the tariffs in a second, Mike, but just employment in general here. We had the ADP data came in, you know, stronger than people were looking for, but of course, we're going to get some more jobs data later this week. What's your feel of the labor market right here?
I think Duke has to be favored.
Yes, they do. Thank you. Thank you.
I know that's what's on your mind.
Yes, it is.
Nicely done, Mike. Nicely done.
The ADP number came in as sort of a nothing burger in the sense that it's a little bit higher than what analysts are expecting for private sector job creation, but it falls in the range of roughly where we have been. Does it tell us much about what we're going to see on Friday? Not necessarily. And I think what a lot of people are going to be looking for is weakness in government hiring, and that's not measured by ADP. So I don't know if there's a lot of value to it. They found 21,000 manufacturing jobs during the month, but then you saw that yesterday, you saw the ISM Manufacturing Employment Index take a dive. So who knows?
What do you think we're going to get then for Friday? Like, how big of a mover is that going to be versus, say, the tariff announcement?
Oh, well, if it weren't for the tariff announcement, it would matter because the Fed would be looking at it as either a sign they need to cut rates because the economy is falling over, or they can just sit where they are and keep the pressure on inflation. Now it's all going to be about tariffs, and it's going to be about tariffs for a while until there's a good idea of what's happening to the economy from tariffs. There'll be a lot of modeling. All the analysts are firing up their models and calling in their quants, and they'll be sitting there and saying, "Tell us what this means." But nobody really knows because the economy is so complex what the entire impact is going to be. So we're going to probably be a quarter or two before you can have some confidence in which way we're going.
Yeah, it's interesting. We spoke with Jason Furman this morning, economics professor at Harvard. He had a New York Times essay out a day or two ago. Trump is about to bet the economy on a theory that makes no sense. And it's pretty interesting economic analysis there. But there are a lot of people that believe in tariffs here. Where do you think the support's really coming from? Just from an economic perspective?
Well, basically at this point, the support, the call is coming from inside the house, as the horror movies say. Donald Trump brought into the administration people who are true believers, who were true believers in his last administration, and he's basically got an echo chamber in there on that. Almost all mainstream economists think, like Jason Furman does, that it makes no sense, except in limited targeted usage. I mean, it can be valuable if there's an unfair trade situation going on. Over
like somebody's dumping steel is what I remember from my economics class.
Or if you don't want the Chinese to get your technology or something like that. But as a broad-based tool to try to remake the trading system and change behaviors, I don't know anybody who thinks that will work who is not on the on the payroll of the White House.
Well, what headline are you going to be most interested then in seeing come 4 o'clock when all the headlines scroll? What's going to catch your eye the most when it comes then to economic policy?
Well, the first thing is going to be what kind of tariffs. Are they broad-based, just one number fits all? Are they targeted at countries? Because then you can look at what those countries export and what we import from them. And
meaning that one would be better than the other, or just different?
Well, if you have a country like Vietnam, which exports a lot to us, and maybe a country like Cambodia, which doesn't, which are sort of neighboring countries, one is going to have a major impact and one is not. So you can see what the tariff rates are there and see if Cambodia would matter. And then you want to know what they're tariffing. Is it everything, or is it targeted specific items that they are tariffing?
Yes, I've been seeing reporting about just in the autos, people, cars are flying off the lots because people don't know, so they're buying their cars. I guess if they thought they were going to buy a car in the next 2, 3, 4 months, they're going to do it now.
Yeah, we were talking to a dealer yesterday who was saying the same thing.
Yeah, we were talking earlier in the newsroom that if there's a possibility that he's going to tariff alcohol, we should get on that. Get ahead of it. Yeah,
exactly.
Cars.
All right, Mike, thanks a lot. Really appreciate it. Bloomberg's Michael McKee, economic and international economic and policy correspondent, joining us there. All right, coming up, Steve Mann, Bloomberg Intelligence Global Audios and Research Analyst, will be joining us on Tesla's car numbers. Wasn't great, wasn't good. Yes, they are changing some of the production to the Model Y, so that could account for it, but also European sales were down. China sales didn't look very great. We will get the breakdown on that. This is Bloomberg.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker in the Bloomberg Newsroom with this Bloomberg Business Flash. Just want to bring you this breaking headline across the Bloomberg. The European Union is planning emergency measures to guard their economy from the Trump tariffs. And as soon as we get details on that, we'll bring it to you. Meantime, the Trump administration is still said to be putting the final touches on the tariff plan to be announced after the close of regular trading. Right now, you have 8 of the 11 major industry groups in the S&P 500. They are lower. Among the most actively traded shares of NVIDIA, down 1.2%. And then you have Tesla after those more than tepid sales figures. Steve's going to talk about that in a moment. Those shares right now down to 2.6%. Earlier today, Paul, you and Tom talked to Peter Scheer at Economy Securities. He says the Trump administration has badly miscalculated.
I think we've overstated, quote unquote, our hands or what our cards we hold. And I think no matter what happens today, 2-3 weeks later, our stock markets are going to be lower as we realize that we are kind of destroying the American brand.
The S&P 500 right now, pairing some of the other earlier losses down 1 point right now. The S&P 500 up 24 points. That's turned around. The NASDAQ 100 is down 11 points. Safe to say, volatile trading day. Nintendo is going to release its new Switch 2 console on June 5th. I'll change the tone here. Okay. Starting at $450 in the U.S., it has the potential to lift sales for the game makers and retailers after a pretty lackluster 3 years for the industry. I know there's one in my house somewhere.
Full disclosure, I have played on a Nintendo Switch Animal Crossing because my daughter made me. Nice. She made her my own little character and stuff like that. It's pretty cool. I don't know what the buttons do. She has to tell me if I press A or B or X or Y or L, but I do it and it's kind of fun.
She's a gamer.
Well, no. I'm a board gamer. I'm a whole different level of nerd. But for video gamer, never was that.
No, and I was never a board game person.
Board games are awesome. No?
I'll sit there and play solitaire for 4 hours.
No, board game. Let's do it. Catan. You know what I'm talking about. All right, thanks so much, JT. Alex Steele here alongside Paul Sweeney. This is Bloomberg Intelligence Radio. We bring you all the top news in business, economics, and finance through our lens of our Bloomberg Intelligence folks. They cover 2,000 companies in 130 industries all around the world. All right, let's get to one stock in the move. That's Tesla. Shares down by about 2%. They're off the lows of the session. It reported first quarter deliveries that went below analyst estimates, touching the lowest level since the second quarter of 2022. I want to talk to Steve Mann, Bloomberg Intelligence Global Autos and Research Analyst, joining us. Hey, Steve. What was behind the drop in sales? That may seem like an obvious question, but it feels like there are lots of layers here to this.
Yeah, admittedly, the 13% decline was a little bit more than what we were expecting. We were expecting around 350,000, came in at around 336. But, if you look below the headline, it's actually operating as we expected. It's unfolding as we expected. China sales, retail sales is actually up, despite production down year on year. U.S. is kind of flattish. Really, the dent to the quarterly sales was in Europe. Seems like March is a little bit worse than February and January. But our thesis has not changed. We still think the inflection point is in second quarter. We believe China's sales improvement will extend into the second quarter. And then, the Model Y has already launched in the U.S., and we expect, some improvement in sales in the U.S. as well in the second quarter.
Talk to us about the Model Y. I know Matt Miller has yet to take me in a Model Y, so I don't know anything about it. Tell me about the Model Y. Is it a game changer? Is it just a slight move? Talk to us about this new model and what it might mean.
Yeah, there's some cosmetic changes in the front end and the rear end. The lighting in the rear end is pretty cool if you haven't seen it yet. But I think some of the biggest changes are inside the user experience. There's a monitor at the back. There's a nice little cooler up in the front end. So there's people who have held off buying the Model Y in anticipation of the new one.
But how much of this is reputational damage? It might be too early to say, right, because it's still through March. But I hear you that on principle, you're bullish on the car and sales in essence. But, we can't ignore the reputational damage. I mean, I know that I'm in Brooklyn, but I see like get rid of your Tesla signs everywhere at this point.
That's right. I don't think we can ignore that. What we're seeing in the media and what's happening to Tesla cars and showrooms, it is having an impact. It definitely is having some impact in Europe. But at the end of the day, we feel that a lot of it is being priced in. The stock has come off from its highs since the election. The PE, forward PE ratio is around 85 times 2025 earnings. That's just about 10% above where it traded before the presidential election. So I think the stock has pretty much factored that in, and we're looking ahead, and we think business fundamental should improve in the second quarter. Delivery should improve in the second quarter.
Does the stock need Elon Musk to come back to the company?
Personally, I think so, because he's an industrialist. He's an avid cost cutter, and that's really what you really need in the auto industry, given the price competition that we're seeing around the world. And hopefully later in the year, when he gets Doge up and running and in a steady pace, and he can maybe step off and refocus on his businesses.
What does Tesla need to refocus on? Like, what company does Tesla now need to be?
Well, they need to continue to be an innovator. I think there's a lot of debate out there why Tesla deserves a higher valuation than like GM and Ford. Look, they're doing something that I couldn't imagine anyone can do in the auto industry, which is to start a new automaker. In this day and age, it's high barriers of entry, and they're doing it in a way that it's profitable, right? And there's a lot of debate, but they are booking profits on EV sales, and it's hard to find an automaker that can still do this and do it in a consistent manner.
Steve, I just bought a vehicle, and I'll have you know it is a hybrid. So I'm getting there slowly.
Okay, he's not actually driving it, but
I'm not actually
that's
driving it.
a fair point.
So, Steve, is BYD and the Chinese automakers, are they going to take over the EV world?
It looks like it. Time will tell. They're very aggressive. They've cornered the market in China, right? They've basically, through price, they have pushed out a lot of the foreign automakers out of China. And then, they're actually branching out into the rest of the world. Not in the U.S. They're making headways in Europe despite the tariffs there. But they're really aggressive in emerging markets, which is competing a lot with the likes of Toyota and the South Korean Hyundai. So, if you can think of, they're kind of encircling the U.S. at the moment, North America at the moment. So they don't have to be in the U.S., but if if they're strong in China and they're strong in other emerging markets, they will eventually dominate.
We have about 30 seconds or so left, Steve. But speaking of, when Paul bought the car, it was a Honda, and it was made in the U.S. So, like, why have foreign automakers been able to move manufacturing here in a way that U.S. automakers haven't?
Yeah, I think a lot of the automakers over time has been very focused on driving profitability, and there's nothing wrong with that, right? There's nothing wrong with that, and that's the only reason why people go into business is to make money. But I think there has to be a balance, I think, and driving costs is great, but can we drive costs with innovation? And I think that's what Trump is trying to do, based on his rhetoric, is to bring back manufacturing. So, like, the question is, how can automakers actually build a low-cost car in the U.S. through innovation?
It's Steve Mann, Bloomberg Intelligence, Global Autos and Industries Analyst. Thank you very much for joining us. All right, coming up on the program, we are going to be speaking with Anurag Rana, Bloomberg Intelligence Technology Analyst. There's an AI Gen event I'm going to be doing that. I'm learning things.
Oh,
We're going to break it
nice.
down. This is Bloomberg.
listening to Bloomberg Intelligence with Paul Sweeney and Alex Steele on Bloomberg Radio.
All right, Alex Steele, Paul Sweeney, live here in our Bloomberg Interactive Broker Studio, streaming live on YouTube as well. Well, certainly one of the key themes driving these financial markets really over the last 2.5 years has been AI and the excitement around all things AI. It's not just in the tech stack. It seems like every company out there is trying to figure out how artificial intelligence can impact their business. And the folks at Bloomberg Intelligence, the tech team there, which is a global team of technology analysts at Bloomberg Intelligence, they've been on top of this and out front of this new technology. And they have a big conference today, their fourth generative AI conference. That's how quickly things are moving here, and they are staying on top of it. Anurag Rana, technology analyst for Bloomberg Intelligence, joins us here. Anurag, you and your tech team globally, you write a lot of research about AI, the impact, how it works. What's this conference here in New York City today? What are you guys focusing on?
I think the biggest thing we are going to try to figure out today is have things changed because of DeepSeek and the whole concept that AI infrastructure may not be needed as such a big amount as people expected, 6 to 9 months ago.
And what do you think the answer to that's going to be? Like, what are you seeing reflected?
I think it's a little bit of skepticism on that. What we have heard, again, OpenAI talked about it 3-4 days ago, that because of their new filter, they can't find GPUs right now. So the NVIDIA bulls will tell you that, we still have a long way to go before we reach saturation. On the other side, the bears will basically say, well, we don't really need that much infrastructure if things can be done in a cheaper and a much easier way. So I think that's the limbo we're in. I think companies will talk about that if the cost of computing reduces, then the adoption rate goes up, and that's actually good for software firms and all the banks and all the companies that are implementing AI.
Well, as you mentioned, the bulls and bears, they seem to be kind of split here. Maybe the bears winning out a little bit in the short term, because I just look at NVIDIA, and I'm probably like a lot of people don't have a really deep grasp of AI and how it really plays out throughout the economy. But I just kind of look at NVIDIA as my proxy. It's up 20% over the trailing 12 months, but just year to date, down 18 or 19%.
And that's really, I mean, I talked to Kunchan quite a bit about it just to understand the layout of NVIDIA. But, the NVIDIA CEO is saying that, listen, even we go to a world of inferencing heavy, let's say everybody is going to create applications but they still need GPUs for that inferencing work. You're coming up with new models that can behave like a research scientist or a PhD person or a lawyer. All of that requires a lot of compute power. And that's, I think, where the dilemma is at this point.
So when you were putting together this conference, like, how do you guys think about it? Like, who are the players involved? Who's going to be speaking? And what's the takeaway from that lineup?
Yeah, so we are lucky to have a few of the very big companies. We have AWS, we have Anthropic, Google is there, Microsoft is there, Adobe, and Workday. One of the bigger things that we want to ask them is, have their philosophy about computing changed because of what they've heard on DeepSeek? How are they approaching that thing? Are they only using GPUs for training, or are they using their own chips as well? Then on the software side, we're going to be talking to Workday, Adobe, and Microsoft about the co-pilots and the products that they have launched and what kind of benefits they are seeing in their enterprise clients and how they are using some of that software.
So you've seen technology cycles come and go, Anurag, including, definitive ones, transformative ones like the internet. Where are we now in this AI journey here?
We're still in the build-up phase, and I think that's where a lot of the skepticism come in, because everybody takes you back and say, well, look at Cisco back in like 2000, 2001. They ran up so much, and then there was, we haven't even seen that stock price since then. And I think that's the parallel a lot of people are drawing. On our side, we are saying is, it's going to take several years to build the software products. I think people are getting impatient to see revenue on the software side. I think it's going to take some time. Microsoft is the only one that has some credible revenue that they are showcasing. All the other companies just have some that they are showing on the margin.
What is your most burning question right now? I know you mentioned sort of how did DeepSeek change the game, but we saw CoreWeave, kind of that IPO was not great. I appreciate it's up today, but still, what's like your burning question from there? I should point out, guys, that I've had 2 tutorials as of now with Anurag Rana.
Have you?
Yes, I call him up and I say, explain this to me, and I take notes, and then I go on set, and then people look at me like surprised that things came out of my mouth. So just he's the guy I go to.
No, thank you. The biggest thing I really want to know is, do the end users, are they seeing real productivity benefits, or are they just coming up with filters and pictures and stuff? Because at the end of the day, the real market is the enterprise market. And if companies are not going to see big benefits in productivity, then we're going to see a lot less of hype a couple of years from now. And I think that's the burning question for me.
30 seconds. It's tariff day. What's the technology angle from tariffs?
It is. I think it is a very big deal for technology, even though they are not directly impacted. But business confidence, when it plummets, it's a problem for consulting. It's a problem for software buying. I mean, we are really getting worried as to what's going to happen this year on just the non-AI tech spending. And, that so far, the early signs are that it's not looking good.
Interesting. Yeah, it just kind of goes out of business confidence thing. Torsten Slot from Apollo was out with a note this morning citing a CEO survey and really weakening over the past several weeks dramatically.
But is that like done spending, or is that just delayed spending? And then when does delayed spending actually become bad versus like, I'm going to hold on for a couple months?
I think that's right. That's right. But it seems like, we're hearing from a lot of executives, the consumer is a different animal, but a lot of execs saying, we're waiting here to see how this plays out. I don't know if they're waiting for today at 4 o'clock or something else. We'll see.
What puts their finger off the pause button. Good stuff. Anurag, thanks a lot. I will see you later at the conference. Anurag Rana, Bloomberg Intelligence Senior Technology Analyst, joining us there. For our listeners in the U.S., here's a reminder. You can listen to us via satellite radio on SiriusXM Channel 121. Access the world's only global audio business network, coast to coast, 24 hours a day. Bloomberg Radio on SiriusXM Channel 121 is presented by Oracle. Stay tuned for the latest market news and industry research. Second hour Bloomberg Intelligence starts now.
This is Bloomberg Intelligence with Alex Steele and Paul Sweeney.
The real outperformance has been in U.S. corporate high yield.
Are the companies lean enough? Have they trimmed all the fat?
The semiconductor business is a really cyclical business.
Breaking market headlines and corporate news from across the globe.
Do investors like the M&A that we've seen?
These are two big-time blue-chip companies.
The window between the peak and cut changing super fast.
Bloomberg Intelligence with Alex Steele and Paul Sweeney on Bloomberg Radio.
Happy Wednesday, everybody. Happy Tariff Day as we wait for 4 o'clock if we'll see any kind of clarity or even details on what a tariff plan will be. I'm Alex Steele alongside Paul Sweeney and John Tucker. We have a great hour lined up for you. We're going to cover all the news out of Washington and also dive deep on AI as well. Julie Choi is a CMO over at Cerberus on generative AI and scaling laws. This is also part of the AI event we have from Bloomberg Intelligence right here at 7:31 Lex, so we will bring that to you. Plus, Bill Lee, chief economist at the Milken Institute, one of the best out there, will bring us his take on what tariffs mean for the economy. And Jim Stratton is Workday's chief technology officer. We just heard from Anurag Rana on the application for AI. What is it actually doing? What is the productivity gains? We'll break that down. And of course, Nathan Dean, Bloomberg Intelligence senior policy analyst. What's he looking at for 4 p.m. today? But let's kick it all off for you right now. Here is a Bloomberg Business Flash with John Tucker.
All right, guys, the major stock averages, they've erased the earlier gains, now higher to little change. And it's, I think, very telling if you look at the volumes. The S&P 500 volume for this time of day, 25% below normal.
Really? Wow.
You look at Tesla, among the most active, it was down 1.5% after the sales came up short of estimates. Among the laggards in the S&P 500, NVIDIA, that's down about 1%. Tesla, Microsoft, that's down 0.2%. Then the other side of the ledger, the leaders in terms of index points, Apple, Costco, JP Morgan Chase, and Netflix. Of course, the president set to announce tariffs later today. In response, we heard this morning the European Union preparing a package of potential emergency measures to support parts of its economy that could be hit the hardest. And Amanda Leinen at BlackRock sees tariff-induced stagflation worries on the rise.
In general, we're expecting this persistent overhang of policy shift to extend way beyond today. I would say more broadly, we see room for concern around the growth inflation mix in the U.S. to intensify.
Right now, the S&P 500, 4 points higher, 56.37. The Dow Jones Industrial Average up 61 points. The NASDAQ 100 down just 5 points. 2-year yield, 388. That's unchanged right now. The 10-year also has gone unchanged right now at 415. U.S. companies may be hoarding cash amid the tariff uncertainties. They've announced $39.1 billion in stock buybacks in the month of March. That was the lowest dollar value since October 2020. Could be a worrying sign since buybacks offer some pretty critical support for the U.S. stock market. Do you know what day it is today?
Oh, boy. So many ways.
And it has nothing to do with tariffs.
What?
It's apparently John Tucker Appreciation Day.
Oh, I didn't know that.
Somebody baked me cupcakes.
Wow.
I did. I baked him carrot cake cupcakes.
Just because you...
With cream cheese frosting, all homemade.
You can call me anything you want in the future.
I called him
if I
Charlie
get
Pellet like 5 times yesterday while
That's
looking at his face. So I made him cupcakes with a JOHNTUCKER. Each letter written on each cupcake.
Make this a national holiday.
To be fair, I really do enjoy baking, and the carrot cake is really yummy. So
we loved it. Thank you very much.
You are so welcome, Charlie Pellet. That was a joke, though. That one was a joke.
All right, JT, thank you so much. We appreciate that. Again, as John was just reporting, we got a little bit of green on the screen here. But let's get a look at how some individual stocks are performing. Today, we're joined by Bloomberg's Isabel Lee, Bloomberg cross-asset reporter. Isabel, what do you have?
We're looking at Tesla. Shares are still edging lower by almost 1.5%. So we saw its vehicle sales slumping 13% in the first quarter, and that's really dragged down by the changeover in its most important model, which is the Model Y, and backlash against Elon Musk. We have Cantor saying that Tesla sales in the first quarter were affected by weak demand in Europe and, quote, Elon's polarizing politics, among other reasons, end quote. So the figures really just speak to how the disruptions have really affected Tesla's business. Sometimes you really wonder, can you separate the man from the business. So we have RBC analysts saying that the miss was not a total surprise and it's largely understood by the market, but we have Wedbush saying that the street knew it was bad, but it didn't knew it would be this bad. He says it's worse than expected. He, meaning Dan Ives, who we know is one of the biggest Tesla bulls.
It's true. When Dan Ives comes in and starts to say things on the margin, you really got to listen. All right, you're also looking at Newsmax here. That's been a wild ride.
Wild ride indeed, and now we're seeing some pressure, 45% lower, but that's after a more than 2,000% rally since its debut on Monday. And it really cemented itself as a meme stock right now because we have a lot of bullish retail investors who are piling in on the stock. In Fidelity, they were mostly the buyers. It was the top 5 most popular in stock on Tuesday. And we have in memes and Reddit, a lot of memes are saying that this is the new GameStop. They touted their easy returns. I mean, if you invested at the start of the week and then you have a 2,000% gain, that's really something. So really the surge is reminiscent of the meme stock craze.
And wrapping it up, Roblox.
Let's end on the green. Yes, Roblox is up by nearly 3%. They announced new tools to help parents control how their children interact with strangers in the platform. We know that a lot of these platforms have really come under fire because it's seen as a hazard for children, especially underage ones. And starting Wednesday, parents will be able to limit who their child can interact with. And the company said that parents will be able to view which games their children play and restrict them from playing inappropriate ones.
Love that for me.
I don't know how you police that stuff.
I mean, I was talking to Caroline Hyde about this earlier. I was like, you know, you do your best you can. Yeah. You teach them, the school teaches them, and then you just kind of hope for the best. Yeah. Or you restrict everything. Like, there's only those two options.
That might be scary, though, with peers if they're the only ones who can't have access to anything.
Yeah, I mean, she's not on any social media websites or anything. That's going to be hard banned.
We had software. We had software to kind of monitor that, but my son figured it out in like 15 minutes how to bypass it.
100%. Yeah.
Now he works for Lockheed Martin, you know, doing it.
It was doing it for a living.
Yeah, doing it for a living. So.
All right, thank you so much. For more conversations like this, listen to our new Stock Movers podcast. Subscribe for 5-minute episodes and the biggest winners and losers in the stock market. Listen to Stock Movers on Apple, Spotify, and anywhere you get your podcast. As Paul and I were just mentioning, today there is an AI conference that hosted by Bloomberg Intelligence right here at 731 Lex with some great lineups in terms of how you apply Gen AI and how you make Gen AI and the cost profile, et cetera. And we're lucky enough to have a guest right here with us. Julie Choi is CMO over at Sybaris. She joins us now in the Interactive Brokers studio. Thank you so much for joining us. Just broad strokes, what do you do? What's your gig?
Hi, thanks. I'm Julie Choi. I am the SVP and Chief Marketing Officer at Sybaris Systems. Sybaris Systems, I did bring my chip. Would you like a visual?
Yeah.
Wait, is that like one big chip?
This is one big chip.
My
so
goodness.
For people who may not be familiar with Sybaris, we are the makers of this beautiful chip.
So for those on radio, it's a really big square that looks like copper in the middle and black on the outside.
That's right. It's like hundreds of GPUs tied together. And this is one square chip cut out of one round silicon wafer. And this is our product. It's the most powerful AI processor ever invented. And I'm the lucky lady responsible for marketing it.
I love that you brought it, Prop.
So talk to us about kind of where you think the AI market is, because as you well know, for just us in the marketplace, it was the story in 2023, the story in 2024. Now it feels like the vector might be changing a little bit. Maybe people are losing some of their, they're just maybe changing their views on AI. Where do you think we are?
Well, I think that AI is really kind of hitting the mainstream more.
Okay.
I think that, you know, ChatGPT surfaced at the end of, was that 22? I mean, technically, I think the first model came out in 2022. And it's been almost 2.5 years since then. And ChatGPT has found its way into so much of our lives. And so people are more comfortable with AI, right? And so now I think we're just shifting into, okay, AI can be a part of my life, but it's still early days. And,
so where do you sit then in the pyramid for AI?
So we are, Sybaris makes this beautiful chip, which is basically AI infrastructure. We are the equivalent of NVIDIA. So NVIDIA GPUs, it's just an alternative type of processor for AI. So we are the underlying compute that's powering the training and running of models like ChatGPT.
I guess one of the questions now is people are trying to just get a better handle on what the compute needs are going forward. Jensen Huang at NVIDIA remains extraordinarily bullish about that, and he has been, the voice of AI for many investors for the past couple of years. Where do you think we are in that compute need?
Oh my goodness, I completely agree with Jensen Huang. I've been following Jensen kind of unofficially as a mentor. I find him to be an incredibly inspiring leader. I agree. I think that the compute needs for AI are ever increasing. Now with models like GPT-4o, and the whole O1 series, these are like these reasoning models, right? Today, I'm here in New York to go to the generative AI scaling event that Bloomberg is hosting, and it's all about this like inference time compute. Inference time requires a tremendous amount of compute. And so we're still just scratching the surface of how much compute is really needed for this extra level of intelligence.
And do you play in the inference and the LLM space, like the training and the usage? You do both?
Yes.
Okay.
Yes. So Cerebras is in both training and inference.
What is has demand for your products changed at all since DeepSeek came out in terms of pricing or in terms of demand?
Yeah, I mean, DeepSeek happened in January, and it was such a big moment for the industry. And we immediately, within 48 hours of the news, that big day, we added DeepSeek to our catalog of models. And so what we do is we offer Llama models, DeepSeek models, and other kinds of models to the developer community, right, in our cloud. And our differentiation from GPUs is that we're like 20 to 70 times faster in terms of like that response time. When you put in a query, our responses are about 20 to 70 times faster because of the architecture being bigger. So DeepSeek really created this moment of developers coming at us saying, oh my God, you guys have the fastest DeepSeek. We want to, we want that. We want to see what that can do. And that's led to a lot of prototyping. But what we do see is that when it comes to developers that are building AI businesses, there's a lot more usage of Llama. So Meta Llama is probably still the most popular open source AI model that is downloaded, at least from the Cerebras cloud. And then we have customers like Perplexity and Mistral, AlphaSense, based here in New York, that are kind of serving their adapted Llama models as well as their own custom models.
So the DeepSeek issue for the industry was, hey, here's this Chinese company coming out with an AI solution at a much lower cost. Is that good or bad, or neither good or bad for the AI evolution?
Oh, I think it's very good, because DeepSeek was a state-of-the-art model when it came out. It's still one of the best models in the world, especially I think with their V3. And what it proves is that when you can open source this level of intelligence, you're bringing kind of down the cost to developers, and it increases developer creativity. And so one of the things that Cerebras is super passionate about is providing developers with the best models, open source or custom, fastest at the best price. And so we were just very excited when DeepSeek open sourced, and clearly, like, the developers were very excited as well. It was definitely kind of an inflection moment.
In terms of what you're most excited about right now, like what's the coolest use case you've seen when it comes to training and when it comes to inference?
Fantastic question. So for training, I'm going to bring up a healthcare use case. So one of our favorite partners, and we shouldn't have favorites, but I really appreciate the work that Mayo Clinic has done on Cerebras. They have been able to train world-leading foundation model using genomic data. And the point of their genomic model is to help patients of rheumatoid arthritis. I have a family member who's been struggling with this terrible disease for a decade. And this AI model can help her find the medicine that actually works much more quickly. I didn't realize that actually rheumatoid arthritis, generally 40% fail rate in terms of aligning the right medicine to the patient. And so really proud of the work that the Mayo Clinic team has done in partnership with Cerebras, training that model super fast on our chip, releasing it in probably less than 9 months of development time on the training side. On the inference side, I'm very excited to be working with companies like Perplexity as well as Mistral. These are some very, very AI-forward companies leading the way in terms of disruptive search experiences for consumers and amazing chat assistants, especially in Europe. And we're powering their super fast results.
For the rest of the world, today's a tariff day, if for nothing better or worse. For your company, are you seeing any impacts of just the uncertainty surrounding how this tariff policy will evolve? And your customers saying, you know, we're just going to wait a little bit before we place an order or something like that?
No, actually, it's really all systems go.
Okay, good.
Our customers want the fastest inference speeds. They want the smartest models in their applications. We're not waiting to find out. There's no time to wait. We have to deliver the fastest compute to the best customers in the world.
What's the cool thing you're going to launch like this year? Like, what are you going to be pumped about?
Yeah, I mean, I think that we are pumped. We're going to be sharing some more news in April. I can't really share, but just bigger companies, amazing partners are going to be collaborating with Cerebras, household names, to bring this fast inference to all developers.
So far, does what you do displace humans yet, or is it additive?
Absolutely not displacing humans. I'm not into that at all. It's additive. I mean,
like making my job easier, more productive, like it's that.
Yes. Find the information you need faster. Find the better answer, right? Like save me time. Generate images and movies like of my kids and my pets that are super fun. Like I was playing on the weekend with OpenAI. They added this whole image generation capability, and we had so much fun just creating these images of my King Charles Cavalier and playing with her besties. And I just think AI is not only assistive, it's just it's a new creative landscape for humans to kind of unlock this creativity.
When are you guys going public?
Wow, I mean, at the right time, right? Thank you so much. You guys will be among the first to know when we do.
Okay,
CoreWeave didn't do it for you.
Yeah, but it's not in this market conditions, I'm guessing.
You know, timing is everything.
Yep.
And we're just really enjoying the journey.
Spoken like a true CMO. Nicely done.
Julie, Joy, thank you so much for joining us as Chief Marketing Officer for Cerebras. Joining us here in our Bloomberg Interactive Broker Studio, speaking at our AI conference today in New York City, Bloomberg Intelligence. This is their fourth Gen AI conference. And I said to Anurag Rana, why do you guys have so many of them? Because this stuff is changing so quickly, the technology, and our Bloomberg clients, they demand it. They want to know. They want to stay on the cutting edge of what's going on in Silicon Valley with this new, the evolutionary type of technology. So we stay on top of that. S&P unchanged on the day. The Dow's up 35. NASDAQ is down 6. Yields coming in slightly. 10-year Treasury, 4.15%. We'll have more coming up. This is Bloomberg. Good morning.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker in the Bloomberg Newsroom with this Bloomberg Business Flash. Ahead of the tariff announcements after the close of regular trading today, the major stock indexes, they have erased the earlier losses, and they are higher right now. The S&P 500 up 14 points, a rise of 0.25%, 56.47 on the index. The Dow Jones Industrial Average up 113 points. The tech-heavy NASDAQ 100 right now 48 points higher. That is up 0.25%. But it is worth noting that you look at the volume of trading far below the average this time of the day, especially for the for the S&P 500 and for the Dow Jones Industrial Average. The market reaction to a wide range of potential economic outcomes is uncertain, with Wall Street desk projecting a 2 to 3% swing in either direction after the tariff announcements later today. Tesla's vehicle sales falling 13% last quarter. This is the worst showing since the second quarter of 2022. It matters because the stock has the 9th biggest weighting in the S&P 500. And since its peak back in December of last year, the shares of Tesla down close to 43%. Right now, shares of Tesla, they've turned around in today's trading. Right now, up 2.4%. Pizza news. Domino's will begin accepting orders through DoorDash. So this was an arrangement previously exclusive to Uber Eats, and it could help the pizza chain reach a wider audience.
There you go.
You know how much I love Domino's.
Well, I tell you, having lived in Richmond, Virginia, and Durham, North Carolina, that's it. That's all you got, dude. So in that context, it's a lifesaver.
I'm used to a pizza parlor. You walk in and you get a slice.
Yeah, well, that's this part of the world.
They look at you like you're out of your mind in other parts of the country.
That's this part of the world, yeah.
S&P 500 up 15 points. The Dow Jones Industrial Average up 115 points. The NASDAQ 100 right now 59 points higher. And Treasury yields actually turning higher right now. The 2 is up 1 basis point at 3.89. We check the markets for you all day long right here on Bloomberg Radio. I'm John Tucker. That's your Bloomberg Business Flash. Alex and Paul.
All right, John Tucker, thank you so much. We appreciate that. Alex Steele and Paul Sweeney live here in our Bloomberg Interactive Broker Studio. We are streaming live on YouTube, so head over to youtube.com and search Bloomberg Podcast Live, and that's where you will find us. It is Tariff Day.
Can we bring you this breaking news?
Please.
Anyway, Trump tells his inner circle, this is the headline just crossing, that Elon Musk will leave soon. This is according to Politico. A lot of people apparently have predicted this, but Politico says Musk will leave soon.
All right, maybe that'll be good for maybe his investments, as a lot of analysts and investors have been talking about. We'll see about that. We'll have more reporting on that as well. Let's talk about the economic impacts of tariffs. Bill Lee, chief economist at the Milken Institute, joins us in Zoom here. Hey, Bill, talk to us about, you're an economist. You do that stuff for a living, marginal revenue, marginal cost, all that stuff. What do tariffs really mean for this economy?
Hey, Paul, you cannot be a card-carrying economist in good standing without first saying tariffs are not a good instrument to use in general. They have costs. They're not the best instrument to use for economic policy. So I've said that, right? And just like a doctor will tell you, I have to use bad instruments sometimes with bad effects in order to have what I need for the total treatment. A cardiologist will use rat poison to treat heart atrial fibrillation to thin the blood. But you don't judge rat poison just on that alone, right? You judge it in terms of what other treatments do you give the patient in order to make the patient healthy. And I think the Trump administration is trying to say, I'm using rat poison, which are tariffs, but I'm also trying to put them in the context of a package of policies that will make government smaller, lower taxes, fewer regulations, and more importantly, entice foreign investors to bring capital into the United States to produce more jobs and produce more production and shift the supply lines in a way that'll be more secure. So those are the objectives. And so I think it's very unfair to just judge tariffs in and of themselves. I used to teach international economics at Columbia, and my lectures on tariffs are always, they come with a cost. Just like rat poison comes with a cost. And you can kill yourself if you use it improperly. But in the context of a policy package done by a good doctor, you can make the patient much more healthy than before. And that's what we're hoping the Trump administration is trying to do.
like sort of the rat poison sucks for the rat, but is good for us in our house, I guess. So are you trying to say that maybe the tariffs and the shift in the economy to private investment versus fiscal-led investment and to help close that gap could work?
Well, that's why President Trump was elected. There's a lot of faith that what policies were in place before were not working. And so we need some more drastic treatments. And the drastic treatments are we have to shift production globally in a way that will secure our supply lines. We need to shift investments into the United States more so that we can bring innovations back into the United States. It's not so much bringing manufacturing back. It's really bringing back manufacturing innovation centers because I think foreign producers have shown that they can make a lot of money in the United States. Look at Toyota and all the foreign car manufacturers that have very successful plants here. Look at steel manufacturers that could have very successful plants here if they bring in the innovations and change some of the ways of doing business here. And I think that's the kind of revolution that President Trump's trying to do. Now, there's a lot of doubt as to whether he can do this or not. And I think the market fade in the last several months has been sort of a growing, nagging feeling that the good stuff that he's promising, the lower taxes, smaller government, and fewer regulations, has yet to be shown yet. And given the amount of political capital he's losing with the tariff debate, there may be some doubt as to whether he can do that. That will put the treatment in jeopardy, and it's not clear that the patient will be healthy after that.
So, Bill, to the extent that the administration wants to bring back manufacturing technology type of jobs to the U.S., is tariffs the way to get there, or is, I don't know, maybe some other types of regulatory issues, favorable taxation issues, a way to attract foreign investment into the U.S.?
The way you attract foreign investments in the United States is investors anywhere. You say that you're going to make more profits here because we have the marketplace, we have the ingredients to give you those profits. But those ingredients are smaller government, lower taxes, and fewer regulations. A tariff is better than the alternative, which is like a subsidy. I think President Trump has said that tariffs are better than something like the CHIPS Act, where government has to pick winners and losers. They have to pick companies to give them subsidies to say, hey, come here and build your stuff here. A tariff automatically allows the market to sort it out. It says, you come here, we give you smaller government, lower taxes, and fewer regulations, but we also give you some tariff price protection in the sense that you come produce here and you get all the benefits. You bring in your stuff as fully made stuff and compete with our producers, and we're going to give you a tariff wall. So that's really the trade-off that foreigners are being faced with.
Bill, such a pleasure. It's always so great to talk to you. Bill Lee joining us, Chief Economist at the Milken Institute. We'll get back to you soon, definitely, after we get some of the details from today's announcement. Love to see your thoughts on that as well. All right, let's get back to AI, because that's there no matter what.
Yep.
It's tariffs or no. The AI world is definitely here. The adoption, though, and how quickly it goes, that's definitely still up for grabs. Joining us in the studio is Jim Stratton, Chief Technology Officer over at Workday. That ticker is WDAY. He joins us in the Interactive Broker studio right here in Midtown Manhattan. Hey, Jim, great to get your perspective. I know you're here for the Bloomberg Intelligence AI conference today, so shameless plug on our part. For our listeners, talk to us about where Workday sits in the AI stack.
So Workday builds and deploys and serves enterprise finance and HR for major corporations, for state higher ed, for large institutions. And AI really is built directly into the products that we build. So if you think about the different types of workflows around running a business, around running a major business, all of that is ripe to be infused with AI for automation, for ease of use, and that's really what we're building and deploying now.
So to what extent, I guess a lot of us lay people are trying to get a sense of, is this just the next step in the evolution of tech, or is AI a leap, a step function? How do you think about the technology of AI, the compute that it, and the applications coming from that?
It is the next step, really the next evolution in technology. But I think the leverage that we can get out of AI, it really is a leap in terms of it's an exponential growth in terms of productivity, in terms of enhancing humans and the capabilities of what we have in the workplace. It really is an exponential leap for us in the technology space.
So give me a use case. So some of your clients like GE or Visa, right? I come to you and say, hey, Jim, what are you going to do for me? and how does it help me and make me more productive or something along those lines? What does that use case look like?
So if you think about, I'll give you a couple examples across HR and finance.
Please.
So think about the recruiting space. So talent acquisition, you have in many cases thousands of jobs, hundreds of thousands of jobs that are open across even just the US here. Within a particular company, you may be sourcing for 10, 50, 100 jobs, or literally thousands of jobs across a large enterprise. And you're getting, in some cases, hundreds of thousands, millions of resumes into those jobs, literally that many resumes. It's really hard to go through and source that. AI is a terrific space, and actually we have a recruiting agent out in the market now that helps significantly with that sourcing problem in terms of weeding through who are the best candidates, what are the best skills, depths of skills. Even some of those skills are hidden in experience and not explicitly written out on a resume. AI is actually really good at mapping that into a job requisition and saying, you know what, these are probably your top 10 candidates, and then handing that off to a recruiter to then go do the human engagement, interacting with those candidates and finding the best one, the best fit. That's already out in the market today, and we're seeing incredible improvements in terms of talent acquisition efficiency, what the recruiters are able to source, how quickly they can fill roles. On the finance side, I'll give you a quick example there as well. Our finance teams and every finance team at every major company out there spend tons of time poring over contracts to understand the details in those contracts and how that maps directly into their books, into their financials. AI is fantastic at not only extracting information off of contracts, but summarizing that and actually directly mapping that back into the GL of a company. That's also out in the market today for us, and we're seeing great gains in that in terms of efficiency of what the legal and finance teams can do.
So with what level of confidence can you say that all this money that's being spent on AI is generating a positive return, or will generate a positive return in a reasonable time?
Actually, that's a great question. There's a huge amount of money that's being spent just on the pure advancement of frontier models of really research AI, and we are seeing incredible gains in terms of those moving to what we call reasoning models, so the ability to actually think through a problem in multiple steps and then actually go action against that. I think that's going to have really broad application across lots of things, not just enterprise software, but just how we interact with everything in the world. But directly within the enterprise world, we're now very much focused, and I spend a lot of my time talking with CIOs out in the community, and they're thinking about this exactly the same way. It is, how do we've already spent a bunch of money trying things out, playing around. Now we need to show direct ROI back in those investments, and that's the part where we are now, is the products that are being built, the problems that people like Workday, companies like Workday are focused on solving are direct ROI. How do we get efficiency back into the business? How do we reduce risk in the business? Those are the primary areas where we're going now.
All right, Jim, thank you so much for joining us. Really appreciate you participating in the conference today. Investors love to hear from people actually getting it done out there. It helps investors, Bloomberg customers, really get a better understanding. Jim Stratton, Chief Technology Officer for Workday, joining us live here in our Bloomberg Interactive Broker Studio. Boy, we've turned positive. Go figure. Futures were just ugly this morning. Get the S&P up 25 points. How about that? We're going to have more coming up. This is Bloomberg. Good morning.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker in the Bloomberg Newsroom with this Bloomberg Business Flash. Stocks now are pushing higher along with shares of Tesla. This is all happening after the news crossed from Politico. They are reporting that President Trump has told his inner circle that Elon Musk is leaving soon. Nathan Dean's going to come up with a deeper dive into this in just a couple of minutes. Right now, looking at shares of Tesla, they are up 4%. Remember, this is after those less than impressive sales figures that we got earlier today when the stock was down. The S&P 500, in which Tesla has a 9% weighting, right now 23 points higher. That's up 0.4%, 56.57 on the index. The Dow Jones Industrial Average up 148 points. NASDAQ 100 is 96 points higher, and that is up 0.5%. Well, the other big news, of course, today, Tariff Day, the announcement from the White House, 4 p.m. Eastern. The European Union preparing a package of potential emergency measures to support parts of its economy that could be hit the hardest. And Dr. Lindsay Newman at G0 Media says investors should not expect clarity from today's tariff announcement.
There's the hope that once this is laid out today, starting at 4 p.m. in the Rose Garden, that there's going to be a sense of, okay, we have clarity now, we can go forward. I am very concerned about that aspiration. I think that the hope that we will have certainty and clarity is unfortunately pretty misguided.
And Boeing's chief executive officer, Kelly Ortberg, says the plane maker has implemented sweeping changes to reduce the number of defects and hitches in the production line. He was facing questions from senators about the company's recovery. But again, the big news, Elon Musk, according to Politico and President Trump telling the inner circle, Musk is going to leave soon. And we check the markets for you all day long right here on Bloomberg Radio. I'm John Tucker. That's your Bloomberg Business Flash. Alex and Paul.
Hey, John Tucker, thank you so much. We appreciate that. Alex Steele and Paul Sweeney live here in our Bloomberg Interactive Broker Studio, streaming live on YouTube as well. That Musk news is really interesting. It's great for the stock. Stock's up 4%, as John was just reporting, so I'm sure the investors there are happy. Let's go right down to D.C. and get it from the a source, our source down in D.C., Nathan Dean, Senior Policy Analyst for Bloomberg Intelligence. Nathan, in the Beltway, what was the feeling, what is the feeling about Elon Musk, his role, his proximity to the president is so close, and it's been that way since the inauguration here, but is anybody surprised that he may be leaving soon?
So I don't think I was surprised. I think this makes sense. And obviously, if you're a Tesla investor, you're going to like the idea that Elon Musk returns to the company. But if you think about it, you know, the Doge committee, the Doge group, if you will, they've been expanding. Bloomberg News just reported a few minutes ago that Kalshi's chief regulatory officer is going to Doge. What Elon Musk essentially has done is he's created a group, and they're going agency by agency, but they can only cut so much. You know, if they cut too much, then eventually it's going to be a political blowback. And Elon Musk doesn't have the power to go after the mandatory spending, which is where the big ticket items in terms of reducing the deficit is. So I think this makes sense. He's going to return to the Tesla, assuming Politico's reporting is correct. He'll return to Tesla, but nothing prevents him from coming back. Nothing prevents him from going into the White House. And I think if you're a Republican on Capitol Hill, you'll love the idea that maybe you're not going to have the White House calling for deep cuts to Social Security, the mandatory spending, if you will. They'll be left to Congress. So I think they may be pleased with this as well.
So this is not the end of Doge, if this is indeed true. This is just sort of an evolution of Doge. So we can still expect that to come and bring hammers to everyone's payroll here?
Absolutely. Well, at least in terms of your first question, in terms of this is not the end of Doge. Doge is going to continue. But what Elon Musk did is essentially created a group of advisors and individuals that are going in agency by agency, and they're looking at identifying areas to cut. But for, you know, Elon's main goal of deficit reduction, he's not going to be able to do that with Doge. They just do not have the power to do that. It requires an act of Congress. So you are going to see Doge continue probably for the next year, if not a little bit longer, until they really get to the point where they are streamlined and they feel that they've adequately right-sized those agencies. But for the big ticket items, we're going to see that in the upcoming tax debate in terms of things like Medicaid, SNAP benefits. You know, obviously that wasn't mandatory, but Social Security, the really key things that are really important to the deficit, Doge and Elon Musk just don't have the ability to control. He's going to need Congress to do that, and I think Congress is going to be happy they're now going to be in the back in the driver's seat, assuming that Elon Musk does leave.
And Nathan, I wonder if the last night's race in Wisconsin with the digital race where Elon Musk candidate did not win, do you think that had anything to do with his decision-making?
I don't think so, but I think what last night did, it was an indication of what Republicans fear may happen 18 months from now. I mean, if you look at midterm elections, they always swing back the other way. I mean, the joke is, think of U.S. politics as like a car out of control going down the street. It hits guardrails left and right, left and right. It never goes straight. And so, you know, the tendency here is that the House of Representatives is going to be in play for Democrats. And I think yesterday just told a lot of those Republicans on Capitol Hill that a year from now, this may be something that hurts them politically. And so I don't think anybody's going to vote off of what happens right now, 18 months from now. But I do think that this, you know, decision for Elon Musk to maybe step away from Washington and go back to Texas and Florida and so forth like that will make a little bit of the Republicans on Capitol Hill breathe a little bit easier just because they can get a little bit more control of the narrative.
You know what this did do? We didn't talk about tariffs for 4 minutes.
Yes.
I'm just saying, that news flow definitely just changed. Nathan, okay, so 4 o'clock today. I'm going to be sitting on set, on TV, going to have my terminal, NI heads for all the pros out there. What are the headlines that the literal headline that crosses, that you're going to be most interested in?
So obviously the biggest question is this going to be a country tax or a tariff, or is this going to be a tiered tariff? But, you know, one of the big questions we're getting from clients this morning is they're focusing on what Treasury Secretary Scott Bessent is saying in terms these are a cap. He's essentially floating the idea that these are a cap, with the idea here that potentially President Trump will be willing to negotiate going forward and bringing this down from like a cap down to a reciprocal tariff. And so the question for me is, in this statement tonight at the White House, or sorry, at the Rose Garden, is President Trump going to give any indication that he'll be willing to pick up a phone tomorrow? Because if that's the case, you know, he can come out and say 20, 15%, 20% universal tariff, whatever it may be, but tomorrow it may be different. And so you're not going to get that clarity of this is what the tariff policy for the United States will be. I don't think the markets will like that, just because I don't think that clarity is coming.
So do you expect any pushback, feedback, once we do know what the policy is from either, obviously, the Democrats or maybe even some in the Republican Party?
Well, absolutely. I mean, I think we're going to see, you know, obviously the Senate sometime today pick up their resolution to try and, you know, overturn these tariffs that were up with Canada. And, you know, my vote count, I at least had, you know, the Democrats need 4 Republican senators to go along with them, and I think they have it. So you are going to begin to see a public rebuke of some of these tariffs. I would just caution, though, and say that, you know, tariffs are the power of the presidency. Congress delegated its authority a long time ago, so there's only so much Congress can do to actually advise the president, say, maybe you should scale this back. So it's ultimately President Trump's decision, and I think that for him to be able to walk back this tariff, and this is just my own personal belief, you're going to need to see consumer confidence or sticker shock amongst things that, you know, Americans just buy on a daily basis for him to actually walk back a lot of that tariff threat.
And of course, though, the goal is to shift the economy, though, away from fiscal spending to private-led investments. Is that a possible thing?
Not in the short term. I mean, this has been the White House plan all along, is that you're going to have short-term pain for long-term gain. But, you know, some of these pains are going to be very, very, very permanent. I mean, if you think of just the farmer argument in particular, that, you know, if the United States does move forward and use the USDA to implement subsidies for farmers, farmers aren't going to like that, because essentially what it means is that you're going to be thrown out of the supply chain. And in the future, maybe instead of buying goods from the United States, they're going to buy it from Brazil. That's not something that you're going to be able to easily reverse. So, yes, you are going to get this shift. And we've heard from clients saying, look, I want to potentially buy a factory in the United States. I just can't do it in 2025. Probably can't even do it by 2027. So, you know, again, it's really how long can the White House really keep with this strategy to try and transform that economy?
All right, Nathan, thank you so much. We appreciate it. And you're going to have a long afternoon and into the evening analyzing what we will hear from the president this afternoon. Nathan Dean, senior policy analyst, Bloomberg Intelligence. He's based down there in Washington, D.C. He does a wonderful job of explaining all the mechanizations of what happens down there in Washington, in Congress, and Capitol Hill, and in the White House as well. S&P 500 up 5 points, the Dow up 30 points, the NASDAQ up 34 points here. So a little bit of green on the screen here. 10-year Treasury yield, and we're up about 4.17%. We're down at 4.10 earlier today. This is Bloomberg.
is Bloomberg Intelligence with Alex Steele and Paul Sweeney on Bloomberg Radio.
Happy Wednesday, everybody. Alex Steele here alongside Paul Sweeney. This is Bloomberg Intelligence Radio. We bring you all the top news in business, economics, and finance through our lens of our Bloomberg Intelligence folks. They cover 2,000 companies and 130 industries all around the world. So in D.C., it's not just about Musk, it's not just about tariffs, it's also about TikTok. Potentially, President Trump is weighing plans for TikTok's sale today at a meeting. We want to get more on this with Matthew Schettenhelm, media litigation analyst for Bloomberg Intelligence. He joins us now from D.C. All right, remind us of where we are in the law and what Congress did and where we're at here.
Yeah, so we are at the point where Congress adopted this law last year that effectively bans TikTok in the United States as of January 19th. The Supreme Court upheld that law after TikTok brought a constitutional challenge. And then President Trump adopted an executive order just before the law was going to take effect in mid-January to say that, look, companies that are at risk under this law, don't worry about it right now. We're not going to enforce that law. So app stores like Google and Apple and Oracle, companies that host TikTok, potentially faced billions of dollars of liability under the law. Trump's attorney general sent a letter saying, don't worry about it. We don't think you're in violation of the law, so you can continue to host TikTok. That executive order from President Trump ran for 75 days. That takes you to Saturday, April 5th. So we're at the point where there's likely to be some action. And that, as you said, there's a meeting in the White House today.
It's a good time for this discussion, Matthew. A red headline crossing the Bloomberg terminal as we speak. Amazon puts in a last-minute bid to acquire all of TikTok. What do you make of that?
That's fascinating. I mean, to me, that underscores how far we are away from a resolution here. And you're talking about, some indication that that a deal could be in place by Saturday. I don't think so. There are so many moving pieces here. And new bids coming in, that the idea that all of this is going to be resolved in 3 days seems pretty fantastic. So I think what you're likely to see is sort of some indication of movement towards a deal, and President Trump again kicking the can down the road. And the only question is anyone going to stand up to that? There was a lot of political courage to advocate for a ban of TikTok last year. There were some votes in Congress that were 50-0 for it. But now President Trump has a warm spot in his heart for TikTok, as he says, and suddenly some of that courage is falling away. So that's going to be the interesting dynamic, is how much lawmakers or maybe TikTok's competitors stand up and say, hey, we have a law on the books here that bans TikTok. Are we going to enforce it or not?
So to that point, I guess I wonder what part of TikTok is still left to be bought. In that, is it just going to be the U.S. stuff, which may not be as valuable, or is it going to also be the technology that kind of sits in China? And if that's the case, how do we get that?
That's sort of the million-dollar question here, because there was a lot of pushback in Congress for the idea that a company tied to China would still have control over the algorithm. And a lot of the solutions you're seeing floated around look a lot like what TikTok was pitching as Project Texas last year, where the U.S. operations would work here on maybe under Oracle or someone else, but the algorithm would still ultimately be controlled by ByteDance. And the question is that the sort of solution that we're talking about here? Because ultimately China and ByteDance need to agree to this. And with Trump kicking the can down the road on this ban, I'm not sure they have a lot of concern. I don't know that the U.S. has a lot of leverage to force them to sell the algorithm. So it seems very likely that we're looking at some sort of solution that keeps that algorithm tied to China, tied to ByteDance. And the question is Congress going to be okay with that now in a way they weren't last year?
I mean, silly question, but there's no indication that ByteDance wants to sell here. So, I mean, an Amazon bid is impressive, but I don't think I've got a seller there, do I?
That's been the problem, through this whole process is ByteDance really willing to sell, and especially the algorithm component here with China needing to bless that. So yeah, a lot of offers, a lot of talk, but I think we're far from any sort of final resolution here.
So to that point, this goes back to the earlier headline that Paul just broke, that Amazon's putting in that last-minute bid to acquire all of TikTok. This is according to the New York Times. Who else quickly is on the docket to potentially buy?
Yeah, so I mean, you keep seeing Oracle mentioned as a potential bidder. You saw Frank McCourt was on Bloomberg Television earlier, and a number of other names floating around. I don't have great visibility into all those offers. I've heard 4 offers talked about, but I think we'll learn more this afternoon after this meeting as President Trump considers next steps here. But again, a lot of open questions on the law and big questions politically of whether people are going to advocate for the law that was adopted last year.
All right. So, Alex, that Matt does all the litigation around the media communications, which means he's going to be going out to the NAB conference out in Vegas, National Association of Broadcasters. So I asked him offline, where are you staying in Vegas? Because that tells me a lot about a person, His response, he didn't know.
Yeah, Paul did not like this, by the way.
Matt?
I booked someplace. I got to look it up, Paul.
Oh, my goodness. Because, I mean, you know, when I was out there, first it was the Mirage, then Bellagio, now it's the Wynn. But it says a lot about it.
But if you don't know where you're staying, that just means that you got nothing going, Matthew. Lots of shade, lots of shade. Matthew Schettenhelm, Bloomberg Intelligence litigation analyst. Thank you so very much. That wraps it up for us. Balance of Power with Joe Matthew is up next.
This is CBS News on the Hour, sponsored by Progressive Insurance.
I'm Steve Kathan. The forecast today is ominous in much of the nation's midsection. CBS meteorologist Grant Gilmore is tracking the powerful system.
We've got 12.8 million people across the South up into the Great Lakes today that are underneath this threat for severe storms. And it's not just tornadoes, but it's going to be very damaging winds and even large hail. We're talking about hailstones 2 to 3 inches in diameter.
In just a few hours, President Trump is expected to lay out his sweeping tariff plan. CBS's Natalie Brand at the White House.
The details of what exactly these reciprocal tariffs could look like still unknown, but they are expected to take effect immediately.
Senate Republicans are facing White House pressure to oppose a Democratic resolution that would nullify the presidential emergency on fentanyl being used for tariffs on Canada. In Europe,
I'm Vicky Barker at the Foreign Desk in London. European Central Bank President Christine Lagarde warns that Trump's tariffs, quote, will unsettle the trade world as we know it. Germany has repeated its plea that trade wars hurt both sides, and the EU has warned it plans to respond in kind to any new tariffs before the end of April.
A federal judge has dismissed the corruption case against New York City Mayor Eric Adams, as recommended by the Justice Department's legal analyst Lori Levinson.
In the end, the federal judge thought that the best thing to do was to dismiss this case with prejudice. In other words, it cannot be refiled against Eric Adams, even if he doesn't do what the Trump administration wants him to do to help them with their immigration policy.
Politico reports President Trump has told his inner circle Elon Musk will soon step back from his government role. He's led efforts to cut spending and jobs. On the Health Watch, a new study says the shingles vaccine cuts the risk of older adults developing dementia. Stanford researcher Pascal Getzetzer.
We estimate that roughly 1 in 5 new dementia diagnoses are averted through shingles vaccination over a 7-year follow-up period.
Well, CBS's Michael Wallace tells us there's big news in the video game world from Nintendo.
The Switch 2 will be out June 5th. The company also rolled out a trailer for its new game, Mario Kart World. Gamers will be able to connect using new interactive chat and screen share functions with the press of a new C button on its controller.
And checking Wall Street, right now the Dow is up 64 points. The S&P is up 13. The NASDAQ is ahead 74. This is CBS News. Bruce Springsteen is mourning the inspiration for one of his songs.
I had a friend, was a big baseball player back in high school.
That friend, Joe DePew, has died from cancer at the age of 75. While Springsteen called himself the guy at the end of the bench, Depew, he says, was the star on the high school baseball diamond in Freehold, New Jersey. Depew said he used to call the future rock star Sadie because he never played. In an Instagram tribute, the boss says Depew was a good friend when he needed one who could throw that speedball by you and make you look like a fool. His sign-off, glory days, my friend. Deborah Rodriguez, CBS News.
Actor Josh Brolin says Val Kilmer was smart, challenging, brave, and uber creative. Kilmer, who showed off versatility in a host of films, died at 65. Steve Kathan, CBS News.
From the world of politics to the world of business, this is Balance of Power. Live from Washington, D.C.
We're finally here, the day of days at the White House. Welcome to the fastest show in politics. As President Trump prepares to take the wraps off the tariffs at last, whether they be reciprocal across the board, autos, sectoral, or otherwise, we're going to find out, presumably, at 4 o'clock in the Rose Garden. Bloomberg White House reporter Josh Wingrove will be with us in just a moment to review at least what we know now in a day of fluidity here inside the Beltway. We'll hear insights on the tariffs from former Treasury Secretary Larry Summers in conversation with Bloomberg's David Weston. And we'll have analysis from our signature panel. Jeannie Shanzano, our Democratic analyst alongside Republican strategist Maura Gillespie with us here on what's going to be a long day, prepared for anything, with our eyes, of course, on the markets. And that's where we start right now with Wall Street and Charlie Pellet in New York. Hey, Charlie.
Well, hello there, Joe Matthew. Indeed, very busy day. And yes, we got you covered here at Bloomberg. That's what we do. That's what we do best. Right now, we got a developing story breaking. Any other day, this would be our top story. But Amazon has put in a last-minute bid to acquire all of TikTok. Again, developing story headline right now on the Bloomberg Professional Service. That, according to the New York Times. But that headline bears repeating. Amazon putting in a last-minute bid to acquire all of TikTok. Again, according to reporting by the New York Times. And Amazon shares, they are gaining now up by just about 1.2%. Our Bloomberg reporters certainly working this story. Will have more details as they become available. Stocks higher, overcoming earlier losses. Tariff Wednesday, the countdown is on. Special coverage coming up, 4 o'clock Wall Street time when this happens at the Rose Garden. S&P right now up 11, gain there of 0.2%. The Dow up 60 right now, up by about 0.1%. NASDAQ up 70, up by 0.4%. The 10-year this Wednesday, 4.18%. The 2-year, 3.89%. Gold up $15 the ounce, 31.28. That is a gain of 0.5%. Could see a record, another record today for the precious metal. West Texas Intermediate crude, 71.48 a barrel, up 0.4%. And Bitcoin almost back at 87,000, 86,750 right now, up by 1.8%. So today's focus very much on the White House and tariffs. Jason Furman is an economics professor at Harvard, also former chair of the Council of Economic Advisors in the Obama administration. And on surveillance this morning, he told us the tariff battle runs the risk of disrupting existing alliances.
The only way we can confront China is by doing it together with allies. And if we alienate our allies, there's a lot more countries that trade more with China than with the United States. We're just going to push that further and help realign global geopolitics away from the U.S. alliance and towards a Chinese entente.
And another major story we're keeping an eye on. President Trump has told his inner circle that Elon Musk will be stepping back from his advisory role in coming weeks. This, according to Politico, citing 3 people close to the president. All of this comes as Tesla's vehicle sales fell 13% in the first quarter. Tesla shares, they're gaining today, part of a broader tech rally. Right now, we got Tesla shares up by 3.9%. So a lot of moving parts to this market. Again, repeating that TikTok headline, we've got Amazon putting in a last-minute bid to acquire all of TikTok. Balance of Power continues. Back we go to Washington. Once again, your host, here he is, Joe Matthew.
Wow, Charlie Pellet. I've never heard them have to restart Charlie Pellet's music before. Thank you very much.
A lot going on, Joe. You know how it is.
Amazon. Yeah, we can't even fit it in. This is going to be a day like this. Just buckle up, hang on, fasten the chin strap, right?
And very briefly, let's put in a shameless plug. You're working double duty again today.
Well, yeah, I mean, that we're here for the duration, Charlie. I know you're going to be too. We'll have an extended edition of Balance of Power on the other side of the day. We're just getting started here at high noon, though. Welcome to Liberation Day, as they're calling it at the White House. I'm sure they're gussying up the Rose Garden as we speak. Liberation Day, or as Doug Ford calls it, Termination Day. We're still kind of in the dark here. The markets still don't really know what's coming. Even smart White House reporters like Josh Wingrove are asking, what is the president going to say today at 4 o'clock, assuming he starts on time? It's going to be in the Rose Garden on a pretty nice spring day in Washington as the administration attempts to upend the economic world order, or so we're told. Josh, it's great to see you. Do they have this all baked? I mean, you have a major announcement, a major event like this. You've covered the White House long enough to know this is a big package they put together, a lot of moving parts, but we're told this is still fluid somehow.
Yeah, I mean, that is not unusual for President Trump. He likes to chew on things right until the very end of it, but the White House has gone kind of silent the last 48 hours, and I think that is notable, but in the past they've been sort of trying to drop hints about where this is going. Right now we don't really have them. Our reporting is that as of late last night, there were 4 options on the table, all of which would apply some measure of tariffs to a group of countries abroad and go from there. One, probably the most maximalist, was the 20% global tariff on everything, on everyone, all countries. Easy to enact, pretty simple.
Yeah.
Obviously, fairly significant numbers. Market reaction to that, you think, would be pretty strong on the negative side. Then there's more targeted options, including just a very directly more targeted version of that. There's a sort of a la carte option, country by country, a different number for everyone else. Pick your own adventure. Right, reciprocal. And then a tiered option where countries would be kind of lumped into maybe like a 10 or 20, that kind of thing. So right now, that is the state of play on this. But there are so many questions. Remember, Joe, we already have the tariffs on steel and aluminum. We've got the auto tariffs kicking in Thursday already. We've got the auto parts tariffs kicking in some point in the next month, but not on USMCA goods. The USMCA auto tariffs kick in maybe after that. The copper, lumber, chips, and pharma tariffs may be coming after that. And we already have the fentanyl-related tariffs on China, Canada, and Mexico, which also have a USMCA carve-out that has been sort of thought would bridge to today's announcement, but it's unclear.
And that's about to expire, correct?
Well, no. Trump has called it a 1-month delay, but that is not how they enacted it. It is on the books until he changes it. So right now, the White House isn't saying, well, is Liberation Day going to just kind of replace some of the stopgap stuff that they've done?
Yeah.
We don't know. So conceivably, if it doesn't replace it, you could have a double impact on China, Canada, and Mexico. So anyway, needless to say, this is all swirling and up in the air. Of course, other administrations would presumably have this baked by now. I realize that people listening and outside of the U.S. might think this is a little fly by the seat of the pants, but
People in the U.S. think it is.
Right, sure. But President Trump likes having his aides debate these kind of things, so I guess it's not too unusual in the sort of landscape of where they're at. Remember, last week on the auto tariffs, it was fluid throughout the day as well.
Yes, sure. So it seems like we've heard 2 really important messages, and I'm sure you could add more to this, but from my view, we heard President Trump say in the Oval Office, sitting next to Kid Rock, that the tariffs would be substantially lower. That was the term used than some expected. We would be relatively kind. We'd be kind in relation to what they're doing to us. But we also heard Scott Bessent say that we're going to start at the top and then we're going to pull them back as the concessions start rolling in. So how do you get both?
Well, I will say Trump is saying that they're going to be kind against his perception of what they are doing to the U.S., right? Remember, the reciprocal tariffs were calculated not just on tariffs, but on non-tariff barriers, which isn't unusual in the trade world, but also on things like VATs and sales taxes. That is unusual in the trade world. So measured against this sort of everything in the cart approach that Trump was talking about, it might be nicer than that, but it would still be a fairly significant tariff if they went down that road, that avenue. What Secretary Bessent is signaling, I think is interesting and people should take note of, is, he is nodding to something that Trump has said on and off, that this is all in negotiation, that if whatever number he comes up with, let's say you're the EU, and he comes up with a number today, we don't know that the EU is being targeted, but he's always complained about them, so certainly all signs are pointing that way. And then a week from now, the EU decides to, instead of retaliating, lower its own tariffs. Conceivably, the U.S. might pull back its own. But of course, he's creating political dynamics in some countries where they're compelled to respond, at least partially, and that is what is fueling fears of some sort of spiraling trade war that, of course, either weighs on growth or full on drives things into a downturn.
So you wonder if in the weeks ahead it's going to be a parade of world leaders all coming back to Washington to talk about their specific cases and try to zero things out. We're going to talk later with Doug Ford, who I mentioned. The Ontario Premier was on the other network this morning, calling it Termination Day, and suggested that Canada was prepared to drop all of its tariffs.
You're making me put my Canada hat on now, hey?
Well, that's just,
say hello to the
it's
Premier
close
for
to
me.
home. We will. In fact, I'd be curious to hear what you would ask him later. But if you saw a development like that, Donald Trump says, hey, this is working, right?
The tone has been night and day under Prime Minister Carney from Prime Minister Trudeau. Now, Canada's in an election, so this is tricky. And I think that whatever happens today vis-a-vis Canada, we will see a response from Carney, who remains Prime Minister even though it's in an election. But I think the sort of overall grand bargain that President Trump has talked to is going to have to wait until after the election, which in Canada, it's a multi-party system, but fundamentally the polls are showing it's either one of two guys, either the conservative Pierre Poilievre or Mark Carney, the current incumbent. So we'll see. Trump's interventions, I should note, have aligned heavily with the resurgence of the Liberal Party, which was Trudeau and Carney's party in the polls. So we'll see where that goes, but I do think you will see a more scalpel-like approach from Prime Minister Carney. At least that's what he's been signaling. Than you saw with Prime Minister Trudeau, who generally, but not always, went dollar for dollar on U.S. tariffs. And of course, the economies are just such different scales that tends to exact a price. I got hit by one of them, Joe. Did I tell you this? I got hit by a tariff. Yeah. So I'm a veteran of these tariff wars. What are we talking already. About? One of the Canadian counter tariffs on the steel tariffs hit a prefabricated shed that I bought from New York State. Wow. And was shipping to a family place in Canada. Got hit, man. 25%? Dagger to the heart. 25%. Dagger to the heart. Fabricated material. Yeah.
Wow, we're straddled in the border right here together.
I was like 3 days from the border. Anyway, so
the White House
I have experience. And guess what? China did not pay that tariff. Just in case there was any confusion about that.
The Wingroves may have paid that tariff.
Right, the Wingrove household paid that tariff.
This is a real-world example you brought to us.
Because it was either me or our dear friends, the Amish of upstate New York, that were going to pay that.
Well, they're not going to talk about that in the Rose Garden today, I suspect.
No.
What do we expect from this event? All we really know is the entire cabinet, I'm told, is going to be there. There's going to be a big banner that says "Make America Wealthy Again." Do we get the Thunderbirds fly over like the beginning of a NASCAR? Like they could come right over the colonnade.
That'd be great.
Over the Rose
why
Garden.
not? Why not? I think we're going to, we'll preach to the faithful. Is what today will be about.
News conference style?
There will be a news conference element, I imagine. Trump typically can't help himself, but I should say I'm guessing on that. Our reporting, the reporting of others, is that there will be other guests, like blue-collar worker types. There's some reporting around steel workers, for instance. Now, the steel industry, Trump is trying to put the focus there because that industry loves the tariffs. The steel makers of America like a tariff on steel. The trick is everyone that uses steel doesn't like it.
How true.
Because, of course, those costs get passed on to them. So other industries, like the car industry, are less jazzed about it. And around these other tariffs, much less support. So Trump is going to try to focus on his own cabinet, who, of course, support this, or at least haven't spoken out against it, and the workers who like it.
I wonder if there'll be Teslas parked in the driveway, 100% assembled in the USA. I'd love to see the Thunderbirds if we can arrange for that. Josh Wingrove, thank you. Look for his byline on the terminal and online, helping us cover everything today at the White House on Bloomberg.
It's 12:21 on Wall Street. We do check markets all day long here at Bloomberg. We've got Amazon shares now higher by 1.7% after the New York Times reported that the e-commerce giant made a last-minute offer to buy TikTok in the U.S. TikTok, of course, facing a Saturday deadline to change its ownership structure. Right now on that report, we do have Amazon now advancing by 1.9%. S&P 500 index moving higher, bouncing back in the run-up to Trump tariffs. 4 p.m. Wall Street time is the scheduled announcement at the Rose Garden. We've got you covered all day long here at Bloomberg with the S&P now higher by 26, up 0.5%. The Dow up 144, up 0.3. NASDAQ right now up 0.8%. The 10-year 4.19%, with the 2-year currently yielding 3.90%. Spot gold up $17 the ounce, 31.30, up 0.6%. West Texas Intermediate crude up 0.9%, 71.81 a barrel. And Bitcoin now up 2%, 86,943 on Bitcoin. Newsmax shares down now by 49%. Newsmax cut in half after a raucous 2-day surge fueled in part by retail traders briefly made it larger than Fox Corp. Again, Newsmax right now down by 45%. Balance of power continues right now. Back we go to Washington. Once again, your host, here he is, Joe Matthew.
All right, Charlie Pellet, thank you so much, Charlie. Great to see you on this Liberation Day, as they're calling it at the White House. We'll see if the markets agree. Once we get details from President Trump, again, they're going to come after the bell. We'll carry it for you live, presumably 4 p.m. It could start later than that, as things tend to run a little late at the White House. Now we're going to have a special extended edition of Balance of Power starting 5 p.m. Eastern Time. We'll carry you up to 7 p.m. as we decipher what the president said, and then what we will likely hear in terms of clarifying remarks or actual paper in the form of executive orders following that event here. One of the other major stories that we're covering today is something that we're going to be getting into right now with regard to what happened last evening in Wisconsin and in Florida. Coming up is our conversation with Julia Azari, but we do have a breaker here with what's going on in the political world of Eric Adams. Just breaking on the terminal a short time ago, as you might have heard, the judge permanently ending corruption case against the mayor of New York. A federal judge dismissed the charges against Eric Adams, bringing what is a permanent end to the case. There was a bit of an argument about whether charges should be refiled, and we have a chance to catch up quickly on this breaker with June Grasso, host of Bloomberg Law. She's with us from World Headquarters in New York. June, what's this all about? Is this case over or not?
Case is over. The government got what it wanted in one respect, but not in the other, because the judge slammed the government over and over and over again in his decision. The government wanted to be able to bring charges against Eric Adams in the future, and the judge said, no, I'm going to dismiss this with prejudice, meaning you can't bring that again. He said it wasn't right to have leverage over the mayor of New York. But the judge also characterized this agreement as everything here smacks of a bargain, dismissal of the indictment in exchange for immigration policy concessions. And he just took down each of the Justice Department's arguments for why they wanted to dismiss the case. For example, it was brought for political reasons. He said, no, zero evidence that it was brought for political reasons. Another reason, the mayor, if he has to litigate this case, won't be able to deal with the immigration policy concerns. He said, no, again, he said the mayor dealt with immigration policy concerns right after this by letting ICE into Rikers, which the judge said may not be in compliance with New York's law. So he had a lot to say, though he had really no choice but to dismiss the case.
With this now less than 3 months before the primary election in the New York City mayoral race, he can still run then, right? He's a candidate.
Absolutely. And his lawyer had written yesterday asking the judge to hand down a decision quickly because of the deadlines coming up in that race. The judge also mentioned, however, whenever something is dismissed in this case or something happens, Eric Adams or his lawyers come out and say, this shows that Mayor Adams is innocent of all charges. The judge said,
this is not an indication of guilt or innocence. I'm not ruling based on that. And I think he did that deliberately because he knew that we're going to hear choruses from the Adams camp that this means that he was innocent or not guilty of those charges. But yeah, he's going to run, and we'll see how much this plays in. As you know, he already has horrible approval ratings in New York City, so we'll see how much this plays in and his tie to the Trump administration.
Well, pretty neat bow to put on this one. June Grasso, thank you so much. Bloomberg Law with much more to follow this evening. A federal judge dismissing corruption charges against Eric Adams. There you go. Nice and clean. June, thank you very much. There's nothing more dangerous than when a journalist is looking for a trend story, and that is exactly what I am going to do right now with the analysis this morning coming out of Wisconsin and Florida. Hey, first great day of the year for Democrats is the headline in the tip sheets this morning. Add Cory Booker at 25 hours on the Senate floor, and it's a brand new day. I may be going a little far, but what happened last evening in Florida, of course, by the way, Republicans won, but not by nearly as much as would have been expected. Certainly that 6th district of Florida, the Mike Waltz seat we talked about, a Trump win of 30-plus points. Didn't turn out quite like that for the Republican candidate, but those seats are preserved. Democrats may be claiming a moral victory. We're going to point more to what happened last evening in Wisconsin. The Democratic win, the Wisconsin Supreme Court race, the one that Elon Musk invested tens of millions of dollars in, making it the most expensive judicial battle in American history, went to the Democrat last evening. A 10-point spread. Judge Susan Crawford handily beat Judge Brad Schimmel in her victory speech last night. Listen.
Today, Wisconsinites fended off an unprecedented attack on our democracy, and Wisconsins stood up and said loudly that justice does not have a price. Our courts are not for sale.
I don't know if Julia Azari will indulge me on my trend story, but that's why we turn to an expert. Professor of Political Science, Marquette University. Julia, it's great to have you back on Bloomberg, and good to see you. Am I onto something here, or are we making way too much about a couple of statewide races less than 100 days into the Trump administration?
Well, I have kind of complicated thoughts about that. And I want to echo what you had said about the, kind of the significance of this race in Wisconsin. As someone who lives in Wisconsin, this morning, I have to admit, was a little lonely because by 10 a.m. I didn't have 15 text messages telling me to vote. It's been a very intense period here in Wisconsin, and it's also been, I can attest, very nationalized and with a lot of emphasis on the race really being about Elon Musk and Donald Trump, not so much about state level judicial issues. As far as thinking about a trend, here's how I would think about it. We often see this happen in the special elections that unfold over the course of an odd year after a presidential election. We often see the president's party lose, and that, or whatever we want to call this with the judicial election, technically nonpartisan, it's clear what the sides were. We often see that. We often see, and that sort of foreshadows the midterm losses that we often see for the president's party. But what I want to emphasize from my perspective as someone who studies this is that it's not as automatic as I think the trend would have us believe. And what it actually reflects is political mobilization and organization. And the way I would think about this and what I would look for is how much do some of these results reflect that organization and mobilization on the ground. And certainly you would see that in Wisconsin. And so that would be the lens I would also turn to some of these other races where Republicans underperformed their usual electoral returns. Was that the result of kind of voters experiencing some kind of remorse or voters responding to an administration? Was that also the result of real organization on the ground, mobilizing some voters and not others, and emphasizing bringing national issues into that conversation?
What does this say about Elon Musk? Because he not only made this the most expensive judicial race in U.S. history, he said a lot. He was out there with the cheese head. We all saw this, giving out $1 million checks. He said this race would decide the future of America and Western civilization. Why was he so keyed into Wisconsin?
Right. I mean, I think, who knows? But it's not wrong that this is a state where a lot of things end up kind of being decided, where this is a key swing state. We have a number of judicial issues that could come before the court, including the legislative maps and also a trigger abortion law from 1849. So, these are really forefront issues. I think even before the 2024 election, even before this race and Elon Musk, certainly it was important to look at what was going on in Wisconsin to understand national trends. As far as Musk, one thing that I like to say after these off-year elections is that they often kind of tell us stories that we already know. And the story that we already know is that Elon Musk isn't very popular. That and particularly like billionaires are not very popular. I have all sorts of survey data that attests to this. People are not crazy about the power of the wealthy. Sorry, this is the wrong venue for that comment. Musk, you asked me to share my expert opinion, and I'm looking at these open-ended survey responses unbidden. People often talk about wealth and billionaires, and Musk didn't.
I work for the radio
try to
network,
hide that,
Julia.
right?
There's no billionaires around here you have to worry about. It's just us.
Okay, good. I'm safe with my fellow media content creators, but
you are.
Yeah, that's my takeaway. Is this isn't really popular? Wisconsinites are a little bit difficult to read politically. It's very much a purple state. It has potentially sort of shifted from being a state that's purple because there are a lot of independent swing voters to a state that's purple because there are a lot of passionate partisans, and so every election is a question of which ones will show up. But whatever it is a state with a strong sort of populist history and populist background. And so it's not surprising to me that the idea that someone would come in from out of the state and kind of flaunt their wealth as a means of political power would not go over that well.
Mm-hmm. You probably heard the story or read the story, Politico magazine, Donald Trump telling his inner circle that Elon's going to be wrapping up soon, packing up his toys and stepping back in the coming weeks from his current role as a governing partner. Is Donald Trump getting a sense of what you're feeling, or will they say his work is done, or both?
Yeah, good question. We'll find out over the next couple of months. It's not terribly unusual to have some staff turnover in response to these sorts of, in response to a political development or in response to a policy development. And Musk's role is very strange. He occupies a kind of mentally, I think, the role that we often attribute to a chief of staff, but he's not playing that role at all. He is not managing the Trump White House. They won't be totally straightforward about what he's doing, but clearly he's deeply involved in the sort of policy impact of cutting government. And I think that if there's a sense that that's unpopular, part of Musk's strange role is that it makes him pretty easy to get rid of. He's not Senate confirmed. He's not even really in a clear and official role. So I think there was always maybe a sense that he would be the fall guy.
You should come by more often, Julia Azari. I was excited to hear you were coming on, and great to see you. Professor of Political Science, Marquette University, as part of our conversation today on Bloomberg. I still wonder, where does Elon Musk live in town? Did he get a property? Does he have an apartment? Is renting a house, or is he parked at a hotel? Maybe he really is sleeping in the office every night. I guess he can do that for 130 days. Look, we've got a lot more to talk about here, and we'll assemble our panel coming up next on Bloomberg with a conversation ahead as well with Larry Summers, the former Treasury Secretary. We'll have it for you here on Bloomberg.
It's 12:40 on Wall Street. We do check markets all day long here at Bloomberg. We have got the Dow, the S&P, NASDAQ, all continuing to advance. Stocks are gaining now ahead of the big tariff announcement coming up at 4 o'clock Wall Street time. We got you covered here at Bloomberg. We'll have it live on Bloomberg Radio and television. And yes, complete analysis and reaction as you have come to expect over the years. Right now, we have got the S&P higher by 27, 56.60 where we stand. That is a gain of just about 0.5%. The Dow up 133 now, higher by 0.3%, while the NASDAQ Composite Index up by 141 now, up by 0.8%. 10-year at 4.20% with the 2-year currently yielding 3.91%. Spot gold is up $18 the ounce, 31.32 on the precious metal. Could see a record there, up 0.6%. And West Texas Intermediate crude oil up 0.7% right now. We've got WTI 71.79 a barrel. Bitcoin, meanwhile, up almost 2%, 86,895 on Bitcoin. Well, as we have been reporting, President Trump set to reveal his tariff plans in the White House Rose Garden just as markets close, 4 o'clock Wall Street time. Coming up, we'll have more on those tariffs with Larry Summers here on Balance of Power. Again, recapping here, the Dow, the S&P, NASDAQ, they are all pushing higher. S&P right now up 28, 56.61. That is a gain of 0.5%. For on-demand news, 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. Charlie Pellet setting the table for us as he does each day here on the fastest show in politics. Yeah, we're working our way toward 4 o'clock. And we're going to bring you the president's comments live from the Rose Garden. It's a nice day in Washington. He'll have the cabinet with him. Make America wealthy again, we're told. We'll read the banner, and he could be surrounding himself with some stakeholders here. If you're with us on YouTube, welcome. Search Bloomberg Business News Live if you want to find us here in studio and coming up with a conversation with Larry Summers. It's a good time to jump in here. We've got an extended edition of Balance of Power this evening, 5 to 7 p.m., because it might take us a minute to distill what the president says. And before we actually see some paper this evening, there's going to be an opportunity to clarify some of his remarks and get a sense of what could be a complicated picture, potentially a combination of reciprocal tariffs, sectoral tariffs, and beyond. That is what we're going to be listening for at 4. There'll be market reaction to deal with, of course, tomorrow, but we want to get you the nuts and bolts here. And to be able to get some time with Larry Summers is going to be important. David Weston, of course, our colleague here at Bloomberg, is going to be bringing us that conversation in a couple of moments. Stuart Paul from Bloomberg Economics is also with this part of the conversation today on Balance of Power and here from New York. Stuart, this is a market that's on edge. We know how Larry Summers feels about tariffs. Donald Trump is going to try to make an argument today, I guess, to try to give the markets religion on this. The argument so far has been short-term pain, long-term gain. But I think John Kennedy, the senator from Louisiana, Republican senator, may have said it best from one of the tip sheets this morning as we consider the idea of Liberation Day. He said, in the long run, it'll probably work. The problem is that in the long run, we're all dead. Is that how the market sees this?
That's how the market's been seeing it for most of the month. It looks like equities are catching a bit of a bid today, so we could be seeing a little bit of folks starting to buy on the news as we get closer to actually receiving news. When I do the actual modeling myself, there's very little to actually be gained from tariffs. If Trump were to take a maximalist approach, raising the effective U.S. tariff rate to around 35% from just about 5%, a bit over 5% right now, we would actually shave about 4 percentage points off of cumulative real GDP growth. We don't really see any major positive economy-wide benefits from implementing these tariffs. The thing is, and this is always a problem with tariffs, is that the costs are really dispersed. They're very wide across the entire economy. The benefits are actually relatively narrow. They could benefit the domestic auto producers, for example. And that could be the objective of the administration, to benefit just certain folks in certain states. But from an economy-wide perspective, very few benefits.
Mm-hmm. All right, Stuart, let's put an ear on this conversation with former Treasury Secretary Larry Summers speaking with David Weston. This is live.
Tariffs. First, set the stage. What's at stake? these are very consequential economic policies. They're consequential for prices. They're consequential for employment. They're consequential for America's foreign relations. They're consequential for national security. And frankly, I think the question is mostly how much damage is going to be done. You know, if you think about it, David, it's kind of a remarkable thing that this is the centerpiece of their economic program, and they're so nervous about its market impact that they have to announce it after the markets have closed. So it seems a kind of bizarre strategy, which I've been watching government policies a lot. I've never seen an announcement that was delayed until after the market closed, where the government was the one that was making the announcement. And frankly, it's a bit naive as a strategy, since the indices and the futures continue to trade. So insofar as there's a market impact that's playing out, we'll still see it almost immediately.
You're a distinguished macroeconomist with a lot of extensive experience in Washington dealing with the economy. What would you normally expect if, as predicted, we have substantial tariffs, however they're parched out? We have a supply shock. Is that related to a demand shock?
So, as far as markets are concerned, it's all going to be about what happens relative to what people expected. And markets have traded down a lot over the last couple of weeks because people think that this is going to be bad. As far as the economic impact is concerned, the proximate impact is higher prices. When you have higher prices and people's incomes don't adjust immediately, they have less money to spend on other things. And that means less demand, and that means fewer people employed, and that means less need for capacity expansion and less investment. And so this is a classic supply shock. The basic economics of this situation are just like the economics of an increase in the price of oil, which is always seen as the classic example of a hard stagflation kind of problem. And of course, it puts the Federal Reserve in a very difficult position, because usually all the signs go one way. But when inflation is going up, that would be a reason to raise interest rates. When unemployment's going up, that would be a reason to reduce interest rates. And so it puts the Federal Reserve in a very difficult position. So we'll have to see how these tariffs are administered, just what form they take, before we can make an estimate of what the cumulative impact is going to be. But the direction of the impact is, I think, something that almost all economists would agree on. What is also surprising about this is that, yeah, economists always think protectionism is bad, but not all protectionism is equally bad. And a bunch of what the Trump administration is doing is, seems to me, bad within the category of protectionism. Think, for example, of the tariffs on steel and aluminum. 60 times as many people work in industries that use those inputs as work in industries that produce steel and aluminum. So when you tariff inputs to American producers, it's not even good mercantilism. You're reducing the competitiveness of the producers. And so even if you just focus on things in terms of competitiveness and you don't think about the consumer interest at all, you're doing something that's counterproductive. And the other thing is, this is like a football team that's trying to run a play in practice without a defense. This is going to hurt our economy before we get to any possible retaliation. And it's clear from what's been said, whether it's Canada or whether it's Europe or whether it's China, that there's going to be retaliation, perhaps retaliation in tariff forms, perhaps retaliation in terms of discrimination against other customers. And on top of that, you have the psychological effect. You know, there's data in the last few days suggesting that just because people are angry and upset, the demand for Teslas is down significantly because people are unhappy with Elon Musk. Well, that kind of effect is going to attach to American producers around the world because everybody's thinking that their traditional friend has turned against them. So this is the kind of thing you discuss in the way that we would usually discuss an oil price spike or an earthquake or a drought, but as a supply shock, but it's a thing we're doing to ourselves.
This is not the only action from the Trump administration that's causing a lot of turmoil. One of them is close to you, and you've talked about, and that is the move by the administration against certain elite universities, including your Harvard, and with a possible, as I've seen it, possibly $9 billion up for review. What are your thoughts about that?
Look, there is a lot that should be fixed at Harvard and should be fixed at other elite universities. And in some ways, it is shameful that there hasn't been more done to address anti-Semitism, that there have been real excesses on DEI, and the universities should have done more, much more quickly to address that. But make no mistake, David, this is an authoritarian attempt to chill and punish potential adversaries. President Trump and his administration have made common cause with the neo-Nazi AfD. There's a track record of who they've been in contact with and who supports them. This is not a genuine concern about anti-Semitism, and this is not a genuine concern about universities. They're going after judges, they're going after law firms, they're going after companies. So this is an attempt at being authoritarian towards your adversaries. And what we know from history is that there's a lot of contagion. When people capitulate, people decide it's hopeless and more people capitulate. When people have rectitude and stand up against it, it gives others strength. If Harvard University, with a $52 billion endowment, with its enormous prestige, with an alumni network in every aspect of American leadership second to none, if it cannot resist this authoritarian tendency, who can? So there is an enormous amount that is at stake here.
Okay, Larry, thank you so very much for being with us on this important day. That's Larry Summers, former Treasury Secretary, now of Harvard. Back to you.
All right, many thanks, David Weston, for the conversation with the former Treasury Secretary, live here on Bloomberg Radio, on satellite radio channel 121, and on YouTube, where you can dial us up right now ahead of our second hour. Search Bloomberg Business News Live to find our live stream on YouTube. You're going to want to keep it up and let it run today, because it's not only this program as we walk up to the announcement on tariffs, but an extended edition of Balance of Power that'll start at 5 p.m. Eastern Time. We might be in the throes of an announcement from the Rose Garden at that time, and we're going to stay live until 7 p.m. When I say we, I mean Kaylee Lines and myself. Kaylee is with me in Washington right now. This is an interesting moment as the market kind of holds its breath here. Yeah. The market is Donald Trump, no more than ever like today.
Well, absolutely, because no one but Donald Trump, and that would include all market participants, can say with certainty what is going to be announced this afternoon. As of Bloomberg's latest reporting, could be blanket tariffs on all trading partners, could be targeted different levels of tariffs depending on the tariff level the country charges the U.S. We really just don't know what ultimately this is going to look like. Everyone is waiting with bated breath.
There's a chance we could get a combination here, right? We've got potentially a scored tiered system, potentially when we talk about reciprocals, but as well sectoral tariffs. Josh Wingrove is reminding us as well, by the way, that there's still a lack of clarity on Mexico and Canada tariffs that went up for review but we may hear more about this evening.
Well, and as the former Treasury Secretary was just pointing out, it's one thing for the U.S. to announce what it is intending to do. Then we get to the retaliatory measures countries like Canada or whatever other trading partner may inflict back on the U.S.
That's why tomorrow and Friday could actually be even bigger news days. But we're going to start with what we know here in Washington. Stay with us for hour 2 of Balance of Power, the fastest show in politics, straight ahead right here on Bloomberg.
From the world of politics to the world of business, this is Balance of Power. Live from Washington, D.C.
Today, we finally get answers. Welcome to the fastest show in politics as President Trump prepares to finally deliver news on tariffs and what, of course, he's been calling Liberation Day. We still have a lot of questions, but there's an announcement set to coincide with the closing bell today. I'm Joe Matthew alongside Kaylee Lines in Washington. Thanks for being with us on Balance of Power here on Bloomberg TV and radio. Kaylee, this could include across-the-board tariffs, sectoral tariffs, retaliatory tariffs. maybe all three?
Yeah, it's quite literally anyone's guess to this point. We should have more clarity in 3 hours, though it's unclear if we'll have all the clarity we in financial markets actually desire. Because even if we do get an announcement today of tariffs of whatever level on whatever country, there's not necessarily any telling how long exactly they will remain in place.
That's right.
It depends on whether they are intended to be used as a negotiating tactic or if this is actually something that is meant to raise revenue for the United States in the long term.
To think that we're still asking that is pretty remarkable, considering how much talk we've had about tariffs. But word from our team at the White House is these details are still being hammered out. This is still an in-motion situation, a fluid situation in Washington. So 4 p.m. is the scheduled start time. We've got conversations with some smart people before and after. We'll have an extended edition of Balance of Power this evening, Kaylee, because this could take some time to unfold.
Yeah, and we'll have some smart conversations this hour, too, as we look ahead in anticipation, including from Republican Congressman Marlin Stutzman of Indiana, who has expressed some concern around tariff policies and how it could impact farm states like his, not just in terms of the cost of imports, but also what's going to happen to U.S. exports if there's retaliatory tariffs put in place.
Not to mention the impact it may have on the debate over extending the Trump tax cuts, which is a major priority for the members.
Yeah, in fact, the Senate Majority Leader, John Thune, was just meeting with the president and other officials about that today. So we have a lot to cover this hour, obviously, and the markets are basically waiting to hurry up and close so we can get this tariff announcement from President Trump. But let's look at where we're trading right now. Charlie Pellet is in New York with the chat. Hey, Charlie.
Thank you very much, Kaylee Lines. We got stocks higher across the board. Obviously, Trump tariffs, the big story. We got you covered on Bloomberg Television and Radio, 4 o'clock Wall Street time when it all comes down. But I got two other major stories we're following right now. President Trump telling his inner circle that Elon Musk will be stepping back from his advisory role in coming weeks. Now, this is according to Politico, and moments ago, the White House reacted to that report, calling it, quote, garbage. The other major business story we're following right now, a source tells Bloomberg, Amazon.com has submitted a bid to the White House to buy the social video app TikTok from its Chinese owners. Again, Amazon shares, they are advancing on that report. Right now, we got Amazon ripping higher. Part of a broader tech rally, but we got Amazon right now up by 2.7%. All about tariffs with the Dow, the S&P, NASDAQ advancing. S&P up 47 right now, 56.80 on the S&P, up by about 0.8%. The Dow up 293 now, up 0.7%. NASDAQ up 209 for the NASDAQ Composite Index, a gain there of 1.2%. Your 10-year 4.21% with the 2-year 3.92%. Gold up $16 the ounce, 31.30 where we stand, up 0.5%. West Texas Intermediate crude up 0.7%, 71.71 a barrel. And Bitcoin up 2% right now, 86,990 on Bitcoin. Tesla's vehicle sales down 13% in the first quarter, dragged down by the changeover of its most important model and international backlash against Elon Musk. Tesla shares today up by 4.3%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now, wherever you get your podcasts. I'm Charlie Pellet. Back we go to Washington. Once again, your hosts, Joe Matthew, Busy Day, and Kaylee Lines.
Busy day indeed. Charlie Pellet, thank you so much. Charlie reminding us that President Trump has a pretty packed agenda today. It's not just about the Rose Garden announcement at 4 p.m. Eastern time. As we just mentioned, he already had a meeting on taxes with Senate leadership as they work on budget reconciliation. He's also expected to have a meeting at the White House today with parties interested in buying TikTok ahead of that deadline on Saturday. And then we get to tariffs. And I just wonder if he hasn't made up his mind on that yet. When's the time to do it when you have so much on the calendar?
Does that mean Jeff Bezos is going to be in the Rose Garden later on as Amazon enters the fray here?
Yeah,
Larry Ellison, Oracle. It's going to be a who's who later on.
Yeah, certainly. And of course, all the cabinet, many members of Congress will be gathered there as well. All of them probably wanting the same answers we do, which is what exactly is the plan? Because basically the entire District of Columbia is still in the dark on that.
That's true enough. Never mind the budget, but that's a whole other situation if you're in the District of Columbia. We're going to talk to Marlin Stutzman, the Republican congressman, back with us today on Bloomberg to get his sense. As we mentioned, we're trying to feel our way through this. Our political panel will also weigh in today with not just, of course, the economics at play, but the politics. This White House would tell you promises made, promises kept.
No, that has been the line. The question is, does it ultimately mean that while he makes the promises on delivering things like tariffs and tax cuts, the economy doesn't necessarily reap the reward he promised it would?
How true. Anna Wong is with us. She knows a little bit about this. Of course, chief U.S. economist at Bloomberg Economics. formerly of the first Trump administration. Anna, it's great to see you. Welcome back to Balance of Power. This is all gut check from here, right? What do you think we're going to find out at 4 o'clock?
Well, we're just reading the tea leaves just as everybody else in the market. So the way I read the tea leaves is we have heard from Carolina Levitt that the tariffs will be effective immediately. That's one clue. Second clue is that Besant has told lawmakers in a private meeting that these announced tariffs would be a cap, quote unquote. And Trump also mentioned that he has made up his mind a long time ago. I think if you put all these dots together, it sounded like to me that it's looking like a very simple kind of either universal tariff of 10 to 20% or tiered between with one group at 10%, another group at 20%. Something quite simple rather than a country by country reciprocal, I match you, you match me, that type of tariffs, given all these clues.
Okay, so while we obviously don't know that for certain, I do wonder, whatever it is that we end up with, Anna, how much does it matter if they take effect immediately, how long they last? Because whatever the levy is that's initially announced, businesses will have to adjust to right away, right? Even if it's suddenly removed in 2 weeks, 2 months, who knows how long. How much does longevity matter?
So let's think about how much does the businesses have in terms of the cushion of waiting for that uncertainty. So we have seen that firms have front-run these tariffs in the last 3 or 4 months, right? From what I heard, businesses have enough inventory to last for three months without raising prices because they bought these inventories using the old prices, right? So basically by around summer, midsummer, I would say July or August is when businesses have to make a choice on should I buy more to rebuild my inventory at these higher prices, and should I pass on these prices or should I take a margin hit, right? And so I think the time we have until where these negotiations would take place immediately after these tariffs would be between now to July. And I think that the administration will lower tariffs for certain countries, but there are some structural barriers with, for example, China and EU that I think the administration would be a higher bar for them to be lowering the tariffs. But from the perspective of firms, I think overall, after this announcement, they will think that tariffs will. I mean, ultimately, the terminal level of tariff wouldn't be what it would be at the end of today. It would be somewhat lower, and our base case is that ultimately it would be hanging around between 10 to 15% effective, compared to today, which is about 4.5%.
So still big increase.
Yeah, still big increase.
So we could well see a parade of world leaders lining up in the West Wing starting tomorrow for the next couple of weeks.
Starting yesterday.
Starting yesterday. Well, I suppose that is true, actually. But the analysis we're hearing in many cases is that until that happens, and maybe even with that happening, this is a win for China, holding its first economic dialogue with Japan and South Korea in years. The potential of a trade deal that might not include the United States with some of our trading partners
you know
here.
what's
How
the
real
flaw
is that?
with that, Joe, is that all South Korea, Japan, and China are 3 of the biggest trade surplus countries in the world. So how is the 3 trade surplus countries, they are all selling to the U.S., so how are they going to create the demand for each other's market all of a sudden when they have been selling to the same country for years?
So you don't buy the fact that China wins?
I hear the same logic applies to how EU could counter the U.S., but they are all in the same boat. If you look at a very striking picture that someone like Brett Setzer posted on Twitter, the global imbalance is when you look on one side, all the trade surplus country, on the other side, trade deficit country. The trade deficit is completely dominated by U.S. in the world. The U.S. is the consumer of the last resort. How are these countries going to create a pact to absorb each other's excess supply?
The advantage is not there, is your point.
Yeah.
Well, and I guess by extension, as President Trump talks about these tariffs as basically being a way to entice more manufacturing in the U.S., what is the point of having greater American manufacturing if you don't necessarily have greater outside of the country buyers for that? Can the demand be generated by the United States alone? They have to have some kind of end market to bring all these goods
thinking
to.
more about producing for ourselves in mind. I think.
But does that justify the investment that would be needed to build these factories and hire these workers?
Look, I think economists like myself, we tend to have less short-sighted view of the world. We care about whether there's a recession tomorrow or, what will happen in a year's time. But people like President Trump and his economic advisors are thinking about 4 years ahead, 8 years ahead. So should there be a war, say, because lately there has been more news about like signals of wars, then I think U.S. would be well positioned to have steel in the country. That's just one example of why there would be a steel and aluminum tariffs. I'm not justifying them, but I'm just saying it's an insurance against a national security outcome that could potentially be very costly.
Well, it's interesting because the White House has justified tariffs on national security concerns. We've heard from Howard Lutnick, this is not a trade war, this is a drug war when it comes to Mexico and Canada. We've heard when it comes to Europe and our other partners that this is about simple fairness. At some point, you have to pick one, don't you?
It's actually all those things, Joe. So I believe that there's really not a good case for our trade war with Canada and Mexico, for example, because this North America region is so integrated, and then also there are allies for years and years. So for those, I don't see a structural tariffs vis-a-vis those countries. But there are other countries where the tariff barriers would take a higher bar to be lowered eventually, where there are structural barriers.
So keeping in mind, Anna, that we're getting this news in the week, we also get a payrolls report. As we consider not what is happening in the labor market now, but with that longer term view of what could be happening in the labor market in the future, if we're dealing with companies that have higher input costs, how quickly could that translate to trying to cost cut elsewhere with reductions in headcount, or at the very least not expansions in headcount?
Yeah, so I read that the Trump economic advisors are expecting a solid payroll report this Friday, and that's actually what we are expecting as well, just given how data are behaving. But so I think that their view is that the hard data, the solid hard data, especially in the jobs market so far, does not stop them from doing what they want to do. It is when the stock market, the labor market, sorry, not stock market, it's not stock market, it's the labor market. That when labor markets start tanking is when you will start to see more pivot from Trump and this willingness to take deals from other countries. And I think we are getting to that point. We are expecting the labor market to slow more visibly at the end of third quarter. But even at the end of March, looking at the daily payrolls data that we track, we're starting to see a faster deceleration in the pace of job growth. So I think next month's data, not this Friday's data, would be much worse than this month.
All right, Anna Wong, Chief U.S. Economist at Bloomberg Economics. Thank you so much for joining us, as of course we're trying to get as many economic takes to these policies ahead of their announcement as we can, including, of course, from those who have to make monetary policy decisions based off of what ultimately will happen. That would include, of course, the Federal Reserve. And actually, the Chicago Fed President Austin Goolsbee talked about tariffs on Fox earlier.
The problem of tariffs is they're a supply shock. At the end of the day, imports are about 11% of the economy. The fear is if it jumps out of the 11% lane, either the tariffs start applying to components and parts and intermediate goods, as the economists call it, and raise the cost of production for other industries, or people start freaking out and change their behavior. And if the consumer stops spending or business stops investing because they're uncertain or they're afraid where we're headed, that would be a bit of a mess.
So we want to get another take on all of this now and turn to Congressman Marlin Stutzman, the Republican representing Indiana's 3rd District, who is back with us on Bloomberg TV and radio. Congressman, always good to see you here on Balance of Power. For your constituents in the 3rd District in Indiana, what is the ideal outcome of this Rose Garden announcement? What balance do you hope President Trump strikes when it comes to tariffs?
Well, I think, Kaylee, in the long run, the goal is to have free and fair trade. One of the things that has happened over time is that other countries have, tariffed American goods going into their country, but we have very low tariffs on those countries. For example, Brazil, they charge 35% tariffs on U.S. cars going into Brazil, where we only charge them 2.5% coming into the United States. And I understand that some countries don't have the competitive advantages that we do, but we're the largest economy, and we should also believe that our partners, whether it's Brazil or whether it's the European Union or Japan and others, that it's good for both sides. And over time, what's happened is tariffs have built up against the American producer, and I think that what President Trump is doing today is leveling the playing field. There needs to be a reset to make sure that American productivity is respected and protected.
So are you hoping then for a targeted approach today from President Trump, or should it be an across-the-board levy and we'll bring things down as countries respond?
Well, I don't know. We'll see what President Trump lays out, but I know from as we look through different situations, one, for example, is Australian beef. I come from Northeast Indiana. We're in the agricultural space and manufacturing space. And my guess is that President Trump will take a targeted approach where he thinks it will have the most impact, but then also where, reciprocal tariffs could be de-escalated, and hopefully other countries will say, well, look, we could back these all down to zero. Let's have a free and fair trade. But for example, with Australian beef, all the way back to mad cow, if you remember, which has almost been 20 years ago, but Australia banned American beef from going to Australia. But America, we take a large amount of Australian beef here into the United States. And one of those breeds particular that I'm familiar with is Wagyu. And Australian Wagyu is about 50% of the American consumption. And so they're not willing to buy any of our product in Australia because of the ban. And so I believe that, we should tariff their beef coming into the United States. That way we have a conversation. And I'll tell you already, Joe, that they're calling and wanting to talk. And it's like, well, why do you have the ban on from 20 years ago? We're friends. Let's have a reciprocal relationship when it comes to beef. And so I think that's also the tool that President Trump is using, is to have those conversations with countries that they just simply have been ignored on the tariff issue for many, many years.
But should it, Congressman, actually be President Trump's tool to use? Article 1 of the U.S. Constitution says the Congress shall have the power to lay and collect taxes, duties, imposts, and excises. Is this really the right way to go about it? Isn't your role as a legislator to tackle things like this, not the role of the executive?
Well, I think, we work together. I'm not sure that every, member of Congress supports every tariff. I'm sure that it's going to go district by district in some cases. For us, in the 3rd district, we're a heavy manufacturing district. So the steel industry, which has a heavy presence in the Fort Wayne area, this is going to be helpful. Agriculture, there's some uncertainty about it. But I think that President Trump is really leading on this, and then we can codify, or we can have that debate in Congress. But I think the fact that he's leading on it is really helpful. He can take, the perspective from a macro level and talk about where there's inconsistencies or imbalances. And then, those of us in Congress, we can react accordingly. But I know that the America First agenda is a top priority for the Republican conference in the House. Speaker Mike Johnson has also been working very closely with President Trump on so many different issues that I know that the leadership for the House Republican Conference will be leading on this issue as well, supporting the president.
At one point, the conversation was about raising revenue, Congressman, and that revenue was going to help to pay for extending the Trump tax cuts. Is that still part of the picture here, or are you waiting to learn that like we are today?
I think it's still part of the picture. I was in a meeting the other day where the Congressional Budget Office actually said that they would consider taking in some of the tariff revenue as part of the budget as we're working through that. That was new information. We were told at the beginning of the year that they wouldn't consider tariff revenue for budgetary conversations, but I think that it should. And so I think as this moves forward, the picture will become more clear over time. But I don't necessarily see it just as a revenue piece. I really do see it as a trade balance where we have to reset with a lot of countries around the world who are our friends. And think about the money that we have spent as Americans globally for the defense of allies, and not only for ourselves but for the defense of our allies, that we've never received anything back for that. And so I think that the relationships that we have, we're a very generous nation, we're a very giving nation, and I know that Americans love to give, but at the same time, when there's $36 trillion of debt, we have a deficit and an economy that is struggling. There's got to be a new look at things, and that's what President Trump has done and brought the tariff conversation to the table.
Well, we're glad to have your perspective on this, Congressman, as you sit on the Budget Committee in the House. Meantime, the Budget Committee in the Senate and the chair of it, Lindsey Graham, it was suggested by Senate Republican leadership yesterday, could have the power to decide the policy baseline of the Senate's budget blueprint on his own, even if the parliamentarian doesn't rule that the current policy baseline is appropriate. Does that give you concern about the potential future of this legislation? Does it have to come from the Senate parliamentarian for it to have your confidence that it can get all the way through both chambers?
Yeah, that's a great question. I was actually in a meeting yesterday with the Treasury Secretary, Besant, who was talking a little bit about this. He was actually getting ready to go down to the Senate to have a meeting, and that was one of the topics that was brought up. And, and I think that, on both sides of the chamber, both sides of the House and the Senate want to, follow the process, but there's also concern about the parliamentarians' position and authority and their opinion or her opinion, and then also, Congressional Budget Office is another one. So I think that Scott Besant has been doing a fantastic job of helping with the discussion and looking at this from a perspective, because the scoring that the CBO takes doesn't always take in dynamic scoring. And one thing that we do know is that we want to keep the Trump tax cuts in place. If we can make them permanent, that would be ideal. Even if we have to extend them for 5 years, I would support that. But either way, it's really critical to keep the tax rates where they're at. This would affect, if they would go up, it would really affect small businesses across the country. And I know that's one of their top priorities.
Congressman, thanks for joining us as always. Marlon Stutzman, Republican from Indiana, with us on Balance of Power on Bloomberg TV and radio. Want to keep tabs on the markets before we assemble our panel. Charlie Pellet joins with the latest on Wall Street from World Headquarters in New York, just hours away from the announcement on tariffs. Charlie, how's it look?
Right now we are higher across the board, not just higher, Joe Matthew, but indeed very close to session highs on the S&P. Right now looking at a gain of 51 points. We're up by about 0.9%. The S&P at 56.83. The Dow up 316. That is a gain of 0.7%. Tech stocks, though, outperforming. NASDAQ up 1.3% right now. The NASDAQ 100 index up 1.2%. The 10-year at 4.21%. The 2-year 3.92%. Gold up $13 the ounce, now at $31.26. That is a gain of 0.4%. And West Texas Intermediate crude oil up 0.7%. 71.67 a barrel. Bitcoin up $1,700 now, up 2%, 86,936 on Bitcoin. The conservative media outlet Newsmax shares cut in half right now after a raucous two-day surge, fueled in part by retail traders that briefly made it larger than Fox Corp. Newsmax shares down today right now by 56.2%. And a federal judge has dismissed corruption charges against New York Mayor Eric Adams, bringing a permanent end to the case. Again, ahead of the big tariff announcement, S&P 500 index up 0.9%. Balance of Power continues right now. Back we go to Washington. Once again, your hosts, Joe Matthew and Kaylee Lyons.
All right, Charlie Pellet, thank you so much. Just over 3.5 hours to go. And no news, 2.5 hours.
Yes.
Math can be difficult sometimes. 2.5 hours to go. We still have not heard from the White House any kind of preview as to what exactly it is the president will be announcing at 4 p.m. Eastern time. But we have heard from the White House, at least via the press secretary, that something that was reported in Politico earlier is apparently, and this is quoting Caroline Leavitt here, garbage. It was a report that the president has told members of his inner circle, including members of his cabinet, that Elon Musk will be leaving his forward-facing role as a special government employee at the Department of Government Efficiency, or working with it fairly soon. Now, whether or not the accuracy of the story is in question here. This is Politico reporting. We can't speak to that, Joe, but it is interesting that the timing of it coincides with what was a loss for Elon Musk yesterday after an investment not just of his own financial capital to the tune of $20 million, but also a good amount of his political capital went in to the Wisconsin State Supreme Court race. He was backing the conservative candidate who ultimately lost by 10 points to the liberal candidate, Susan Crawford.
Today, Wisconsinites fended off an unprecedented attack on our democracy, and Wisconsins stood up and said loudly that justice does not have a price. Our courts are not for sale.
That's where we start with our political panel today. Jeannie Shanzano, our Democratic analyst and senior democracy fellow with the Center for the Study of the Presidency and Congress, joined today by Republican strategist Maura Gillespie, Blue Stack Strategies. Great to see you both and welcome. Jeannie, what does this mean for Democrats? Are people going a little far here? We're hearing this was the first good day for Democrats since the election of Donald Trump, and that may not be saying a lot, to be perfectly honest, as we look back over the past couple of months here. But these couple of statewide races, Wisconsin Supreme Court and the couple of seats that we saw actually stay Republican in Florida, mean what for Democrats?
Yeah, there is always a tendency to overread, but Joe, we have to give Democrats something. They've had a crappy few months, so they're out celebrating. And of course, Cory Booker last night, over 24 hours, helped buoy their spirits. So yeah, this was a big win in Wisconsin. It was also a necessary win. If Democrats had lost Wisconsin, that would have been catastrophic for them. Likewise, and I think Maura would agree, had Republicans lost those Florida seats, that would have been catastrophic for the GOP. So in some ways, this sort of reinforced the status quo. But there was something about the Florida wins. They were able to get those margins a little bit smaller than they were in 24, or a lot smaller. And they also carried Escambia County, and that was a big upset for the GOP. So there were some bright spots there for Democrats. But of course, they have to be careful about overreading, because we've been down this road before.
Well, and Maura, to Jeannie's points on the margins in Florida, I see there's kind of two ways of looking at it. One being that in both districts, Republicans won by double digits. The other being that those double-digit margins were half or less of what Republicans, including Donald Trump, were able to secure in those very same districts in November. Which side do you take on that?
Well, I think you could take the fact that people just didn't go out for this vote. I mean, it's 3 months after the Republican government took over, and we don't always see a large turnout when it comes to these off elections. And so I think with the economy not being great, people just didn't feel compelled to show up. It doesn't mean they went out and voted for the Democrat. It just means they didn't show up as strongly as they have in the past for elections, like for Donald Trump or for Mike Waltz. Or, you know, it was held by Cliff Stearns for years, and he would have somewhere up to 70+% of the vote back when he was the member. So this is a very stronghold Republican district. That wasn't a surprise. I agree with Jeannie's point about Democrats looking for victory somewhere, you know, looking to take some bright spots here because they've had pretty bad days leading up until now. So they're looking at this as, okay, we have something to grasp onto and hopefully can use this towards, the elections in November with Virginia and New Jersey.
The money trail is pretty impressive, though, when you look at the way Democrats used money in all three races, Jeannie, outraising the Republican 3-1 in Florida's 1st district, outraising the Republican 10-1 in Florida's 6th, and Wisconsin nearly 2-1, making it the most expensive judicial battle in U.S. history. How much of all of this was just about money?
Yeah, and what's insane about that is that you see there the people who raised the most money also lost. And so it says what we know about American politics. And Donald Trump has said this over and over. Money is important, but it doesn't guarantee you a victory, as I'm sure Elon Musk would attest to today. And likewise, the Democrats who raised big money in Florida. And of course, we didn't expect them to win. But one thing I think Democrats have to be very cautious about, and you just mentioned before the setup the Politico piece, Democrats have to be cautious about running against Elon Musk, because as Politico notes, Donald Trump could exit him off stage. And then what do Democrats run against in the midterm election? They have to keep their eye on the person in charge. This is Donald Trump's government. This is the GOP's government. It is not Elon Musk's. He's working at the behest of the president. And so Democrats have to focus like a laser beam on Donald Trump. And this announcement today at 4 o'clock is a big part of what they need to focus on, the economy.
Well, what about the way Republicans should be viewing Elon Musk now, Maura? Because we have seen evidence in the last several months of Republicans deciding to vote a different way, potentially change their behavior due to the threat of primary challenges being funded by Elon Musk. Is Wisconsin yesterday a lesson that even if Elon Musk throws his money at something, it's not necessarily something that you actually have to worry about? Or does his massive financial war chest, the largest, of course, of anyone in terms of wealth in the world, still mean you have to keep him on side?
I do think you're seeing that, especially in the Senate. They have a little more wiggle room, right? They have 6-year terms. And we saw, Rand Paul is standing with Tim Kaine on this, bill against tariffs for Canada. A couple others have joined them, and they're not as threatened by Elon Musk's threat, his I'm going to be involved in all the primaries. With the Doge thing and him leaving the White House, it was set when Doge was established and when it was announced that back when it was he and Vivek Ramaswamy, it was going to be dissolved on July 4th, 2026, America's 250th birthday. So it was already set, kind of in stone that this would be dissolved by then, and that's ahead of the midterm elections. And so, to Jeannie's point, the Democrats do need a new strategy. It can't be just targeting or just standing anti-Trump or anti-Elon. And I think what Republicans will do is continue to focus on the people. And those are who they're going to be hearing from when these tariffs come into place, because they're going to have to see whether their constituents are willing to play the long game and trust in Donald Trump's plan, because the short-term pains, especially on farmers and especially on those who are already hurting to afford groceries, how long can they hold on for, and how long can those members keep their seats is to be said.
It's kind of interesting, Jeannie and Maura. We really haven't seen Elon Musk since Wisconsin, have we? Since he donned the cheese head and gave out the $1 million checks. Would it be smart, Maura, for Donald Trump to not have Elon Musk standing next to him in the Rose Garden today?
It would be smart for him for Elon to maybe take a step back and to focus on the task at hand, which was supposed to be giving out guidance and assessing where our fraud, waste, and abuse is. I think that the excessive role he has played thus far isn't necessarily a net benefit to Republicans, and I'm sure the president and the White House have been hearing as much. So, again, Donald Trump talks about how Elon has this big job and he's doing this out of his own goodwill. Well, then, it does cause you to wonder, should he go back to that big job that he has and let those who are elected do the job of the people who elected them to do, ask them to do. So that's where I think his focus needs to be, is on what the people who voted for him asked him to do in terms of the economy and safety and security.
Well, when we consider what they asked of the economy, obviously, Jeannie, it was in part that they wanted to see prices come down. Most economists would argue the tariffs he is going to announce today, at the very least, threaten to bring those prices up. Even if it's not Elon Musk standing beside him, does Donald Trump need to kind of allow the blame for tariffs should things not work out in the opportune fashion the administration is hoping it will, be cast elsewhere, not just as him as president alone?
Yeah, absolutely. But, who else is there to blame? We are already hearing that Howard Lutnick may take some blame if this doesn't all work out the way Donald Trump intends. The reality is Donald Trump owns this start to finish, and Democrats have to focus on him. He is the one who put Elon Musk in charge of Doge. He is the one who put Howard Lutnick in commerce and all of these folks, and he is the one who's deeply committed, apparently, to tariffs. And the reality is his eye is off the ball. What people elected him to do was to bring prices down and grow their incomes. All of this craziness about tariffs on and off and on and off that have undermined the market, reduced confidence of businesses and consumers, isn't helping him. And he is doing what presidential candidates and then new presidents often do, overread their election victory. He's got to focus on what people brought him there to do. And we'll see today whether he does that or not. By the way, Kaylee, I forgot to say happy Liberation Day.
Oh, wow. That was nice.
And Joe, too, not just
Jeannie.
you.
Well, I appreciate
sorry,
that very
Joe.
much.
And Maura as well.
Yeah, no, all the way around, I feel
And
like. Thank
Maura.
you, Jeannie. That's very kind.
Jeannie Shanzano, Maura Gillespie, our political panel on this Liberation Day. At least that's what President Trump is calling it. Thank you both so much for joining us. But the question, of course, we have is just how liberating people will find this announcement to be. It probably depends in large part what the announcement actually is. And at the risk of beating a dead horse, as of 1:34 p.m., we still don't know.
I've heard a couple of different ones. I've heard Libation Day. I heard Doug Ford call it Termination Day. He's going to be talking with us on the late edition of Balance of Power.
Indeed, that's coming up at 5 p.m. Eastern Time as part of our special extended coverage, but we have more ahead here on Bloomberg TV and Radio First.
It's 1:40 on Wall Street. We do check markets all day long here at Bloomberg. We have got 2 hours, 20 minutes to go until we get the big event of the day, the tariff announcements out of the White House. Complete coverage on Bloomberg television and radio. 4 o'clock Wall Street time. Stocks higher ahead of that announcement. We're off session highs, but the S&P up 42 right now, up by about 0.7%. The Dow up 256, up by 0.6%. And NASDAQ is up 191 for the NASDAQ Composite Index, a gain of 1.1%. 10-year at 4.21%, the 2-year 3.92%. Gold up $7 the ounce, 31.21, up by about 0.3%. West Texas Intermediate crude oil up 0.8%, 71.80, and Bitcoin now up 1.5%, 86,536 on Bitcoin. We'll have more on tariffs for you coming up in just a moment right here on Balance of Power. Macy's clawing back more than $600,000 in cash bonuses from executives after an accounting scandal led to inflated pay. And Domino's Pizza will begin accepting orders through DoorDash, an arrangement that was previously exclusive to Uber Eats. And just getting word that AppLovin said to be a bidder for TikTok, that according to CNBC. Earlier, the New York Times was reporting, and Bloomberg heard from sources, that Amazon submitted a bid to the White House to buy TikTok from its Chinese owners. Again, recapping, stocks higher, S&P up 38 right now, up by about 0.7%. Balance of Power continues right now, and back we go to Washington. Once again, your hosts, Joe Matthew and Kaylee Lyons.
All right, Charlie Pellet, thank you so much from Bloomberg World Headquarters in New York. Charlie, always important here on the broadcast as he keeps us posted on the markets, and that's going to mean a lot to us as we get closer to the tariff announcement at 4 p.m. Donald Trump not only talking tariffs today, though, at the White House, Kaylee, he's talking TikTok. Charlie Pellet just put his finger on it.
Yeah.
By the way, this is before we got the breaker, the headline about Amazon, which Bloomberg is now reporting. There was a meeting to consider a proposal for taking over TikTok by Oracle, Blackstone, and a couple of other investors. This just got more complicated because now Amazon apparently is going to drop a bid.
Yeah, although the president has been saying there were multiple bidders interested in TikTok, but we have a lot of lingering questions. One being which bid is seen as most attractive at this point. The other being, will that include the algorithm, or will that actually be left to Chinese control? Of course, that was one of the main concerns of the bipartisan legislation that passed that would see TikTok banned or divested to begin with.
Yes, if you're not buying the algorithm, though, are you really buying TikTok?
Well, maybe we should ask this question to Mike Shepard, who, of course, leads our coverage of technology and strategic industries here at Bloomberg. So, obviously, Mike, there seem to be a number of players in the game. Our reporting indicates that Amazon's bid is not being taken that seriously. Why would it be? And if it's not Amazon's, who is?
Well, it's a great question, and we're hoping to get a little bit more clarity from this out of the White House this afternoon. You know, it's a full court press trying to figure out what is going on. But Amazon has a reputation for kicking tires on different companies and weighing a bid and then pulling away. And it did come a little bit later in the game compared to, say, some of the others that we've seen. Even Mr. Beast has thrown his hat in the ring with and then we also have Frank McCourt, who was interviewed by our colleague Caroline Hyde earlier today on Bloomberg Television, talking about his bid from Project Liberty. And they, interestingly, don't intend to buy TikTok with the algorithm. They are content to leave it in Chinese hands and then try to construct it on their own. And he says they have a way to do that. They have a price that they're willing to pay for TikTok without the algorithm. But I think you raised a good question. Why would you want this app without this influential recommendation feature that's powered it so effectively?
It's like kind of like buying Coke without the recipe, right?
That's a great way to put it, Joe, because it is sort of that secret sauce that makes it work so effectively. And yet maybe in this era of AI, there is a way to re-engineer it and perhaps do it a little bit more quickly and cost effectively too.
But would that be in keeping with the actual law, or does that matter if it's ultimately the Trump administration that is the enforcement mechanism for that law?
Well, you know, this is one of the, it's a conundrum. There are so many layers to this story of TikTok. And last year, a year ago at this time, we were talking about the push to see this divestiture ban legislation get through Congress. Ultimately, it did. It was attached, you'll both remember well, to the Ukraine and Israel aid package. And that kind of sped it through, and people hailed its passage, and Joe Biden signed it. And then as the time passed, and they had to actually find not only a buyer, but get ByteDance and the Chinese government to go along, that's where it became more difficult because ByteDance has no interest in selling this valuable asset. And the Chinese government likewise doesn't either. And they would need to sign off on any divestiture involving the algorithm because it is such sensitive technology.
Thanks for popping in on this. An important development here on the way to the deadline. Mike Shepard, of course, with us in Washington. I'm Joe Matthew alongside Kaylee Lines on this Tariff Day, I think we can call it. Yeah, they say Liberation Day at the White House, but of course, that's up for interpretation. We know Mark Zandi isn't thinking of it that way. The chief economist at Moody's Analytics joins us right now. Mark, it's great to have you as we count down to the announcement. I was taken by your statement earlier in the week here that if we do get the across-the-board tariffs, and want to be very clear, we don't know what the president will announce today in terms of reciprocals. Maybe there will be something across the board. But your worst-case scenario includes an immediate recession, an unemployment rate above 7%. What would that look like today?
Yeah, well, Joe, that is the worst-case scenario. That would be a 20% effective tariff. So that would put the tariff rate back to where we were, Smoot-Hawley, 1930s depression. So that's pretty extreme. I also, in that scenario, assume full retaliation. So China and everyone else retaliates in kind. So that's kind of a bookend. But if we got it, that would be a very severe downturn. Unemployment would go from 4 currently to 7+ over the next year and a half. So it'd be pretty serious. So I don't expect that, but that kind of gives you a sense of magnitude. I mean, my sense, Joe, and obviously this can go in lots of different directions in a couple hours, but my sense is that the president's going to try to figure out a way to give himself an exit strategy, just in case things go off the rails. So something to the effect that, well, we're going to raise tariffs, but if other countries lower theirs, we'll lower ours as well, and that will give him a way to pivot and move on. And that's why in my baseline worldview, the kind of what I think actually is going to happen here, I don't have a recession because I think he's going to figure out a way to pivot, declare victory, and move on. He's pretty good at that.
Well, so would that then, if it is an imposition of tariffs, but then they are either reduced or taken away entirely in relatively short order, Mark, that would feed into the transitory narrative, right? You may see a price adjustment, but they could easily adjust back, or at the very least wouldn't keep climbing.
Yeah, no, that's right. I'll take that. Give me that scenario. I mean, what we've been through here is not good. We came into the year with a really solid, well-growing economy, and the economy is now struggling. But there's still the economy is still in a good fundamental place. I think if we pivot here on economic policy, particularly the trade policy here quickly, the economy will regain its footing, and we should be fine. And by the way, that may be what the stock market's signaling here. Stock investors are kind of thinking along the same lines that. The president will figure a way out of this without actually raising those tariffs to 20%.
So if we kind of play this out a little bit more and we see tariffs from other countries come down, if the president succeeds in zeroing out, so to speak, our trade relationship with some of our more important partners, does this end up being a win? Are we talking about new levels of growth, a market that springs back to attention in that world?
Well, a win? When the president took office, the effective tariff rate was, 2.5% to 3%? A win would be getting back down to 2.5% to 3% and lower than that.
Okay.
I suspect that's not in the cards. So, but maybe we avert 20%. Maybe we get them back down to 3, 4, or 5, something like that. I'd take it, but I don't know that I go so far as to declare a win. I'm sure the president's going to declare it a win, but from my vantage point, I'm not sure I'd think of that as a victory.
Well, something else he says is a win are investments that have already been announced into the United States in terms of manufacturing capacity. He anticipates that more of that will be happening, as you won't face a tariff if you make it in the United States. But Mark, how long exactly will it take for that extra productive capacity to be realized, to build these factories, to get the appropriate workers, to actually have the output ready and available and supplying the market?
Come on, Kaylee, come on. Think about this for 3 seconds. Okay, you're a CEO of a global manufacturing firm, and you're trying to decide, should I invest in the United States? Next question you're going to ask is, well, what are the tariffs? And what are they going to be tomorrow? And what are they going to be a year from now? And because it takes, say, I'm a vehicle manufacturer, it takes 3 years to put up a vehicle manufacturing plant. What are they going to be in 3 years? And, oh, by the way, I want that plant to be around for what, 2-3 decades? What are the tariffs going to be 2-3 decades from now? These tariffs, even if we got crystal clear clarity on the tariffs today, this is exactly what they are, and I'm telling you they're going to stay there. Does anyone believe that? I mean, these are done under executive order. It's not written in legislation. This can be wiped out with the stroke of a pen, and likely would be. So I just don't see that argument. I don't get it. And there have been announcements, of manufacturers saying, "Oh, I'm going to invest in the country," but how do we know they wouldn't happen anyway? And how do we know they're actually going to follow through? You remember Foxconn? Go back to the President Trump's first term. Foxconn was this round number, $10 billion. That sounds familiar. Hyundai is also $10 billion. $10 billion investment. Go take a look at what's actually invested right now. So, I don't get it. I just don't see how tariffs done under executive order, and maybe they're not even legal. Are they legal? I'm not sure. Are they? I mean, I'm sure they're going to be tested in the court system, and maybe we'll figure this out 3 years later. But again, I'm the CEO trying to figure out whether this investment I'm going to make makes any sense 3 years from now. Does it make any sense?
So if you're that CEO, you're making cars on both sides of the border here, some in Michigan, some in Canada. Mark Zandi, you just grin and bear it knowing these things go away in a couple of years, as opposed to moving your manufacturing back to the U.S.?
Yeah, I mean, I think what I would do is I'd figure out, different trading patterns, different supply chains. Who am I going to sell to? I mean, the U.S. is not a reliable partner. I'm going to sell into it because it's a big market. I'm going to do my best, but I'm going to look for other markets and other ways of doing business. So, but to actually make a big investment based on those tariffs, I don't know how you do that. I just don't see it.
Well, and I wonder, Mark, how you're viewing this notion that these tariffs are not being imposed in a vacuum, that they're coming in tandem with an effort to reduce the size of the federal government and cut federal spending, also with the aim of cutting taxes at some point before the end of the year. Keeping in mind that during the first trade war in the first Trump administration, there was a subsidization effort for farmers specifically who were caught up in the retaliatory fire. Do you think that kind of subsidizing or stimulating to try to offset the effects is likely to happen this time around, given those new dynamics at play?
Yeah, it's certainly possible. I mean, one of the interesting kind of conversations recently is, suppose you put in these high tariffs, say it's 15%, 20%. If you kind of do the simple arithmetic, you take the 15-20%, you multiply by the amount of imported product that is tariffed, and you get a revenue number. You say, oh, look at all the revenue I'm creating. But that abstracts from the fact that when you raise price, demand falls. So if I'm going to raise the price of a vehicle, I'm going to sell less vehicles. So imports are going to decline, trade volumes are going to decline. It also ignores the fact that if you had those kind of actually impose those kinds of tariffs, you would get retaliation and you would get a recession. And if you got a recession, what would that do to tax revenue and to government spending? And then on top of that, to your point, there's going to be aggrieved parties. In President Trump's first term, it was the farmers. They got crushed by China saying, "I'm not buying your stuff," and they're doing that again already. And the farmers are struggling again already. And they say, please help bail me out. Effectively, give me a check to compensate for that, and that's a cost. So you add this all, up. You say, well, what at the end of the day, how much revenue am I actually going to generate? And by the way, I don't think the tariffs get beyond a year if you actually were 15 or 20%, you go into recession. So you can't count on those revenues going forward. So you can't say, oh, over the next 10 years, I'm going to generate X, because these tariffs aren't going to be there over the next 10 years. So that whole argument, I'm going to raise a lot of revenue, I find very specious.
Mark, I've only got a minute. Word is we're not going to see paper until after the president speaks. So in our remaining moment, what's the most important thing you're going to be waiting to hear from Donald Trump?
Well, I mean, I'm listening to that top line number, and then I'm going to look for an exit strategy, because if things don't go as planned, how do I get out of this in a reasonably graceful way? And so I'll be looking for that. If there's no exit strategy, then I get more concerned, but if there's some, I lower tariffs and if you lower tariffs, I lower tariffs, and you have that kind of mechanism built in, then I feel more comfortable with that. And I say, okay, this is going to play out like my baseline. We're not going into recession.
All right, Mark Zandi of Moody's Analytics here with us on Balance of Power in anticipation of that announcement just over 2 hours from now. Thank you so much for joining us. And of course, we will hopefully have more information in hand by the next time you see us and hear us on Bloomberg TV and radio by 5 p.m. Eastern Time.
That's entirely likely. Mark Zandi looking for the off-ramps. We're just looking for the details on tariffs, and we're going to have them for you. So stay with us here. Bloomberg Business Week on the way. The close followed by an extended edition of Balance of Power. We'll meet you back here 5 p.m. Eastern Time on Bloomberg TV and radio.
is Bloomberg Business Week Daily, reporting from the magazine that helps global leaders stay ahead, with insight on the people, companies, and trends shaping today's complex economy, plus global business, finance, and tech news as it happens. Bloomberg Business Week Daily with Carol Masser and Tim Stenivek, live on Bloomberg Radio, television, YouTube, and Bloomberg Originals.
And a very good afternoon, everybody. It is a busy, busy Wednesday on this April 2nd. So let's get to the setup at this hour. The countdown almost over. And in a couple of hours, President Trump, he's going to reveal his latest trade agenda.
That's certainly top of mind over the next 60 minutes. Also this hour, TikTok really in play as Amazon is now interested. Also an update on the future of Elon's career
in the federal government.
And in the middle of this, the AI world marches on. We've got two top voices, one from Google Cloud, the other from AWS. They're going to give us a gut check. First up, let's get a checkup on today's trade. Here's Charlie Pellet.
All right, thank you very much. Higher across the board, Dow, S&P, NASDAQ, all advancing. 2 hours to go until the scheduled tariff announcement from the Rose Garden. Complete coverage here on Bloomberg Television and Radio. S&P right now up 28, gain there of 0.5%. Dow Industrials up 166, up by about 0.4%. NASDAQ right now up 135, up by 0.8%. 10-year, 4.20%. Spot gold up $11 the ounce, up 0.4%. West Texas Intermediate crude 71.83 a barrel, and Bitcoin up 1.7%, 86,650 right now on Bitcoin. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thanks so much. Well, 2 deadlines top of mind this hour. We're going to get TikTok's April 5th deadline to sell and Amazon's bid in a moment, but the world's eyes, safe to say, on the White House, where a 4 p.m. meeting, President Trump, actually press conference, news conference, expected to announce a slew of tariffs and if we have a trade war in the making. For a quick reminder of where we are, especially when it comes to the U.S. economy, can they handle tariffs? Let's get to Michael McKee, Bloomberg economics and policy correspondent here in studio. Mike, what is the economic backdrop? We talk about this with you all the time, but can they deal with a round of tariffs? We are still waiting to find out what the exact details, but is it strong enough?
Well, it depends on what the exact details are, because if the tariffs are not too big or if they're on products that consumers don't buy a lot, then it's not going to be that bad. But if we get anything like the worst case scenario, they've talked about 20% flat tariff rate. People are going to really get upset about inflation and maybe cut back. They're going to be cutting back on buying, which then leads companies to cut back on staff and things like that. The picture doesn't make any sense. Nobody in the who is, as I said earlier, not on the payroll of the White House thinks that this is a particularly good idea. But again, the devil will be in the details.
Mm-hmm. So is there a chance that these announcements and what we hear from the president could be enough to tip the economy into recession?
It could. It would take a while, but it could. It's not an immediate
Play that out
subtraction.
for us. What would that look like?
Basically, what I was just saying is prices go up, especially if it's noticeable things like for food. If he does the Canada tariffs, we may see oil prices go up. And then people start cutting back on what they're buying. If we're tariffing clothing, maybe we're buying less clothing, and that hurts the department stores, so they lay off people. And we don't make a lot of clothes in this country, but manufacturers in other areas start to cut back. The auto tariffs could do huge damage. They start tomorrow. Mm-hmm. He's already announced those. Mm-hmm. If people stop buying cars, and look at how many cars sold in March as people tried to get ahead of that. And if the auto companies start laying off people, putting them on short shifts, then you're going to have the economy start to really, really slow.
Mike, is all protectionism bad? Might some of the tariffs and the revenue come in blunt some of the economic impact? Well, I asked this a little naively.
Yeah. It does and it doesn't. It does because, yes, if you raise $6 billion, as their people say, it offsets some of it. But what are you offsetting? You are going to pay the $6 billion. So even if they cut your taxes, it's just one, robbing Peter to pay Paul. You're one pocket to another. Right. So it really doesn't help in that sense. It can be used strategically if you have a case of dumping, and we've seen that with steel and other things like that. But generally, that hasn't even worked out. George W. Bush put taxes on steel and Obama on tires, and didn't really help.
So that's the focus certainly today, but we're also thinking big picture for the week, and we're already going to get a March payrolls report coming on Friday. Is this a more significant report considering the federal government layoffs or what Elon has tried to do at Doge, and also the testing of the U.S. economy that we've been talking about? Well,
it's probably not in terms of Doge because we are the surveys taken early enough in March that there hadn't been that much of an effect. And as you can see from the jobless claims numbers, there's a lot of confusion about who's actually fired and who's not fired. And
I think some people who've been affected are even confused by this.
You're not going to see a lot of hiring, but we haven't had a lot of hiring at the federal level. Government has mostly been state and local for the last couple of years. So you may not see that much in it this month, but it'll be coming up. The one thing to look for this afternoon, though, which will be interesting from Donald Trump, is what's the exit ramp? Like, does he say, if countries negotiate with me or whatever? Because if they just leave it, if he says this is permanent to raise money,
right,
then you got to worry.
Right, as opposed to Canada and Mexico, which has the exit ramp of, tariffs.
Figure out something that'll make me happy, and I'll take
border issues.
Which is why we need to understand what the mission is, right, with all of these negotiations, perhaps. And I think tariff is certainly a big instrument of that negotiation. Hey, Mike, thank you so much. Always appreciate it. Michael McKee, international economics and policy correspondent here at Bloomberg News. We now want to get to what was a red sticky here at Bloomberg about 2 hours ago. This is when a big headline crosses the Bloomberg terminal.
And that's that Amazon has submitted an offer to purchase TikTok. The company submitted a bid to the White House to purchase the app from its Chinese owner. This, according to a person familiar with the matter. The company did send its proposal to Vice President J.D. Vance. He's heading up efforts to help facilitate a sale of the video platform. And Commerce Secretary Howard Lutnick, too. This, according to the People. So, with what we know and why Amazon might want TikTok, with us is Bloomberg News technology and e-commerce reporter Spencer Soper. He follows Amazon very closely, been reporting on this company for years. He joins us, of course, from our Seattle bureau. Spencer, why would Amazon want TikTok? What would it do with TikTok?
So if you think about it in the simplest terms, right? People spend a lot of time on TikTok and people spend a lot of money on Amazon, and both of them have been trying to kind of become more of the other. So if Amazon were to gain were to buy TikTok, it would be very beneficial just in terms of having people's attention, where, right now they've got a lot of wallet share, but it's really a site where people dip in, buy what they need, dip out, which has been very good for Amazon. But if it could get people to linger around and be entertained there, all the better. People spend even more, and its advertising business will be that much more lucrative.
I think about kind of the merge of commerce, right, with TikTok. To me, it makes a lot of sense. Is that a big part of it, Spencer?
Yeah, exactly. You think about, like, Amazon is a place you go when you're ready to buy something, right? You don't really go there to kill time. You don't really go there to be inspired or discover things. But those are things that you do on TikTok. You might just kind of scroll through TikTok to kill time or follow people you think are funny or entertaining. But you also see products on there, and so TikTok is really trying to be a destination for discovering products, which Amazon never really has been. So that would be kind of the match that Amazon would be looking for.
Not to say, though, that the company hasn't tried to make it a place to discover with the social first videos and the option in the app to sort of have that content that's generated to try to create this social shopping experience. It's certainly not something that I spend a lot of time doing, but Amazon is certainly trying to do that. Hey, Spencer, before we let you go, regulatory issues around this potentially, especially with regard to the past contentious relationship that Bezos had with this administration?
Yeah, well, that's what you think about, that they're under antitrust scrutiny, and there was antitrust scrutiny about them buying like iRobot, so this would be like a massive acquisition. And is there like a new age in the Trump administration that would be more favorable to these kind of big deals? And especially since the administration is directly involved in making this happen, with J.D. Vance kind of running the show and running these bids, that makes it more possible for Amazon to swing big on acquisitions.
One thing I wonder, the bid first reported by the New York Times, you guys too here at Bloomberg reporting this out, that it's not being considered seriously by the administration, according to one person in the know. The company has declined to comment. How serious, Amazon, I'm calling you Amazon because you're Amazon, Spencer. How serious, Spencer, should investors be taking this?
Yeah, that's the $1 million question. And there's a lot of 11th hour bids coming in. Like after the news broke about Amazon, now there's a couple others who have been reported, like AppLovin, and maybe some consortium that includes like OnlyFans. So there's been a lot of 11th hour bids, and there can be reasons for companies to do that, even if they think they're a long shot. You know, one, it might just give them kind of a seat at the table to figure out what's happening and how this thing might be carved up in case they end up, you know, competing with TikTok. And then another reason is just to try to up the price in the event, hey, if I'm not going to get this thing, maybe at least make the person who does pay a little more.
That's what I was thinking, especially if Oracle is a serious bidder here, Spencer. Maybe this company, Amazon, just wants to say, hey, we want, or if Oracle is going to bid for this and we're a competitor to Oracle, we want them to pay more than they're going to pay.
Yeah, that's definitely part of the play, as well as some visibility into what's happening, because this is still a very complicated process. You need approval, not only a blessing from the White House, but you're going to need ByteDance to buy in and the Chinese government to buy in. So there's a lot of players here, and some, you know, I imagine anyone, even if they think they're a long shot, they just be curious about what the heck's going on, and putting in a bid might give them more visibility than sitting it out.
But we should know something at least by Friday, right? April 5th, because that's the deadline. Is that right? 3rd, 4th, 5th? Actually, Saturday, I think it is, right? So
sometimes you just got to have the calendar open and out. You know?
That's the second deadline.
Correct.
So who knows if we'll have another deadline? You know what I mean? It's like these deadlines can come and go, but yeah, that's the date for now. And supposedly there might be some news coming today about it.
yeah, we understand that the president's meeting with his advisors about it, right? Thank you. So appreciate it. Spencer Soper, as Tim mentioned, been following Amazon for so many years, understands this company. He's Bloomberg News technology and e-commerce reporter, joining us out there in Seattle.
Okay, so everything we've done for the last couple of weeks has certainly been through the lens on the backdrop of U.S. tariffs. It's something that touches all of the investment in business worlds, including potentially the AI investment world. And today at Bloomberg headquarters, our Bloomberg intelligence team is hosting Bloomberg's 4th Generative AI Conference. And it's an event that looks at Gen AI post the DeepSeek news earlier this year. And Carol, as a reminder for all of us, that really shook up the narrative around the AI build-out.
Absolutely. We are featuring a couple of speakers from the event, and that includes our next guest. Delighted to have with us Dave Brown, Vice President, AWS Computing and Networking at Amazon Web Services, joining us here in studio. Dave, good to have you here.
It's great to be here. Thank you for having me.
There's so much going on.
There is.
I do need to ask you, we know this isn't your world. Nothing happens in a bubble. You were just listening to Spencer. I thought I saw you chuckle at one point. The report about Amazon putting in a last-minute bid, you know, I think about AI. It is about content. It is about data. And I just wonder, how might a social media site like TikTok make sense in an AI world, whether it's at Amazon or somewhere else?
Well, in terms of Amazon's bid, that's not something I'm able to comment about, obviously.
No memos from corporate about this?
Nothing at all. I walked into the studio and I saw the news. So, but ByteDance has been a really good customer of AWS, and honestly, a customer that's actually used a lot of compute and is now using a lot of AI. And one of the things we're excited about what they've been doing, and unrelated to any of the news that you might be reporting, is they've used a lot of the custom accelerators that we've built at AWS. One of the challenges with AI, is how do we get the cost down? How do we make sure that it is affordable for every company out there that thinks they could use it in some way that would change their product? But really, we have to be able to get the cost down. And one of the ways we can do that is through things like you saw with DeepSeek, improving the models, making the models simpler, making them easier to train. But the other way is to build different silicon, build silicon that's able to get the cost down for customers. And so ByteDance has been a big user of our custom silicon in the very early days of Inferentia, which improved inference models. They've also consumed Graviton, which is our custom ARM chip. And they're also using our Trainium chips as well. So we work very closely with ByteDance from that point of view.
How do you make sure that you keep a company such as ByteDance as a customer when there is so much competition in this space? I mean, think about it from the perspective of the 3 biggest players. You, of course, Microsoft Azure, and then Google Cloud. And we've seen a big investment. We'll talk about that for Google just in the last couple of weeks. How do you make sure that you stay ahead, in your view, of the pack and keep these customers from jumping ship?
I think there are a few things. I think one of it is innovation. The cloud has just brought an enormous amount of innovation into the corporate world.
But some people might look at this and say, is this a commodity at this point?
I don't think so, because my next point would be execution. And execution really, really matters. It's one thing to say we have the hardware.
What does that mean? I feel like,
absolutely.
Like executives throw out execution all the time. What does it mean in your world?
Well, what it does mean is, running AI, for example. So the servers behind AI, whether you're running an NVIDIA GPU or you're running some custom silicon, such as our Trainium chip, they're not easy machines to run. They're incredibly complicated. They're incredibly hard to make sure that they're highly available. They also need incredibly advanced networking capabilities. So we've had to build network capabilities to be able to bring hundreds of thousands of these accelerators together in a single cluster. Now, at AWS, we spend a lot of time making sure that we provide those clusters and those systems to be as highly available as possible for our end customer. And so when you choose your technology, if you're running on a solution, whether it's something you built yourself or a provider, and that's not working for you, that's what I mean by execution. It has to be flawless and it has to work. And at AWS, we think that's one of the ways we're able to differentiate ourselves.
Are you at all worried about overbuilding? Like obviously with DeepSeek, the narrative all of a sudden, like in a heartbeat, switched in terms of, well, maybe we can do this more cheaply. Maybe it doesn't require the build out that we've been talking about for more than 2 years.
Yeah.
Are you worried about overbuilding? Are we possibly in a bubble when it comes to
Well, I think from our point, certainly. Well, from our point of view, we're not really listening to sort of the narrative. I think the narrative is very interesting. We've been following it. What we're listening to is customers, and what do customers want to do with AI? There's certainly no shortage of customer demand for the chips, right? Whether it's NVIDIA chips or our own custom silicon, you've seen partnerships.
No doubt about that. Demand. And the demand is smart because it's being put to use and it's going to be monetized.
Yeah.
No worry.
Well, I mean, the other thing is you have to make good investments. And so the trick is to say, what are we building in terms of customer demand? What are we building in terms of the narrative? And I think from a customer demand point of view, it's very, very strong. We expect it to continue to grow. And we're very comfortable with the investments that we're making.
So it brings us back to the way that we started this conversation. We're speaking to you on Wednesday, April 2nd, ahead of President Trump's announcement that's set to come at 4 p.m. Wall Street time from Washington, D.C. So we don't know what he's going to say at this point. How do you watch an event such as that? How do you watch tariffs? How does that affect your world?
Yeah, I think one of the things when you're running what is probably one of the largest supply chains in the world, right? We have to think about every single component, whether it costs a few cents or it's millions of dollars within our supply chain.
You're talking about the AWS side,
the AWS,
not the retail side.
Not the retail side.
Which is certainly effective.
The retail side is certainly helpful to us and has taught us a lot about how to run an effective supply chain.
Right.
And so on the AWS side, running a supply chain, we've got to think about every single possible outcome. The sort of things that you're talking about now with regards to tariffs or global uncertainty, whatever it might be, we're going to think about how that would affect our supply chain. And we've put mitigating steps in place, and we're thinking about these as we build to make sure that any outcome means that we can still serve our customers.
What are some of those mitigating steps that you've put in place?
There's lots of things you can do from a supply chain point of view. A lot of the silicon we manufacture ourselves. We always think about multiple suppliers.
Like, are you stockpiling this stuff right now?
I don't believe we're stockpiling, but there's many, many things that we're doing to ensure that we're going to be okay. Such as making sure that we have multiple locations for servers, such as making sure that we have a cost structure that we think is maintainable for our end customer. It's supply chain technology, basically.
Is most of your supply chain safe in terms of, let's say it's an all-out trade war?
The reality is, I think, in the IT space that we're dependent on a global supply chain, not just AWS, but the world. But our chips are made, most of them are manufactured in the Far East. Most of the technology and cloud comes from the US. And the reality is we're living in a global supply chain. And we're going to have to take whatever the announcement might be later today and understand how that affects the supply chain that we've built out to be as redundant as it possibly can be. But we're going to have to see what happens.
Is there a spectrum in terms of the cost hit that you think you could take as a result of these tariffs?
That's not something that I think we've been discussing. I think there will be things we'll have to think through, but I don't have any sort of spectrum in mind.
What about thinking about raising prices for customers as a result of higher input costs?
That's something. I think a similar situation would be sort of the energy prices increases that we saw, during the COVID time. It was energy shortage and slightly after COVID in Europe, and that was a big question back then. Is AWS going to raise prices because we've seen energy prices spike in Europe? Other providers did raise prices at that time, and from an AWS point of view, we were able to actually not raise prices on our customers and ride out that increase in commodity prices, and we were able to get back to a better cost structure for ourselves after this. And that's really what we're looking to do. We'll have to see what happens later today and see how supply chain holds up.
I am also curious about DeepSeek in terms of what might be a more efficient AI model, how that is affecting the design of your own chips at AWS, and kind of how you think about how AWS offers compute services and so on.
Yeah, DeepSeek itself, it was good technology. It came out. I think it surprised a lot of folks. We're expecting to see these kinds of significant improvements, step function
You
improvements.
weren't shocked by DeepSeek?
Well, certainly the news, it wasn't something that everybody knew about. But what I wasn't just shocked about is that we're going to see these order of magnitude improvements in models. I'm expecting more. Like, the technology is so new still, and we are going to see massive improvements. And I think, the one thing is when you do see a cost reduction in these models, what it does do is it unlocks companies to be able to deploy more. And so while it's cheaper to do, it just means that you can do more of it. And that's one of the reasons why we're not worried about some of the investments we've made, because we can see the demand. We know if the price goes down, our customers are going to do more. They're going to change the user experience for more of their customers. And so, that's what really excites us about the opportunity.
Really cool stuff. Great to talk with someone like yourself who's kind of front row seat to all that's going on in AI. Dave, thank you so much.
Great. Thank you for your time.
Dave Brown, he's Vice President of AWS Computing and Networking at Amazon Web Services, joining us here in studio.
Hey, let's get a check of the trading day top business stories. Send things on over to Charlie Pellet, who's standing by. Hey there, Charlie.
Hi, thank you very much. And here's what's going on. We've got Amazon moving higher by 1.6%. We are exactly 1 hour, 40 minutes away from the big announcement coming out of the White House, 4 p.m. Wall Street time. We got you covered on Bloomberg television and radio, and of course, reaction after we get the actual announcement. S&P right now up 13 ahead of the tariff announcement at 56.46 for the S&P, a gain now of 0.2%. The Dow up 71, up by 0.2%. NASDAQ up 74, gain there of 0.4%. 10-year 4.20% with a 2-year currently yielding 3.90%. Gold now higher by $10 the ounce. Spot gold 31.23. That is a gain of 0.3%. And West Texas Intermediate crude 71.80 a barrel, up now by 0.8%. Bitcoin up 1.5%. Now Bitcoin at 86,479. The conservative media outlet Newsmax is retreating today, pausing its IPO rally, which saw shares surge 2,200% since its debut earlier in the week. Newsmax right now is down by 68.4%. And a federal judge has dismissed corruption charges against New York Mayor Eric Adams, bringing a permanent end to the case and capping an extraordinary series of events that sowed discord within the Justice Department. Again, recapping, stocks higher, S&P right now up 14. That is a gain of 0.3%. For on-demand news, 24 hours a day, subscribe to Bloomberg News Now, wherever you get your podcasts. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. Well, as we mentioned, underway just up a floor at Bloomberg headquarters, our Bloomberg Intelligence team hosting Bloomberg's 4th Generative AI Conference. And we wanted to get more into what is really going on in AI. Just had a great conversation.
If you're not here for the conference, there's always the 5th annual conference next year. So come for that one.
Exactly. Hey, listen, just fresh off his panel, they talked about AI and security, is Phil Venables. He's Chief Information Security Officer at Google Cloud, joining us here in studio. How are you?
All good. It's a good day to be here. It's a great place. A great event.
It is a great event. Listen, our BI team, they just kind of dig into really the specifics of stuff. I want to just first start, we asked this from our other guest from the Bloomberg AI event, and that is, when you think about the global macro, here we are on a day where we are obviously taking cues, actually most days, out of news from Washington, and whether today it's on tariffs. What of tariffs or the global macro think is really top of mind for you in what you do on a daily basis?
So I'm not really kind of involved in the side to really kind of talk about tariffs, but we certainly, when you look at the kind of the global geopolitical situation, one of the things we see all of our customers around the world are looking to us for help on defending their cybersecurity, whether it's from criminals or nation states. And again, they look in any conflict now, all conflict has a cybersecurity dimension. And so they're looking to us as a leading security provider, whether it's on our own platform or with our tools to help them.
Does it pick up because of the tensions that we're seeing right now between the U.S. and formerly or still its allies? Like, are you seeing any kind of uptick?
Yeah, not at this stage.
Not at this stage.
I mean, and that's not necessarily a good news story, because there's a constant backdrop of cyber attacks all around the world that many companies defend against, and so do we, and we help all these companies defend themselves.
But have you seen a change in perhaps nation states such as Russia making attacks or trying to find vulnerabilities in your system just in the last couple of months, as we've seen a change in policy toward Ukraine, toward Russia from the White House?
Not any distinct new level, but again, there's a constant background level of attack. You do see, in particular, Russia targeting the supply chains of organizations helping the Ukraine war effort.
Interesting.
But that's generally kind of all companies involved in that. We defend our platform every day against a myriad of attacks.
Would you say that there are certain geographies that produce more of these attackers? Like where geographically are you defending from?
I think organized criminals are all around the world. There's various concentrations. The big four nations we look at all the time as sources of attacks: Russia, China, North Korea, Iran. But cyber offense is a global phenomenon, not just those
Who's the most sophisticated?
I think, you look at China's attacks recently and some of the well-publicized events, the so-called Volt Typhoon and Salt Typhoon events that have originated in China. I think a lot of these nations are quite sophisticated. I think China has been the more aggressive and assertive in recent times. Russia has got a history, but they're all still maintaining their offense.
All right, so what does Wiz bring you? I got to say, when this deal crossed the Bloomberg terminal, of course, you guys, $32 billion acquisition, Wiz, a startup, biggest cybersecurity-focused deal in history. Why do this deal? What does it bring you guys?
Well, so it's all about multi-cloud. So one of the things we encounter in our support for our customers is most of our customers are running on multiple clouds. They have on-premise environments. They have multiple SaaS companies.
Right.
And the big important thing is how do they maintain a layer of security consistently across all of that? Wiz has grown a tremendous product and business to do that. We already have been focused on multi-cloud security, multi-cloud operations, multi-cloud tooling. And so it's a natural affinity for us. How do we support customers where they are in multiple clouds? That's the big impetus.
Is AI going to complicate all of this in large language models? And it just feels like the build out continues, Phil, and whether it's on premise or not.
We think AI actually gives defenders a more structurally gives defenders an advantage versus attackers.
Why?
Now, attackers are using AI.
Yeah.
They're using it for misinformation, disinformation, frauds, many things. But from a defensive purpose, AI empowers defenders because we have the data, we have the context, we have the ability to use it unique to our organization, and our customers are finding that. And so there's a structural advantage in how defenders use AI. Now, of course, they've got to take advantage of that advantage, obviously. But generally speaking, we're seeing more advances in the defensive use of AI than we're currently seeing on offensive use of AI. But the attackers are going to make use of AI in the future as well.
Can you characterize how many steps in general you are ahead of the most advanced attackers?
It's hard to do a kind of comparison like that because you always have to look at specific attacks. But the main thing we're focused on with our threat intelligence capability, our defensive capability, is just constantly and relentlessly upgrading our infrastructure and then providing that security upgrade to our customers through our platform and products.
How quickly are things moving right now, especially on the AI front? I speak to some folks in the AI world who say, we're making leaps and bounds within 12-week periods at this point. The pace of innovation is unbelievable.
Oh, yeah. I think the pace of innovation is increasing, whether it's on model development, whether it's on the platforms that run the models, that contain the tooling to let people get the best out of the models, all the way up through what we're seeing now in a revolution of how we're deploying AI agents to orchestrate business processes and ultimately parts of our lives. And we're all working very hard to look at how do we make sure the agent environment is secured in the same way that we would expect.
How fast is all of this happening? The changes, the challenges, like we keep bringing up DeepSeek and how that was, earlier this year, kind of a rethink all of a sudden. And I'm just curious how you guys are seeing it because you're dealing with it day in and day out. We obviously get the headlines, we get the announcements from the different companies and try to keep up and watch what investors are doing. But I'm just curious.
So we're seeing it internally. We're one of the few companies that has the whole stack of AI from the models to the hardware to the software to the platform infrastructure. And so we see in every part of what we do constant innovation and meeting customer expectations and future customer demand. We also see it because we host many other models on our platform. A big part of the value is the platform we bring where customers can choose not just our models, but other models as well.
So what's right in the narrative that's being talked, certainly in the investment world, what's maybe wrong?
I don't think, I'm not really seeing anything that's wrong. I think mainly people are looking across the environment and seeing how can we make best use of this technology to fit our particular business need. And we're seeing more and more enterprises, with our help, getting more sophisticated about how quickly they can not just tap into the innovation, but make that innovation productive in their business.
You mentioned the agentic side of things, and I want to talk there a little bit as far as defense and offense go. Something that I could imagine concerning people in your position would be the information that agents have and the information that agents are given. How do you ensure that what agents are doing, whether from a consumer perspective, it's booking a vacation or booking flights, which you can do, with ChatGPT's $200 a month plan. How do you make sure that the information that they have stays safe, stays secure, and it really isn't used for bad stuff?
Well, so it all comes down to who's building those agents, and this is why I think it's important in this environment to be.
Well, the way it's going, everybody's going to be able to build
that's right.
it.
And so ultimately, you're going to have to, like, the tools we provide people help people build agents that have privacy properties, are controlled, are secured. But ultimately, we're all going to be responsible for making sure we look at the agents we choose to use should have a degree of trust from the companies we get them from. Now, we and many other companies are working on multiple different standards and frameworks to equip everybody through the platforms with the ability to run agents securely. But there's a lot of work still to be done on how you would delegate your privilege to an agent to act on your behalf. And everybody's working on that.
Yeah, the autonomous, right? I mean, in terms of agents and like being able to kind of keep going and make decisions and stuff like that's tricky.
Well, and make decisions under the constraints you give it.
Right, or pull in stuff that you don't necessarily want them to do, right?
And how a company constructs an agent to act on your behalf and give you the transparency and feedback about what you want it to do is going to be a key differentiator for companies that build these things.
Hey, 30 seconds before we let you go, I always like to ask people in your position for one tip on how we can stay safe in this new cyber world.
So I'm talking my own game here, use the platforms and the security defaults we built into the platforms. So we spend a lot of time thinking about how we ship product, how we ship platforms. We make the defaults as strong as we can to protect people who come onto the platform, use the defaults, use the secure by design that we provide, and people go a long way.
All right, great stuff. Thank you.
Awesome.
So appreciate it. Phil Venables, Chief Information Security Officer at Google Cloud, joining us here in studio. All right, now let's get to some of the news that certainly has caught our attention. This has to do with New York City Mayor Eric Adams, and that is that a federal judge dismissed corruption charges against Eric Adams, bringing a permanent end to the case and capping an extraordinary series of events that sowed discord within the Justice Department.
With more on the judge's ruling, we turn to Bloomberg's legal reporter, Ava Benny Morrison, who joins us from New York. What exactly was this ruling? Is that it? Everything thrown out?
It certainly looks like it. The judge really took his time considering all the arguments that have been playing out in the courthouse over the past few months. And he reached the decision today that everyone had been anticipating, that he was going to dismiss the case against Eric Adams without prejudice. Now, that last bit is important because that means this case can't be revived down the track. You may remember that the Justice Department in Washington had wanted to dismiss the case with prejudice, which would have given it the option to bring back the case against Adams if they felt the need to. And this led to concerns that Washington wanted to maintain leverage over New York's mayor, which didn't seem to sit well with the judge.
It's interesting, too, because right in that ruling, the judge criticized the effort by President Trump's Justice Department to leave the refiling option open. What is that?
Yes, he referred to this situation as unprecedented, and it was certainly something that I haven't reported on before. The judge said that it was very clear that everything here smacks of a bargain, dismissal of the indictment in exchange for immigration policy concessions. But he warned that dismissing the case without prejudice would create that unavoidable perception that the mayor's freedoms depended on his ability to carry out the president's wishes. So that's why he decided to dismiss the case without prejudice.
So basically, the mayor can do whatever he wants, right? In terms of even whatever he agreed to maybe with President Trump, because he doesn't have to worry about a refiling.
That's right. He doesn't have this case hanging over his head anymore. So some may argue that he doesn't have the pressure of having to do what Washington wants him to do, but we saw him today outside Gracie Mansion, and he was holding up a copy of FBI Director Kash Patel's book, Government Gangsters, which is very critical of law enforcement. So we've had little indications from him over the past few months of him kind of edging closer to the current administration. Whether he decides to continue that stance, we don't know.
Is that the book? Is that the book with the list in it of people?
I'm not sure. I know that in the book he's been quite critical of law enforcement and the way they go about things. And Adams made the comment that he had to turn to that book to find the rationale for the DOJ bringing the case against him.
20 seconds. All of his legal problems. We know he has political challenges. Are his legal problems over? 20 seconds.
It certainly looks like it for the time being. He may have avoided a criminal trial, but he's still facing an uphill battle when it comes to politics. He's facing several candidates who want to unseat him, and a string of polls have put him losing the primary election in June.
Yeah, court of public opinion can be pretty rough, especially when you're New York voters or New York City voters. Ava, thank you so much. And I say that with admiration. Ava, thank you so much. Ava Benny Morrison, legal reporter at Bloomberg, joining us in New York City.
You're from New Jersey, are you sure?
Yeah, but I'm like, a stone's throw across.
Okay, just wondering.
Went to college in New York, worked my whole time in New York.
It's 2:40 on Wall Street. We do check markets all day long here at Bloomberg. We've got 1 hour, 20 minutes to go until the scheduled tariff announcement. 4 o'clock Wall Street time is what time it is scheduled for. That announcement coming from the Rose Garden. We got complete coverage. We'll have reaction and analysis both on Bloomberg Radio and television beginning at 4 p.m. Wall Street time. The Dow, the S&P, NASDAQ all moving higher. S&P right now up 20. That is a gain of 0.4%. Dow Industrials up 120, up by 0.3%. The NASDAQ Composite Index up 95, now up by about 0.5%. 10-year at 4.20% with a 2-year 3.91%. Spot gold, little changed, up $8 the ounce, 31.22, trading close to a record, up by about 0.3%. And West Texas Intermediate crude oil up 0.8%, 71.78 a barrel. Bitcoin up 1.5%, 86,557 on Bitcoin. Intel CEO Lip Bhutan says the chipmaker will be spinning off assets that are not central to its mission and create new products, including custom semiconductors, to try to better align itself with customers. Intel shares, they're down today by 0.5%. We have a date and a price for Nintendo's newest game console. Nintendo will release the Switch on June 5th. The new product will start at $450 in the United States. And Roblox has announced new tools to help parents control how their children interact with strangers on its video game platform. Recapping Tariff Wednesday, stocks higher, S&P up 23, up 0.4%. For on-demand news 24 hours a day, subscribe to Bloomberg News now, wherever you get your podcasts. I'm Charlie Pellet. That is a Bloomberg Business Flash.
It is indeed. All right, Charlie, thank you so much. All right, to our top story of the day. President Trump's deliberations over his plans to impose reciprocal tariffs are coming down to the wire, with his team said to be still finalizing the level and scope of new import taxes that he is slated to unveil this afternoon, expected to happen during Bloomberg Business Week. Let's head to our Washington, D.C. bureau and to Josh Wingrove, Bloomberg News White House reporter. All right, Josh, first of all, I am curious what everybody's talking about in the White House press corps. Is it tariffs or Elon's future?
Well, I certainly am focusing on one because it's being actually coming from the White House. White House is denying that story on the Elon thing, but also kind of acknowledging that there was always a fixed end to that. So that is one kettle of fish. We've sort of had, kind of a head of lettuce type of vibe, waiting to see how long that relationship will last. But as of now, on record, the White House is saying that Trump and Elon remain on the same page. The tariff stuff remains really in flux. And, this, for something that has been promised for so many weeks and, so many, sort of questions have been kind of batted away, being like, it's coming April 2nd, it's coming April 2nd. It does not seem like they have entered today with a firmly nailed down plan.
Well, okay, maybe something's not firmly nailed down, but what's on the table at this point, Josh?
As recently as last night, they were looking at 4 buckets to basically, and these are sort of their world tariffs that are across the board, as opposed to specific ones on China or sectoral ones like we see it on steel and aluminum and autos, and are still expecting on other things like lumber, like semiconductor chips, pharmaceutical drugs, and copper. So these ones started as a global tariff, and then they went to a reciprocal tariff where Trump was going to sort of do math to figure out, all his grievances for any one country and then pick a number that reflected those. And then they went to a tiered thing where there might be a few tiers, so, 10% or whatever for one group of countries, higher for others maybe. Then the reporting was that went away and then went back to maybe reciprocal, and then back came the across-the-board global tariff, and then back, it's all over the map. And then the fourth option is sort of a pared-down version of the across-the-board global tariff. So those are the 4 that have been swirling around that. All those would be significant, right? Some are going to be bigger than others, but I think people that are not paying close attention to this might risk sort of losing the sight of the scale of this. Whatever he does, this will be one of the biggest tariff announcements in American history, if not the biggest. This country is obviously pretty reliant on imports for its economy, including in industries that Trump is trying to maintain and grow here in America. For instance, American manufacturers who get inputs from abroad as part of their supply chains. So the impact of this will be significant. Republicans are, some of them are holding their breath a little bit, stopping short of fully criticizing the president, but you can tell they're a lot more nervous about this than they are about virtually any of his other policies. So we're watching to see the scale. We're watching to see, exclusions, although Trump has really downplayed expectations for those. We're watching to see how this will link with the tariffs that are already in place on China, Canada, and Mexico, and that came with a bit of an exemption for USMCA traded goods. All this is unclear as we sit here, just over an hour before the announcement. So stay tuned.
Why is this coming down to the wire? And is it because countries and leaders are reaching out? Is it because different officials, administration officials, are getting the ear of the president? What is it?
It's a little unclear. Countries and leaders are reaching out, as are business groups, with mixed success. I mean, the auto sector, for instance, did win that exemption from those Canada and Mexico tariffs a month ago, and then Trump has sort of complained about that and almost, signaling he doesn't plan on giving that again. The wrangling lately just seems like there is division within the administration over how to proceed. And I should note that you'll find very few economists outside of Trump world who think that, for instance, a flat 20% tariff on all imports from every country, which, by the way, would be on top of other tariffs like steel, would be good. That is something that would be of such scale that people would worry it would be a heavy, heavy headwind to growth, if not just sending the U.S. straight into some sort of downturn. At what scale, I leave others to guess at. But that is a big, big thing. And so you can appreciate why even within the administration, there would be debate over it. I should also note for people who are, keeping half an eye on this is way bigger in scale than the stuff Trump did in his first term. He likes to talk about, hey, we did this in the first term, growth was still strong, it'll be fine, we're going to reinvigorate American manufacturing. It is just so much bigger now what they're talking about than the first term, when it was things like steel and aluminum with all kinds of exemptions, including for countries that the U.S. is on friendlier terms with. There's a broad bipartisan support for instance, tariffs on China, both broad tariffs as well as sectoral specific ones on critical goods like chips. But very, very, very few people have been calling for these sort of across-the-board tariffs. But Trump is an avowed believer in tariffs. That should not be missed in this discussion. So you have to assume that at least some of these discussions are sort of the advisors trying to fill in the landscape for Trump, who's his starting point in this is probably that he wants tariffs, believes they're good, believes that they will reinvigorate American manufacturing. I should note, of course, automakers are one that he talks about all the time. They have been very muted about this. They are not jazzed. They are not lining up to say this is a good idea.
Hey, Josh, Mike McKee was in our studio a little earlier in our program this hour, and he reminded all of us to really keep an eye out for any off-ramps that are announced this afternoon. This is in the context of, okay, we understand tariffs on Mexico and Canada. In this context, the president has talked about off-ramps being border security, for example, a decrease of migrants coming over, fentanyl, and the like. What has your reporting told you about potential off-ramps for this broader swath of tariffs?
Here's the scenario for that I think markets would react really positively to, and that is that those off-ramps include windows for negotiation, an elimination of the fentanyl-related tariffs on Canada and Mexico and China, replacing them with the announcement today, as opposed to stacking them and essentially doubling or whatever they are. Obviously a rate, I guess, would be the third one, just like, scope and being narrowing. If he comes in with a rate that is lower than people worry and says this is a starting point for negotiations that might bring it down, he's going to have a lot more support, and some people might breathe a sigh of relief. Secretary Bessent, the Treasury Secretary, has sort of signaled that is an approach, saying yesterday to Republican House members that today's announcement will be sort of a cap and, a high water mark, and then we're going to come down from there as negotiations happen. Maybe, of course, the pessimistic view on that would be that other countries have tried sort of jumping through those hoops, namely the Canadians and Mexicans on the fentanyl stuff, and they still got hit with tariffs, although those were later clawed back. I should note they were clawed back, though, because of domestic outcry, not because Trump thought that they checked any particular boxes. And so that is the sort of off-ramp here. Trump has so much ambiguity around this that he absolutely has a window to save face and also come out with a more narrower targeted vision of this that will let a lot of the people who are really worried about the scope of this exhale, or at least exhale a little bit. The flip side of that is there's so much ambiguity of this that there's a risk that markets are underpricing how serious this guy is about tariffs. And if he comes in with fire and fury, then, that's where he is.
Yeah, that's what makes it so tricky, and that's why, there's been so much uncertainty out there, and you've seen it play out to some extent in the markets. Hey, Josh, it's a busy day for you, busy afternoon. So glad you could carve out time for us. Josh Wingrove, Senior White House Correspondent at Bloomberg News there in our Bloomberg DC Bureau. Coming up, everybody, a look at some of the stocks on the move.
This is Bloomberg Business Week Daily with Carol Masser and Tim Stenovec on Bloomberg Radio and Television.
It is Bloomberg Business Week. Let's take a look at some stocks on the move this week. With us is Isabel Lee, Bloomberg News cross-asset reporter, joining us here in the Bloomberg Business Week studio. Let's start with one that's been all over the place today, Tesla.
This is interesting. I feel like it's been a roller coaster. We started off the day with Tesla in the red, and people were gloomy because they had their vehicle sales slumped to the lowest since 2022. It was down 13%, and a lot of people were saying, oh my gosh, this is going to be the beginning of the unraveling of everything. And then at 11:17, Politico published a news saying that Elon Musk will be stepping back from work in the Trump administration. And at 11:19, you see shares edging higher, and now it's up by nearly 6%. And you can see are really just shrugging off any of those fears and just hoping that Elon Musk will have more time for the company.
We should note that Caroline Leavitt, the press secretary, pushed back on this. In a tweet, she said, this scoop, in quotes, is garbage.
Yes.
Elon Musk and President Trump have both publicly stated that Elon will depart from public service as a special government employee when his incredible work at Doge is complete. The market, though, seems to think that his days at Doge could be numbered, because shares did not move down after she sent that note.
Exactly. And there is that. But the note is also interesting because it didn't really say anything definitive. I mean, the note just said...
She said it's garbage.
There is that. But there's also talks about the 130...
Does that mean it's right or wrong?
That's true.
Right? Like, this is when you start to parse words. Like,
I mean, I would think that if you say something's garbage, it would be incorrect.
There's a lot of garbage out there that's true.
All right, now we're just...
I'm just going to say. But we don't know.
We're talking
We don't
semantics
know.
here, I think.
We're going to get in trouble. Let's talk about Newsmax. Man, this is a story we've talked about a lot over the last, what is it now? It's third day of trading. It has soared more than 2,000% yesterday and the day of its IPO. Different trade today.
Different. It's down by 70%, which is eye-popping if you think about it, if you look at it in isolation, but not really if you see the 2,000% surge during the first 2 days of its trading as a public company. And honestly, it's still up by around 1,000% from its $10 offer price. But still, shares were cut in half today after a really spectacular 2-day rally. And it really just cemented itself as a meme stock now because a lot of retail investors were the ones piling into the stock.
Did you look at the market cap?
Yeah,
Remember, it was above.
It was close to $30 billion as of yesterday.
Right,
Now it's down to $8.2 billion, which is still, that's like a Paramount size market cap, roughly. New York Times company market cap,
for
roughly.
a while it was bigger than Fox. So can you believe?
No, I mean, I think people would argue it's not one that's necessarily has been trading on fundamentals, which is why you called it a meme stock.
I mean, if you scroll through a lot of the social media platforms, they would say it's the new GameStop, touting just the really easy returns. Can you imagine if you invested on Monday, how much you will have? Even today,
you're right. You're still up a
down
lot.
70%.
You're still up a lot, but it's just the volatility and the swings, and it's really kind of interesting because volume. I feel like it's kind of an interesting one to watch in terms of the trades because it's kind of slow.
Volume is also what we watch in the ETF world because that's where you see the movement of money. But it just reminds you of really the meme stock craze in 2020 and 2021. And that was exciting. So this again, because
was it really?
It was exciting
I
to
guess
cover.
if you're a cross-asset reporter, it's exciting.
Ask the institutional reporters who were like, what is this thing?
That is fair. But then, now you see that IPOs are really a dud. So it's an anomaly out there.
Yeah. Well, yeah. I don't know. TBD on this one. I keep saying mid-May, we're going to get their earnings and we're going to pick apart that balance sheet. And listen, it may be incredible, right? But we'll find out what the business really is. I always feel like that's your great gut checks.
All right, Isabel, finally, Amazon, a company that's on your radar today. Is it because of the TikTok news, potentially?
There are two headlines related to that. So first is that we have New York Times reporting that the e-commerce giant is really just swooping in with last-minute offer to buy TikTok. TikTok has several offers, like from Oracle, but some people are saying it's not really serious, and you see Oracle shares didn't really budge after this news. Another headline is Amazon saying it will launch the first batch of satellites to power its, quote, Internet from Space initiative.
This is Project Kuiper?
As soon as April 9th. Yes.
This is long delayed. This is big news.
Yes, it's very big news, and the business dominating that today is SpaceX Starlink. So again, another Elon Musk thread in there, but that's great news for Amazon, and that's why shares are probably popping 1.5%.
Yeah, it's kind of interesting, right? I mean, great. It's turned out to be a pretty decent business, right? For
SpaceX, it's been amazing.
SpaceX,
but we'll see if Amazon can actually hold a candle to what SpaceX
it's getting a little crowded up there, though.
It is, but I feel like you deliver internet connectivity to companies, governments, to consumers. There's a little bit of purpose-driven in that. I mean, you see it.
I use Starlink. I've got a Starlink.
Really?
Yeah. Like people who, out on, RVs or boats.
Oh, that's
You get on your RV?
On my RV. Vroom, vroom. No, that's a motorcycle. No, but yeah, I mean, I get it. Like, and there's different layers in terms of use. So, yeah. Maybe on my RV. Would you have a problem with that?
No, that's cool. I just know it's not your RV. I know where you're using Starlink.
For a couple of days.
For a couple of days.
Limited.
Would it have to be a nice RV?
Honestly, it all depends on who you're with.
It's so true.
That's all that matters.
That's true.
Oh, my God. All right. Really great stuff. Isabel Lee, thank you so much. Bloomberg News cross-asset reporter. For more conversations, check out our Stock Movers podcast. It is 5-minute episodes on the biggest winners and losers in the stock market. You can find it on Apple, Spotify, or anywhere you get your podcasts.
Hey, coming up next on Bloomberg Business Week, if you're sticking with us on radio, we are covering what President Trump is going to say in the 4 o'clock hour, of course, from the Rose Garden. If you're sticking on TV, the close is up next. This is Bloomberg Business Week Daily.
CBS News on the Hour, sponsored by O'Reilly Auto Parts.
I'm Cammie McCormick. President Trump is set to announce a series of new tariffs. CBS's Weijia Jiang begins our coverage from the White House.
This afternoon, Trump will announce new reciprocal tariffs on countries that impose fees on American exports. Those with the biggest trade deficits are expected to be impacted, like China, Japan, Brazil, and the EU. Then tomorrow, 25% tariffs on all foreign vehicles and auto parts kick in.
I'm Vicki Barker at the Foreign Desk in London. Dread, despair, and anger on this side of the Atlantic, with leaders braced for new Trump tariffs beyond those on aluminum and steel already in place. Germany, France, Ireland, Italy, and the UK alone account for about $500 billion of goods exported to the U.S. every year, so there's a lot at stake.
President Trump was set to meet with aides today about the future of TikTok. Two sources tell CBS News Amazon was interested in buying it. Also, a company called AppLovin. Kelly O'Grady of Money Watch.
There's still so many questions about whether the Chinese company would want to sell, what would happen with that all-important algorithm, and what happens with U.S. customer data.
A U.S. ban on the platform was set to go into effect on Saturday. A federal judge has dismissed the corruption case against New York Mayor Eric Adams, and prosecutors will not be allowed to bring back the charges. The Justice Department had requested the charges be set aside so the mayor could assist in President Trump's immigration crackdown. Mayor Adams today.
As I've said all along, this case should have never been brought. And I did nothing wrong.
The Justice Department's push to end the case caused a rift between prosecutors in New York and Washington. Some resigned. Jim Krasula has been watching the weather and the many warnings out today as storms sweep across the nation.
Weather forecasters are warning of epic amounts of rain across the Mid-South and Ohio Valley. Flood watches have been posted from Arkansas to Ohio. Rick Castle's neighborhood in Dyersburg in northwest Tennessee often floods.
I moved here in 2012. And I've been through 4 of them already. Yeah, so it's pretty common.
More than 30 million people are under flood alerts. Jim Krasula, CBS News.
In Israel, Prime Minister Benjamin Netanyahu announced an escalation in the war in Gaza. Israel now says it will seize large areas of Gaza to be security zones. On Wall Street, the Dow is off its highs for the day as investors wait for word on President Trump's tariffs. The Dow is currently up 62 points. This is CBS News. The U.S. Naval Academy has removed nearly 400 books in a fresh DEI sweep. Here's Steve Kathan.
Naval Academy officials were told to review the library late last week. An initial search identified 900 books for a closer look. It was decided nearly 400 would be removed before Defense Secretary Hegseth's visit there today. A list of the books has not been made available. Pentagon leaders turned their attention to the Naval Academy last week when a media report noted the school had not removed books that promoted DEI. A West Point official confirmed the school had completed a review of its curriculum and was prepared to review library content, but no order has come from the Army. Steve Kathan, CBS News.
There's a civilian hiring freeze underway at the Defense Department, but it made clear today that won't impact the hiring of people who make artillery shells and repair warships and teach the children of service members. I'm Cammie McCormick, CBS News.
This is Bloomberg Business Week Daily, reporting from the magazine that helps global leaders stay ahead, with insight on the people, companies, and trends shaping today's complex economy, plus global business, finance, and tech news as it happens. Bloomberg Business Week Daily with Carol Masser and Tim Stenivek, live on Bloomberg Radio, television, YouTube, and Bloomberg Originals.
All right, everybody, we are just about 55 minutes away from the closing bell on this Wednesday. And similarly, we are just about an hour away from a press conference, an event at the White House in the Rose Garden. President Trump expected to lay out his next round of tariffs. As we just heard from our Josh Wingrove, it's kind of, Tim, down to the wire because he's still working out the specifics of such.
Yeah, I mean, we're not going to find out until we hear from the president, likely, unless there's some sort of leak ahead of time. But I haven't seen anything along those lines at this point. Hey, taking a look at markets. Charlie's going to be with us in just a second for a bigger update. But we've kind of seen markets go all over the place today. They're off their worst levels of the day, but also off their best levels of the day. The S&P 500 up 0.3%.
Yeah, I will say more than 300 names to the upside in the S&P 500, about 179 to the downside. So a little bit more of a risk-on tone, but really kind of all bets off until we get specifics from the president. So that aftermarket trade is going to be a pretty important one today. We are going to talk all about what's to come in terms of tariffs and really our team with the new era of risk for the global economy. The world is watching what's coming out of the White House today.
Also, the world is watching Elon's world. A new report says his days at Doge could be dwindling. Tesla sales drop to the lowest in years, and he suffers a bruising loss in yesterday's judicial contest in Wisconsin. We're going to hear from Max Chafkin in just a bit about everything Elon.
Yeah, and we are seeing Tesla shares, which were down earlier in the session, now up and rallying. So we do see investors kind of kicking that stock around as well. All right, let's get to Tesla and others and really the market overall. For that, back to Charlie Pellet.
All right, I thank you very much indeed. 53 minutes to go until that closing bell, but not just a closing bell on a Wednesday, not just any old day. We got the big tariff announcement coming down 4 o'clock Wall Street time. We'll have that for you live right here on Bloomberg Radio. We've got the Dow, the S&P, NASDAQ all higher. The big question as to why we're all over the map today, is this going to be a market clearing event or will it just raise even more questions? Right now, the S&P up 16. That is a gain of 0.3%. We've got the Dow up 108. Also up by 0.3%. NASDAQ up 78. That's a gain of 0.5%. Your 10-year 4.19%. The 2-year 3.90%. Spot gold up $11 the ounce, up 0.4%. The precious metal at 31.24. West Texas Intermediate crude up 0.9%, 71.87 a barrel. And Bitcoin right now up 1.3%, 86,320 on Bitcoin. Julia Coronado is president and founder of Macro Policy Perspectives. She was a guest this morning on Bloomberg Surveillance. She says it's not just all about tariffs, it's a combination of other policies as well.
One thing that we don't discuss enough is the disruption from Doge cuts and contracts and disruption to sectors that are usually very stable, like healthcare, like state and local governments, that may start feeling the pinch, and they've been driving job gains.
Julia Coronado of Macro Policy Perspectives, interviewed on Bloomberg Surveillance. Tesla investors, meanwhile, shrugging off the company's worst vehicle sales since 2022. They are bidding up the stock on hopes that Elon Musk will step back from his work for the Trump administration. Politico says while the billionaire has yet to make an announcement, there are those who are suggesting his time as a top advisor to President Trump may end soon. The White House is calling that report garbage. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Thanks so much for that update, Charlie. Do appreciate it. Hey, just a quick update. Another look at the markets. Up 0.3% on the S&P 500, 0.4% on the NASDAQ. The Dow up 0.2%. Keeping an eye on all things, as we do expect to hear from the White House at 4 o'clock. That is what investors are waiting for, Carol. We've had interesting trade patterns throughout the week where we see stocks open lower and then close higher. We'll see what happens today, and then, of course, what after hours looks like.
Yeah,
when we get the details, which, as you always remind us, that's where the devil is.
Yeah, I think it's going to be important in terms of what's next for the business environment and what it means. We just came off certainly a rough month for U.S. equities, a rough quarter where we saw certainly we've got the S&P down about 4% year to date. And so we've definitely seen it play out in the financial markets. Having said that, there is a little bit more of a risk on trade today. So maybe there's some optimism that these tariffs will be more targeted. There will be exemptions, and maybe that there will be, as you said, off-ramps for companies, not companies, but countries, excuse me, that will be able to figure out ways to maybe reduce any tariffs that are imposed on them by the United States today.
Well, as a reminder, President Trump is set to speak from the Rose Garden at the White House at 4 p.m. Wall Street time. We'll bring you those comments when he does begin to make them. Separately, China has taken steps to restrict local companies from investing in the U.S. This, according to people familiar with the matter, in a move that could give Beijing more leverage for potential trade negotiations with the Trump administration. For more, we bring in Enda Curran, Bloomberg News global economy reporter. Enda spent years living in and reporting from Hong Kong. He joins us now from our Washington, D.C. bureau. And I want to start with the story that you wrote with Katya about this new era of risk for the global economy. As we've talked about, this is the most expansive U.S. trade restriction we're expecting in a century. The world has changed a lot in the last 100 years. What is the world that the president finds himself in today, and how could it be affected by tariffs?
I think it's uncertainty right now because there's so much riding on what exactly will these tariffs cover, which countries will be impacted, what will be the level of them, how long will they be in place, is the US open to negotiations and new deals, and then these are short-lived. All of that, depending on how you interpret all of that, will dictate how trading partners respond. Do they retaliate or do they negotiate? How do companies respond? Do they move production and manufacturing to the US or do they not? Maybe anticipating too much uncertainty around this policy mix. And then how will consumers respond, both in the US and the rest of the world? How will buying patterns change? Will they shift from one product to another as they try to become a bit more price sensitive and the like? So there's so much at stake in terms of how all of this plays out. Now, the benign take would say that the administration is pushing is that it will generate lots of jobs in the US. It will create manufacturing here, bring back investment, and of course raise revenue for the government. That's the benign take. And then of course the more skeptical take is, as you just mentioned, look, this is bigger than what happened in 1930 with Smoot-Hawley. That's taken as a cautionary tale for in terms of how protectionism can impact economies, and ultimately longer term this will weigh on consumer confidence and on business. We don't know yet. We don't have the specific details, but certainly the views on this are very divided in terms of how it will impact the U.S. and global economy.
And what have, economic studies, economic realities in terms of policies kind of taught us historically of what makes a great economy, especially for a developed country?
Look, I think on balance, and obviously this gets into politically divisive territory because it's open to how you want to interpret data, but I think most economists would say to you tariffs will push prices and costs higher, and that secondly, protectionism writ large doesn't lend itself to global growth, global expansion, and that thirdly, if you want to talk about the revenue from tariffs, economic historians would say that revenues typically peak at the beginning of the tariff cycle, so to speak, and then they start tailing off because consumers start changing what they spend their money on, maybe looking at non-tariff goods, for example. Supply lines will shift around to skirt tariffs, and as a result, then the kind of case for tariff revenue peaks early, so to speak. Now, to be clear, on the other side, in terms of what the administration argues, they say that it's long overdue, that the US trade deficit has to not come back to balance per se, but certainly needs to at least shrink. There are businesses who say they need protection against cheap overseas competition, and in particular there you're talking about Chinese competition. So there is a constituency out there, but I think on balance, objectively, most economists would say that sweeping protectionism doesn't historically lend itself to a period of economic prosperity.
You have an important quick take story out today that you wrote along with Augusta Saraiva, and it's this great primer on the basics of tariffs. And I want to cover a few of those as we do a wait to hear from the president at 4 o'clock, and just remind everybody, because likely we're going to hear from the president, as we've heard in the past, that the people who pay for these tariffs are the other countries that import goods to the United States. Help us out a little bit with that. Who pays for tariffs?
Well, so again, there is something of an academic debate over this. Ultimately, tariffs are paid for by the consumer who's buying the goods, because the duty that's put on those goods is passed along by the company selling them. right? However, there can be some variables at play. For example, maybe the importer, maybe the company buying the produce from overseas negotiates with the foreign company it's buying off to say, look, you need to absorb some of these tariffs into your margins, or you need to cut your prices, maybe, but that doesn't always happen. Maybe then that the company importing the product decides to swallow the tariffs and inhale into its own margins, possible, but you'll hear plenty of business people say they can't absorb tariffs up to 20-25%. And that's why you get back to what I just said at the start, this idea that, economists say ultimately, at least some, if not all, of these costs will be passed on to consumers. Now, again, there's an academic debate about, well, is that inflationary or is it a one-off price adjustment? You heard the Fed, as my colleagues have recently written about, talking about transitory inflation again. The fact that it'll be a price adjustment. Inflation will go up once, but doesn't lend itself to longer-term inflation per se. But then you say, well, does that matter to an average consumer? If you walk into a store or a car garage or whatever else to buy your product, if the price is 15, 20 or 25% higher, you're not going to say, well, that's a one-off price adjustment. You're going to say that's more expensive than it used to be. And coming on the back of the worst inflation crisis in 40 years, I think that's why there's a lot of focus on what this will mean for prices and then ultimately for the average household and business budget.
Yeah, we know already in terms of Walmart was continuing to push their Chinese suppliers to cut prices to offset the upcoming tariffs from President Trump, according to people familiar. So we do see companies trying to kind of negotiate it out so that maybe it isn't passed on to consumers. Enda, thank you so much. Enda Curran, Bloomberg News global economy reporter, joining us from our Washington, D.C. bureau. We do have some headlines crossing the Bloomberg.
Yeah, President Trump is set to announce a new company called TikTok America. This is according to the information. The ByteDance, it's the parent company of TikTok right now, that's the China-based company, would retain a 19.9% stake in the new company. This, again, according to the report in the information. Carol, that report also includes the nugget that existing investors in ByteDance would have a third stake.
Right. And
One-third stake, I should say, so 33%.
Right. TikTok America to be 50% owned by new U.S. investors. Again, this is all coming from the information. Unclear which new investors will participate. And of course, this is coming off of a story a few hours ago about Amazon making kind of a late bid on TikTok, specifically, according to people in the know.
A story from the Financial Times just crossing that the White House is close to endorsing this deal, and under the terms of the transaction, a group of new outside investors, including Andreessen Horowitz, Blackstone, and other large private capital firms, would own about half of TikTok's U.S. business. Again, I'm reading right from the Financial Times in that story.
So that U.S. unit actually would be spun off from its Beijing-based parent, ByteDance, according to those in the know. All right. It's a busy Wednesday. Tariffs. We're watching what happens to TikTok. We've got it all covered right here on Bloomberg Business Week Daily. Carol Master, Tim Stenvik. We're back in a moment.
It's 3:21 on Wall Street. We do check markets all day long here at Bloomberg. 39 minutes to go until we get the big tariff announcement. Another developing story. We brought you the headlines moments ago. President Trump to announce a plan for a new TikTok company. This according to the information, which says ByteDance would retain a 19.9% stake. Stocks higher ahead of the big tariff unveiling. We have got the S&P right now up by 10 points, up 0.2%. The Dow up 76, up 0.2%. NASDAQ up 48. That is a gain of 0.3%. Russell 2000 index higher now by 1%. 10-year 4.18%. The 2-year 3.90%. Gold up 0.4% at 31.24 the ounce. West Texas Intermediate crude up 0.8%. 71.79 for a barrel of WTI. So 38 minutes now to go until the president's tariff announcements out of the Rose Garden. What to expect? Kellyanne Shaw is a former Trump senior trade advisor, and she was a guest this morning on Bloomberg Surveillance.
When I was in the first Trump administration, I heard him talk about this all the time, the fact that it was just fundamentally unfair that other countries had higher tariffs than the United States. And so I think he's looking to level the playing field.
Former Trump trade advisor Kellyanne Shaw. Conservative media outlet Newsmax shares retreating right now by 73%, pausing that IPO rally, which saw shares surge 2,200% since its debut earlier in the week. Again, Newsmax right now down 75.7%. Again, keep it locked into Bloomberg Radio for the latest on any tariff developments out of Washington. We got you covered as soon as we get them. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Hey, thanks for that update, Charlie. Do appreciate it. Lots of news in Elon Musk's universe today, and as a result, Tesla shares have traded in a wide range, falling more than 6%, rising as high as 6%, right now up about 4%. The bombshell this morning was from Politico, who reported that President Trump has told his inner circle that Elon will be stepping back from his advisory role in the coming weeks. Politico cited 3 people close to the president. And Carol, that report sent shares of Tesla surging after falling this morning after the company reported vehicle sales fell 13% last quarter to an almost 3-year low.
Yeah, this says Tesla made over its most important model and dealt with international backlash against Elon Musk. Max Chafkin is Bloomberg Businessweek columnist, co-host of the Elon Inc. podcast. Max is also author of The Contrarian, Peter Thiel, and Silicon Valley's Pursuit of Power. He joins us on this Wednesday from New York City. Max, let's start, though, with the Politico report. White House Press Secretary Caroline Leavitt called that report from Politico garbage, said that Musk will depart from Doge when his work is complete. It does come, though, after his and the Republicans' judicial candidate in the state of Wisconsin faced a resounding loss, even though Elon was out on the campaign trail,
over
spent
$20
money.
million he spent.
Yep, indeed, was out there front and center. Does it feel like the beginning of the end? And I asked you because I feel like from the beginning of this administration and Elon's role, we've talked with you about maybe until the president gets tired of Elon or until Elon maybe gets tired of the situation. So does it feel like the beginning of the end, at least for Elon's involvement in the federal government?
I think it's always dicey with Elon Musk. I mean, to count him out of anything, including the Trump administration, to the point of Caroline Leavitt, this has been something we basically knew about. As a special government employee, that's Elon Musk's status. He can only work for the White House for something like 130 days. So what's that, like about a little over 4 months. So we knew there would be some change in status at some point. That said, this Politico story, and it, it's sourced to, as often is the case with reports coming out of the White House, sourced to, anonymous Trump world sources, people who are in the room, but not necessarily putting their names on it. You have to think that the results in Wisconsin, which, as you said, are a terrible rebuke to Elon Musk. I mean, he put in a ton of money, a ton of time. He told everyone that, the future of humanity depended on this race. And the fact that, the Republicans did much worse than they did, back in November, despite all that money, or maybe even because of it, does give you a sense that, okay, maybe Elon Musk is starting to create some kind of drag on the White House, and that there would be more sort of incentive for people around Trump who maybe for a long time have not been thrilled about Elon Musk's proximity to the president to start speaking out. So I think this is real in the sense that there are forces at play, although I don't expect Elon Musk's influence to just disappear overnight either.
Okay, so I want to talk about that influence in just a minute, but before that, I want to talk about the effect that this could have on his businesses. This is something that you report on and have been reporting on for years. You co-host the Elon Inc. podcast. If he does leave Doge, what does it mean for his businesses?
So it's so funny because remember, you rewind to November and the stock went up like crazy. You know, it basically doubled or more than that. I can't remember the exact amount.
You're talking about Tesla specifically.
Tesla stock, sorry. And the explanation was that he had, great proximity to the president and that investors were feeling like that was going to be worth a lot of money. We're seeing obviously the exact opposite phenomenon here. I think, of course, part of it is that the euphoria, the sort of post-election euphoria has worn off, but we've also seen that Tesla customers have not responded very well to Elon Musk's antics in Washington, right? This is a customer base that tends to lean left, and Elon Musk, of course, has not just embraced Donald Trump, has not just embraced the Republican Party, but has embraced some of the most provocative parts of the Trump agenda, saying he's going to destroy USAID or the CFPB or lay off huge numbers of federal workers. So we've seen that play out in the sales, and the stock is going up at the moment. My assumption is people reading this political report and thinking, okay, look, he's going to have influence in Washington. It's going to be hard to totally untangle Elon Musk from Donald Trump. But if he's not in the White House on a day-to-day basis, that's got to help Tesla a little bit, both because Elon Musk is going to be less distracted and perhaps because he won't suffer the brand penalty as much.
So maybe it helps Tesla, but does it hurt SpaceX?
So my view on this, and I don't think we really know the answer, but my instinct is that having Elon Musk inside of the Trump administration, running Doge effectively as he is today, in certain ways, that makes it harder for some of his companies to get the kinds of government handouts that Elon Musk is so good at getting, right? Even outside of the Trump presidency, this is a guy who is really, really good at getting government contracts, finding ways to get the government to do his bidding. I think it gets harder when you are asking for money from the government and at the same time, for instance, talking about how the budget deficit is existential, or we need to drastically reduce the budget of the Social Security Administration, or a million other things. I think that was creating political problems. So I'm not sure this really changes the calculus for a company like SpaceX, which of course still is going to want things from the Trump administration. And I wouldn't expect Elon Musk to leave Doge or leave the White House on bad terms with Donald Trump. If anything, he's probably going to declare victory, and he will continue to be an important ally for Donald Trump as we look ahead to the midterms. And my guess is that it'll cut both ways. Musk will continue to be supportive of Trump, and Trump will continue to be a fan of Elon Musk.
Right. You've talked about that actually President Trump likes kind of having Elon around. The world's richest guy, really successful, whether you like him or not. I mean, it's hard to ignore the businesses that he has built. Going back to Tesla, though, Max, can he repair it? Can he bring it back? I mean, is there damage done? Consumers are often forgiving. Sometimes they're not. I mean, how do you see it?
Well, I mean, look, Elon Musk's electric cars are, by most accounts, really great products, right? A lot of customers like them. There's a reason you're seeing people putting the bumper stickers on their cars saying, I bought this before Elon was crazy, went crazy, which is one of the slogans that you see from Tesla customers who maybe feel ambivalent about Musk's political turn. They're not necessarily trading those cars in because they still like the cars. Mm-hmm. So, of course, there's potential for him to bring it back. That said, this is a company with problems that go beyond branding. They have not released a new car in years, a truly new car in years. The Cybertruck, the most recent product that we've seen, has basically been a flop, and that's what we see in the data that's coming out in terms of the deliveries. Something like 12,000 vehicles last quarter that were not Model Y or Model 3, the two big sellers. So that's not very many trucks that are being sold, and that was the next product that was supposed to help this company get to the next level. Right now, Elon Musk is betting on robotaxis. Of course, we're seeing innovations in robotaxis from lots of other companies, particularly a bunch of Chinese companies. So this is a company that faces tons of competition, that has a stale product pipeline, and then you swirl the branding issue in there, and that starts to become something close, I think, to a perfect storm. Now, again, there are ways to get to dig out of this. I think Elon Musk is a very resourceful guy, and that's part of the reason you're seeing investors, for the most part, stick with this company and not panic.
I think about our conversation we had with Sean Kelly, right, of Kelly Blue Book.
Yeah.
Not Sean Kelly, Sean Tucker, excuse me, of Kelly Blue Book. But he was pretty negative in terms of Tesla and what has happened.
I mean, he said the high watermark was 2 years ago. Max, how much for Tesla is this about Musk versus the lineup of vehicles and then the Chinese competition, BYD and Xiaomi? These are pretty incredible cars, I've heard from everybody who's driven them.
Yeah, and it's not just the Chinese companies. I mean, this has been a big kind of story that has overridden all of the Tesla coverage for basically a decade, is that electric cars are coming. There will be competition. You've seen bears talk about this really for a very long time, but that is real now. It's not just the Chinese companies. It's also GM and Ford and you know, the traditional Hyundai, the traditional automakers. You just have a lot more choices today than you did before, and Tesla's kind of comparative advantage really seems to have shrunk. And part of the problem, I think, or part of the challenge, especially if you're skeptical of the prospects of this company, is that Elon Musk has basically bet the company on autonomy, on robotaxis. And, you know, although their driver assistance system is very good, they haven't been able to launch a robotaxi. And you've seen other companies, like I said, do the same thing. So that differentiator feels like it's going away. And so, like, what is the thing that's going to convince someone to buy a Tesla instead of one of these Chinese cars, or just say a car made by GM or something like that?
All right. Got to talk about one more thing, and that is from the AI world. xAI, Elon's company, buying X again for a second time. We spoke about it with Bloomberg's Kurt Wagner earlier this week. What's the point in all of this?
I think the point is, one, to reflect basically a reality that X and xAI, although they have been nominally two companies, have been essentially operating as one company for a very long time, right? xAI, the AI company, is training its chatbot on data from X. Its main distribution mechanism for that chatbot is X. Grok, the chatbot inside of X, is made by xAI.
Right.
Like, it was sort of hard to explain how these were two different companies in the first place. You know, they're both controlled by Elon Musk. The investor base is the same. From the point of view of X, you know, the company formerly known as Twitter, this essentially is, you know, something along the lines of a bailout, right? Mm-hmm. Elon Musk's investment did not go, you know, the purchase of Twitter for $44 billion didn't go great, but now he basically finds a landing pad for that. With xAI, you have the opposite. You have a way to kind of tidy up the story and, of course, go to raise capital from investors.
Unbelievable stuff around the Elon world in 10 minutes. Max, thank you so much. Max Chapkin, Bloomberg Businessweek columnist, co-host of the Elon Inc. podcast. You can find it wherever you download your podcast. Coming up next, driving to the close.
It's 3:40 on Wall Street. We do check markets all day long here at Bloomberg. We have got 20 minutes to go until the big tariff reveal. We got you covered on Bloomberg Radio. We'll have all the details as they become available. But right now, stocks are holding on to gains. So let's head over to the First Word breaking news desk for today's afternoon call. Here he is, Bill Maloney.
And good afternoon, Charlie. That's right. U.S. stocks are in the green ahead of the 4 p.m. tariff announcements. The Dow is currently up 193 points. S&P's gained 31, while the NASDAQ is up by 0.8%. The U.S. 10-year yield is at 4.19%. Gold and oil are in the green, and Bitcoin, that's higher by 1.2%. Among the main 11 S&P sectors, leaders were consumer discretionary and industrials. Telecom was under pressure. And leaders to the upside in the Dow, Goldman Sachs and Amazon, while Verizon fell 1.5% and led to the downside. In the tech space, the FT reported that the White House is close to endorsing a deal for TikTok US. And in other news, Tesla Q1 deliveries missed estimates. Wrapping things up, Newsmax shares plunged 76% after yesterday's 179% gain. Live from the First Breaking News Desk, I'm Bill Maloney. Charlie.
Okay, we thank you very much, Bill Maloney. To hear live breaking news over your Bloomberg, type SQUA, S-Q-U-A, on your Bloomberg terminal. I'm Charlie Pellet. That is a Bloomberg Business Flash.
I'm driving in my car.
How about you let me drive?
Oh, no. This is not a toy. Who's gonna drive you home? Honey, please, I'll do the driving. Drive on. Excuse me, I want to drive. It's the question that drives us.
This is the drive to the close.
The funky music will drive us till the dawn.
On Bloomberg Radio.
All right, TikTok, everybody. You just
Did
got
you
an
say
update.
TikTok?
TikTok.
Is that because it's like, is it because the Amazon thing? Is it the Financial Times report? Why are you TikToking right now?
Yeah, maybe.
Or you're just like, TikTok. Okay.
TikTok.
That's
TikTok to the close and TikTok until we get from the president, right? What he's going to lay out in terms of tariffs. It is expected at 4 p.m. Wall Street time. So we are just about 18 minutes away from that, as expected, if everything goes on schedule, and also just about 18 minutes away from the closing bell. As you heard from Bill Maloney and Charlie Pellet, we are up about 0.6% on the S&P 500. Folks, we're definitely off our lows of the session and off our highs, but a little bit of a leg up in the last half hour or so. Dow Jones Industrial Average, if you care, up 230 points, up about 0.5%. NASDAQ 100, where you find all those big cap tech names, up about 0.8%. Tim, a gain of about 151 points.
I'm curious how Noah Haman is watching this. He's founder and CEO of Advisor Shares. Noah, you argue that we got to look at Trump's first term to understand equity market implications, but as our own Enda Curran reminded us a little earlier in the hour, this could be way, way bigger. In fact, these measures could mark the biggest protectionist move in 90 years. Are there still lessons from the first term?
I think so. The first big lesson is to remember he threatened a lot of tariffs and then pulled back on Mexico and Canada. China's tariffs at the time on, I think, aluminum and steel continue to remain in place. So any minute, any hour, people can change their mind. I think I was just seeing something pop up about even Canada suggesting they would remove their tariffs in return for us removing all of our tariffs. So I think the thing to remember is anything can change in a minute. And when we look back at what happened back then, you had a volatile market, but overall the market continued to climb. The challenges it saw at that time are far more about Fed tightening, I think, than anything else.
So are you on hold, though? Do you want the details before you figure out kind of what to do next?
I think so, or it depends on what kind of investor you are, right? If you're a long-term investor based at least on history, which may not repeat, of course, but I might continue to do what I'm doing, right? My monthly 401k deposit, I'll allocate it to the market. I'll sort of buy this dip that we've seen going on in the U.S. markets. I might start to look a little bit more at international markets, not as much about tariffs, but they've been strong this year. That's been one of the bright spots is, EFA's up, I think, almost 6 or 7%. So is ACWI ex-US. So if you're a long-term investor, I think I'd just probably not worry about it too much. Expect volatility. If you're a trader, you might be, thriving on increased volatility.
No, there are some folks out there who are concerned about the fundamentals of the U.S. economy. And I'm talking like structural here. Like something could shift substantially, unlike what we've seen really in our lifetimes. I've talked to friends who are not involved in the markets on a day-to-day basis who said, I'm getting out of the U.S., I'm going to cash, or other friends who say I'm going overseas now with my money. Again, these are not what I would call sophisticated investors or traders. they're just really thinking differently about asset allocation. What would you say to them?
So I would say the idea of moving international, just again, given what we've seen happen earlier this year, and it just feels like it's time for international markets. They've been underperforming for so long. That's probably not a bad idea. But the market's, what, 5 or 6 or 7% off of all-time highs. And if you're selling your portfolio, go into cash, don't forget that tax bill that's coming as a result of that. So, you know, if that makes you feel comfortable, I think that that's fine. There's nothing wrong with that. Again, consider those tax implications. But if you think it's going to be a lot worse, then you don't mind paying the taxes on it. But I think otherwise, you know, I'd be a little cautious. It feels like the news changes every minute, every hour, and I would not probably make big abrupt changes until I had better clarity.
You know, what's interesting is, Noah, I think we're all waiting to see if the negative sentiment that we've been talking about so much, we've talked about CapEx by businesses pulling back, consumer sentiment. We've already seen the airlines talk about cutbacks. But again, they've been talking about the current quarter and not necessarily for the rest of the year. Sentiment becomes a problem when it, though, does turn into actions and people stop spending, companies stop spending, companies stop hiring. How much do you think that sentiment will turn into negative action and be with us for the rest of the year? Or are you more upbeat about the rest of 2025 or the second half of 2025?
In general, I'm more upbeat, but you're picking your spots, right? I think ADP just came out with some surprisingly high numbers, right? I think it was 155,000 private sector jobs. There's been plenty of announcements of international companies making capital investments in the U.S. for big plants and manufacturing, right? In part of this tariff drama.
Plans, right? Commitments, plans, but it doesn't mean they'll be a reality.
Right. Excellent point. But I think if it's not a reality, then, you know, things can probably go both ways, right? Maybe things won't be quite as bad here, but you do see it in pockets. When you mention things like airlines, I think, yeah, it wouldn't be surprising to see much more business travel cutting back with a little bit of uncertainty. We've already seen, you know, reports, especially along the Canadian border, where they're not too happy with us as of lately, and they're cutting back, you know, travel plans where they come here and they spend and they go to amusement parks or they stay at nice hotels. And so you see things like that cutting back. But if some of those plans turn into real jobs, it could create a production growth opportunity within the U.S. that will still be several years out, but could really create long-term opportunity. But boy, is it going to be noisy and volatile along the way.
Yeah, and look, I think certainly the cutting back that we're seeing from international tourists to the north makes sense. Something Carol and I have talked a lot about, especially in the context of some of the airline downgrades that we saw this week from Jeffries, and the pullback that airlines have talked about is the cutback that American consumers are feeling in discretionary spending. Are you seeing that pop up at all?
A little bit. You know, you've seen weakness in that hotel sector. You've seen weakness, as you mentioned just a second ago, in airlines. I think, you know, there's vices, right? And when I think about things like Corona beer and the impact, and maybe people are going to spend less if the price of that beer is going to go up, well, they can still, you know, buy some Sam Adams that's made in the U.S. and those prices won't go up, or at least they won't go up to the extent that they're not affected by the supply component, right? The metal that's made in their cans to distribute their products. So, you know, yes, you've seen some consumer spending pull back, certainly pulled back with the market, but same thing. It feels short term, it feels temporary, but always subject to change.
So, in terms of dip buying, have you been doing that on the pullback?
I have, yeah, absolutely. So right now, I really haven't changed my asset allocation that much, except for what I mentioned earlier, which is I'm leaning into the international markets a little bit more. I'm also looking at where maybe we might see interest rates maybe going down, which could provide a spark and some ignite, you know, some opportunities in the U.S. The best spots, it seems like this year, has been energy and financials probably. But for the most part, just I'm continuing to dip buy, not going to worry about it too much. And I think, as you guys were saying earlier, I need to see what really happens before I take too strong of an action.
All right, going to leave it on that note. Noah, thanks. Noah Hammond, founder and CEO of Advisor Shares, joining us on this Wednesday. Folks, we've just got about 10 minutes to go. Taking a look at the trade. Definitely off our worst levels of the session. Green across the screen. S&P up about 40 points. NASDAQ 100, a gain of 162. Stick around. We're counting you down to the close on this Wednesday.
This is Bloomberg Business Week Daily with Carol Masser and Tim Stenovec on Bloomberg Radio.
All right, everybody, under 7 minutes to go until we wrap up the trade on this Wednesday. And as Tim mentioned before the break, we are looking at a live shot of the Rose Garden getting ready to hear from the president.
I see a hard hat. You see a green I see a green hard hat.
There's like some really...
Does anyone in the control room know why there's a green hard hat?
What's with the neon colors there?
I mean, I would understand if this were like an infrastructure week announcement.
I know.
But this is the Make America Wealthy Again announcement. That's what the president and his team are calling this event.
There's a little neon orange there, too, as well. We're going to take you live, though, to the Rose Garden when President Trump is there speaking, laying out what it is in terms of tariffs. We've been counting down, I feel like, to this day for the last couple of weeks, what the specifics will be in terms of tariffs on countries, on what types of goods, are there exemptions, are they reciprocal tariffs? He's talked about, kind of grading each country. We've seen some reporting out on that. So waiting to see, but we're going to take you there as soon as it begins. In the meantime, got to get to this story that's among the most read on the Bloomberg buyer-owned Just Menton.
I was talking about this, not the short covering part. I'm not that smart. That's why we rely on Just Menton. I was talking about the idea that every day this week we've seen stocks fall in the morning, only to recover later in the session and close in the green.
Which is some would say a better trade than starting high and finishing low.
Well, Just Menton argues that the movements of the stock market aren't always clear. There is a culprit lurking beneath these moves, and it's short covering.
Dun, dun, dun.
Goldman Sachs' basket of the most shorted stocks is up 3.2% on Wednesday, beating the S&P 500's half a percentage point gain. The implication is some investors are covering their short bets ahead of President Trump's tariff announcement, 4 p.m. in Washington.
Yeah, Dennis Dick is head of market structure and a proprietary trader at Triple D Trading, and he says many traders are leaning into short covering heading into this evening ahead of reciprocal tariffs deadline, and that will ignite short squeezes. We have to be cautious and can't chase this market. If they're doing some covering, that would be the expectations that they think stocks are going to rally.
Well, the move has been particularly striking today after declining
the tariffs.
After declining more than. Wait, hold on. Say that again?
Well, if you're covering your shorts, that's because you expect the stock to go up.
So
what you do is you short a stock with the expectation it's going to drop, and then you buy it. You kind of borrow shares and then you buy it at a cheaper price.
So essentially what these investors are saying, or these traders are saying, is that there's too much.
They think it's going to rally. They think the tariff news, that there'll be a rally off of it.
Oh, okay. We'll see.
Right?
I mean, and
we'll see.
Remember, originally these comments from the president were supposed to be at 3 p.m. today. The White House yesterday moved them to 4 p.m., which of course is after the market closes. As I was saying, Carol, the move has been particularly striking today after declining more than 1% at the open. The S&P 500 reversed the loss to trade up 1% by early afternoon. Since the aftermath of the stock market's bear market plunge in October of 2022, there was just one other day when the gauge posted a turnaround of a similar magnitude, according to data compiled by Bloomberg.
Jess is so good on this stuff. She notes that bearishness has grown this year with U.S. equities down in 5 of the last 6 weeks. We've talked about that downward trend line. A lot of it has to do with worries over what's to come from the administration in terms of tariffs. Large speculators, Jess writes, have boosted their net short S&P 500 positions to the highest since late January, just weeks before the index peaked. But when investors cover their short bets because the market is rising, as it is this week, it can further juice the rally. And so some of this is what she's talking about.
Hey, we are expecting the president to make comments in 3 minutes. As we know, though, Carol, he's often running behind schedule. So we will bring you those comments when he does get to the Rose Garden.
One other thing from Jess, she says bets against the world's largest exchange-traded fund ETF, the Spider S&P 500 ETF Trust, ticker SPY, SPY, have climbed over the last 3 sessions, suggesting investors do not expect the recent rebound to hold. It makes sense, she writes, considering they still have fresh memories of last month's equity rout, where the S&P 500 briefly sank over 10%. All right, everybody, we are just about 2.5 minutes away from the closing bell on this Wednesday. Also, just about 2.5 minutes away with expectations to hear from President Trump from the White House, the Rose Garden specifically, on his latest round of tariffs. In the meantime, we are seeing the S&P 500 up about 0.75 of 1 percentage point, and the NASDAQ 100 a gain of nearly 0.9%. Do not go anywhere. Tim and I are going to cover it all right here on Bloomberg Business Week Daily.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 3:58 on Wall Street. We do check markets all day long here at Bloomberg. Tariff Wednesday. We will have the president live from the Rose Garden in just minutes, right here on Bloomberg Radio ahead of the closing bell. Stocks are advancing with the Dow, the S&P, and NASDAQ all gaining. S&P up 43 right now. That is a gain of just about 0.8%. The S&P now at 56.76. Dow Jones Industrial Average pushing higher. The Dow up 279 now, up by about 0.7%. NASDAQ up 168. That is a gain right now of just about 1%. 10-year 4.18% with a 2-year 3.91%. Gold up $12.50 the ounce, 31.26 for the precious metal. That is a gain right now of 0.4%. West Texas Intermediate crude oil up 0.9%, 71.87 a barrel, and Bitcoin up 1.9%, 86,873 on Bitcoin. Noah Hammond is founder and CEO of Advisor Shares, and moments ago, right here on Bloomberg Business Week Daily, he had this advice for investors.
I might start to look a little bit more at international markets, not as much about tariffs, but they've been strong this year. That's been one of the bright spots. Is ETH's up, I think, almost 6 or 7%. So is ACWI ex-US. So if you're a long-term investor, I think I'd just probably not worry about it too much. Expect volatility. If you're a trader, you might be, thriving on increased volatility.
Noah Hammond, founder and CEO of Advisor Shares. And there you have it, the sound of the closing bell at the New York Stock Exchange. Folks from EARN listed on the NYSE. Folks from EARN ringing that closing bell right now at the big board. The Dow, the S&P, and NASDAQ all advancing today. Among today's stock standouts, Tesla shares surging by 5.3%. Tesla investors shrugged off the company's worst vehicle sales since 2022 and bid up its shares on hopes that Elon Musk will be stepping back from his work for the Trump administration. Again, an official announcement on tariffs expected minutes from now. Right here, we'll have it for you live on Bloomberg. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Charlie Pellet. That is a Bloomberg Business Flash.
This is Bloomberg Business Week Daily, reporting from the magazine that helps global leaders stay ahead, with insight on the people, companies, and trends shaping today's complex economy, plus global business, finance, and tech news as it happens. Bloomberg Business Week Daily with Carol Masser and Tim Stenivek, live on Bloomberg Radio, television, YouTube, and Bloomberg Originals.
All right, everybody, we have our eyes glued on the Rose Garden at the White House. Carol Masser, Tim Stenivek, live here on Bloomberg Business Week Daily. We are live here at Bloomberg headquarters. It is tariff day, Tim.
Yeah, it is. The stock market, though, bounced back from an open where the S&P 500 fell as much as 1% today to close, higher by 0.7%. The NASDAQ composite higher by 0.9%. A redhead, though, crossing the Bloomberg terminal in terms of a stock to watch that has been on our radar all week. Newsmax plunged 77% today to raise more than $23 billion in value.
Right, exactly. What a first 3 days of trading, right? But keep in mind that the first 2 days it was up about 2,200%, but nonetheless, quite a haircut in that one. Having said that, Charlie, breaking down the trade here, and we finished definitely off our lows of the session, started much lower on the day, and again, a gain of about 0.75 of a percentage point for the NASDAQ 100, up almost 0.2% for the S&P 500. We are monitoring the Rose Garden at the White House. President Trump expected to come out shortly, any moment, to lay out his latest when it comes to tariffs against all of our trading partners. Having said that, we want to talk a little bit about the markets.
Gina Martin-Adams is Bloomberg Intelligence Chief Equity Strategist. She joins us here in the Bloomberg Interactive Brokers studio. Gina, as we do await the president, we have been waiting for quite a few days to speak to you. You've been on the road, so we are happy to see you back in New York City. A lot has happened, though, including kind of wild swings in the markets this week. Jess Madden now with a story that talks about potential short covering as to explain why we've seen stocks open lower and then turn around later in the session. What are you watching?
Yeah, I'm trying my best, Tim, to keep my eye on the fundamental picture and how the fundamental picture is laying out over the course of 2025. Because
Has it
I think
changed?
that will be a guide. It has a little bit. We've seen some give back in valuations at the very least, but not enough to get comfortable that stocks are a screaming buy by any stretch of the imagination. We have this really interesting divergence occurring in large and small caps. Small caps look to be on the verge of pricing a recession emerging in the U.S. in our fair value model, where large caps are nowhere near that, sort of still trading.
Is that
near
worrisome
all-time
when
highs.
you see that diversion?
A little bit. It's a little bit worrisome. It does suggest that small caps are seeing a lot more weakness potentially emerging, and or investors are just fleeing all high beta, high risk, and still hanging on to their core equity exposure, which also is a little bit worrisome. There's a lot of conflicting signals, though, right now. We've definitely seen some defensive rotation, also some inflation rotation, with energy really sticking out over the course of the last month. And then in terms of analyst estimates, we're just seeing vast downward revision momentum, really consistent across the board downward revisions occurring.
Do you like when that happens only because it feels like there's always a lag, or when everybody's so upbeat, that almost makes me more nervous?
Yeah, it's
or how do you read it?
Somewhat worrisome because the market has not caught down with the analysts, right? And then we started this year in this awkward position where the market, in our models anyway, was pricing for much stronger growth than even the analyst community.
Yeah.
The analysts are downwardly revising expectations faster than the market is adjusting expectations. And that sets us in a pretty awkward position in the near term, unless we can get some resolution. And I'm totally open to the idea that maybe today's the day where we finally get some news that stops the constant uncertainty, but I don't know.
Although we're down more from all-time highs, if we look at this year, Gina, we're only down 3.6% on the S&P 500. I feel like only is an important word there.
It is. It's an
like
important
we have to
word.
keep this in perspective here.
It is. And I think the more painful aspect of this year is that the U.S. is dramatically underperforming the rest of the world.
Yeah.
That's what's creating a lot of the turmoil in investors' sort of decision-making in portfolio allocations is all of a sudden, all of the opportunities for upside are outside of the United States, and that's an anomaly.
You know what's so funny, though? We talk to folks who are investing for others, big, well-known firms, and it's like, yeah, we should have a little bit of allocation. Or I'm thinking, like, it's just interesting. Nobody's screaming buy outside the United States. And is that a mistake, or like...
It's a home team bias.
Yeah.
I think when you're talking to investors in Europe, for example, the flows from Europe into the United States have slowed tremendously so far this year. Yeah. And European flows into European stocks have accelerated. But the American flows to Europe haven't even started. So there's a bit of home team bias where Europe is recognizing that opportunities are emerging there. To a lesser degree, Asia for Asia is recognizing that opportunities are emerging there as well. But the U.S. investor is still conditioned on this idea that their best way to access the globe is through the U.S. multinational stocks, which is a tremendous conundrum in an environment where we're deglobalizing.
Right.
And I think we have yet to kind of acknowledge the potential impacts of that deglobalization trend.
I keep looking up at the screen, Gina, and we are seeing the president make his way from the White House to the Rose Garden, where we understand, too, that Hail to the Chief is playing, and there are a lot of members of his administration there at the event right now, including J.D. Vance, the Vice President and Commerce Secretary Howard Lutnick. As we do await the president to make his way there, is it a mistake for investors to think that the S&P 500 doesn't provide international exposure?
It does provide international exposure, and that's the risk right now.
Okay.
Right? It not only provides international exposure, but it's very dependent as an index on imports from international economies, which means it's very, very exposed to tariffs, more so than most other global indices.
All right, and that is certainly what we want to see what the president has to say. Gina, thank you so much. Let's go to the Rose Garden and President Trump.
My fellow Americans, this is Liberation Day, waiting for a long time. April 2nd, 2025 will forever be remembered as the day American industry was reborn, the day America's destiny was reclaimed, and the day that we began to make America wealthy again. We're going to make it wealthy, good and wealthy. For decades, our country has been looted, pillaged, raped, and plundered by nations near and far, both friend and foe alike. American steel workers, auto workers, farmers, and skilled craftsmen. We have a lot of them here with us today. They really suffered gravely. They watched in anguish as foreign leaders have stolen our jobs, foreign cheaters have ransacked our factories, and foreign scavengers have torn apart our once beautiful American dream. We had an American dream that you don't hear so much about. You did 4 years ago, and you are now, but you don't too often, and for many years and decades even, you didn't hear too much about. Our country and its taxpayers have been ripped off for more than 50 years, but it is not going to happen anymore. It's not going to happen. In a few moments, I will sign a historic executive order instituting reciprocal tariffs on countries throughout the world. Reciprocal, that means they do it to us and we do it to them. Very simple, can't get any simpler than that. This is one of the most important days, in my opinion, in American history. It's our declaration of economic independence. For years, hardworking American citizens were forced to sit on the sidelines as other nations got rich and powerful, much of it at our expense. But now it's our turn to prosper, and in so doing, use trillions and trillions of dollars to reduce our taxes and pay down our national debt, and it'll all happen very quickly. With today's action, we are finally going to be able to make America great again, greater than ever before. Jobs and factories will come roaring back into our country, and you see it happening already. We will supercharge our domestic industrial base. We will pry open foreign markets and break down foreign trade barriers. And ultimately, more production at home will mean stronger competition and lower prices for consumers. This will be indeed the golden age of America. It's coming back, and we're going to come back very strongly. We're pleased to be joined on this momentous occasion by Vice President J.D. Vance. J.D., thank you. Thank you. Thank you very much. Where are you, J.D.? No, that wasn't too hard to find. I was looking, you know, he likes to take a low-key attitude, so it'd usually be sitting right in front. He's gaining a lot of confidence, Mike, isn't he? And nearly my entire cabinet is here, as well as Speaker Mike Johnson, who's done an amazing job. And with the great success we had last night in Florida, we have a majority of 7. And 7's like a lot when we had it at 1, right? You've done a fantastic job. And many of the members of the House and Senate are with us. Senators, Congressmen, thank you all for being with us. We appreciate it. For decades, the United States slashed our trade barriers on other countries, while those nations placed massive tariffs on our products and created outrageous non-monetary barriers to decimate our industries. And in many cases, the non-monetary barriers were worse than the monetary ones. They manipulated their currencies, subsidized their exports, stole our intellectual property, imposed exorbitant VAT taxes to disadvantage our products, adopted unfair rules and technical standards, and created filthy pollution havens. They were absolutely filthy, but they always came to us and they said, we're violating, we should pay for it. It's all detailed in a very big report by the U.S. Trade Representative on foreign trade barriers, and I'll just hold it up for you. It's available, and you don't have to pay too much. As I understand it, you pay nothing. It's a lot of work for something, actually, because it's a special book. It's frankly, it's very upsetting when you read it, when you see what people have been doing to us for 30 years. This all happened with no response from the United States of America, none whatsoever. But those days are over. Let me offer just a few examples of the vicious attacks our workers have faced for so many years. The United States charges other countries only a 2.4 tariff on motorcycles. Meanwhile, Thailand and Others are charging much higher prices, like 60%. India charges 70%. Vietnam charges 75%, and others are even higher than that. Likewise, until today, the United States has for decades charged a 2.5 tariff. Think of that, 2.5% on foreign-made automobiles. The European Union charges us more than 10% tariffs, and they have 20% VATs, much, much higher. India charges 70%, and perhaps worst of all are the non-monetary restrictions imposed by South Korea, Japan, and very many other nations. As a result of these colossal trade barriers, 81% of the cars in South Korea are made in South Korea. 94% of the cars in Japan are made in Japan. Toyota sells 1 million foreign-made automobiles into the United States, and General Motors sells almost none. Ford sells very little. None of our companies are allowed to go into other countries. And I say that, friend and foe. And in many cases, the friend is worse than the foe in terms of trade. But such horrendous imbalances have devastated our industrial base and put our national security at risk. I don't blame these other countries at all for this calamity. I blame former presidents and past leaders who weren't doing their job. They let it happen, and they let it happen to an extent that nobody can even believe. That's why, effective at midnight, we will impose a 25% tariff on all foreign-made automobiles. Thank you. Brian, I'd like to have you come up here for a second, okay? I just see him sitting. He's been a fan of ours, and he understands this business a lot better than the economists, a lot better than anybody. Brian, say a few words, please, would you? Thank you, Mr. President. It's a great honor to have you. Thanks.
Thank you, Mr. President. I grew up just north of Detroit, Michigan, in Macomb County, known as the home of the Reagan Democrats. My first vote for president was for Ronald Reagan. I thought that was going to be the best president I ever saw in my lifetime until Donald J. Trump came along. I have watched my entire life, I have watched plant after plant after plant in Detroit and in the Metro Detroit area close. There are now plants sitting idle. There are now plants that are underutilized, and Donald Trump's policies are going to bring product back into those underutilized plants. There's going to be new investment. There's going to be new plants built. And the UAW members, and I brought 20 of them with me, they're sitting right over here. We support Donald Trump's policies on tariffs 100%. So, Mr. President, we can't thank you enough. And in 6 months or a year, we're going to begin to see the benefits. I can't wait to see what's happening 3 or 4 years down the road. Thank you, Mr. President.
Thank you so much. Thank you. What a great guy. He got it right from the beginning. He got it before almost anybody else. This group over there, they got it too. And you know, we won the state of Michigan. We won almost all of them, but we won Michigan by a lot, and I want to just thank you all. The auto workers were fantastic. The Teamsters were fantastic. Everyone was pretty good, I will tell you. Thank you very much. I appreciate it. You're going to be very happy very soon, and you probably see what's happening with all of the, not only car companies, but car companies in particular. See it with all of the ones they're moving, they're announcing day in, day out. You're seeing it. Nobody's ever seen anything like that. With today's actions, we're also standing up for our great farmers and ranchers who are brutalized by nations all over the world. Brutalized. Canada, by the way, imposes a 250 to 300% tariff on many of our dairy products. They do the first can of milk. They do the first little carton of milk at a very low price, but after that it gets bad, and then it gets up to 275, 300%. So when they're figuring what's Canada charging, they say, oh, about 2%, 3%. But take a look at what happens down the road. When you look a little bit, it's not a pretty picture, and we don't like it, and it's not fair. It's not fair to our farmers. It's not fair to our country. And with countries like Canada, you know, we subsidize a lot of countries and keep them going and keep them in business. In the case of Mexico, it's $300 billion a year. In the case of Canada, it's close to $200 billion a year. And I say, why are we doing this? Why are we doing this? I mean, at what point do we say you got to work for yourselves and you got to, this is why we have the big deficits. This is why we have that amount of debt that's been placed on our heads over the last number of years. And we're really not taking it anymore. Through non-tariff barriers, the European Union bans imports of most American poultry. You understand? They say, we want to send you our cars, we want to send you everything, but we're not going to take anything that you have. Australia bans, and they're wonderful people and wonderful everything, but they ban American beef, yet we imported $3 billion of Australian beef from them just last year alone. They won't take any of our beef. They don't want it because they don't want it to affect their farmers. And you know what? I don't blame them, but we're doing the same thing right now, starting about midnight tonight, I would say. And China charges American rice farmers an overquota, it's called, a tariff rate of 65%. South Korea charges 50%. Actually, they charge different, from 50% to 513%. And Japan, our friend, charges us 700%. But that's because they don't want us selling rice and other things. Who can blame them, Madam Secretary? Agriculture, great job you did on eggs, by the way. The egg prices came down 50%. You got them down 50%. Once we got involved, they were going through the sky. The egg prices, they were going through the sky, and you did a fantastic job. Now we have lots of eggs, and they're much cheaper, down about 59% now, and they're going down further. We charge 2.8% for so many things that other countries are charging 200%, 300%, and 400% for. If imposing tariffs and protective barriers made nations poor, then every country on earth would be racing to eliminate these policies, and China would be the first on line. They run a very strong country, but they're not first in line, and the American people are paying a very big price. From 1789 to 1913, we were a tariff-backed nation, and the United States was proportionately the wealthiest it has ever been. So wealthy, in fact, that in the 1880s, they established a commission to decide what they were going to do with the vast sums of money they were collecting. We were collecting so much money so fast, we didn't know what to do with it. Isn't that a nice problem to have? What do you think, Marco? Good problem? Marco would love that problem. But we don't have that problem anymore, but we're not going to have it very much longer, I will tell you. But they collected so much money, they actually formed a commission to determine what they were going to do with the money, who they were going to give it to, and how much. Then in 1913, for reasons unknown to mankind, they established the income tax so that citizens, rather than foreign countries, would start paying the money necessary to run our government. Then in 1929, it all came to a very abrupt end with the Great Depression, and it would have never happened if they had stayed with the tariff policy. It would have been a much different story. They tried to bring back tariffs to save our country, but it was gone. It was gone. It was too late. Nothing could have been done. It took years and years to get out of that depression, far longer than even FDR had that office right over there for a long period of time. The ramp system, it's rather intricate, was built because of him, and every time you walk up, you think of him, and he did a great job in many ways, but it lasted long beyond his terms, as you know. But it's not too late any longer, and we're going to start being smart, and we're going to start being very wealthy again. We're going to be wealthy as a country because they've taken so much of our wealth away from us. We're not going to let that happen. We truly can be very wealthy. We can be so much wealthier than any country. It's not even believable, but we're getting smart. Nearly a century later, in the face of unrelenting economic warfare, the United States can no longer continue with a policy of unilateral economic surrender. We cannot pay the deficits of Canada, Mexico, and so many other countries. We used to do it. We can't do it anymore. We take care of countries all over the world. We pay for their military. We pay for everything they have to pay. And then when you want to cut back a little bit, they get upset that you're not taking care of them any longer. But we have to take care of our people, and we're going to take care of our people first. And I'm sorry to say that. And today we're standing up for the American worker, and we are finally putting America first. In Sleepy Joe Biden's last year in office, the United States hemorrhaged 100,000 manufacturing jobs, and the number was going through the roof at levels never seen before. And our trade deficit reached a record $1.2 trillion, which is unheard of. Since the beginning of NAFTA, the worst trade deal ever made. It was a horror show. I was able to terminate it. They all said you'd never be able to get it out. We had to get approval from Congress to get it terminated. We had to live with that deal. It was the worst deal, worst trade deal ever made by far. But since the very beginning of NAFTA, our country lost 90,000 factories. Think of what that is, 90,000. Think about putting a map up and putting tax on it. You wouldn't have enough room. 90,000. I said, is that possible? We had it checked 4 different times, and it was actually somewhat higher than that. And 5 million manufacturing jobs were lost while racking up trade deficits of $19 trillion. That was the worst trade deal ever made. As a result of these gigantic losses, foreign nations now own $26 trillion more of American assets than think of this, than the Americans own of their own foreign assets or other foreign assets. The United States can no longer produce enough antibiotics to treat our sick. We have a tremendous problem. We have to go to foreign countries to treat our sick. If anything ever happened from a war standpoint, we wouldn't be able to do it. We import virtually all of our computers, phones, televisions, and electronics. We used to dominate the field, and now we import it all from different countries. A single shipyard in China now produces more ships every year than all of the American shipyards combined. Think of that. And it was a business that we used to dominate. We used to dominate it totally. In short, chronic trade deficits are no longer merely an economic problem. They're a national emergency that threatens our security and our very way of life. It's a very great threat to our country. And for these reasons, starting tomorrow, the United States will implement reciprocal tariffs on other nations. It's been a long time since we even thought of that. We used to think about it a lot. We didn't think about it for many decades, and you see what's happened. For nations that treat us badly, we will calculate the combined rate of all their tariffs, non-monetary barriers, and other forms of cheating. And because we are being very kind, we're kind people, very kind. You're not so kind when you got ripped off with your salaries. My auto worker friends and my Teamster friends and all of the unions that typically voted Democrat, they're not voting Democrat anymore because worker, whether union or non-worker, they're for the Republicans now. That's what happened. But we will charge them approximately half of what they are and have been charging us. So the tariffs will be not a full reciprocal. I could have done that, yes, but it would have been tough for a lot of countries who didn't want to do that. I'd like to see the chart if you have it. Could you bring it up, Howard? This is our great Secretary of Commerce, Howard Lutnick. Thanks, Howard. So if you look at that, China, first row, China, 67%. That's tariffs charged to the USA, including currency manipulation and trade barriers. So 67%, I think you can, for the most part, see it. Those with good eyes, with bad eyes. We didn't want to bring, it's very windy out here. We didn't want to bring out the big charts because it had no chance of standing. Fortunately, we came armed with a little smaller chart. So 67%, so we're going to be charging a discounted reciprocal tariff of 34%. I think, in other words, they charge us, we charge them less. So how can anybody be upset? They will be because we never charge anybody anything, but now we're going to charge. European Union, they're very tough, very, very tough traders. You know, you think of European Union, very friendly. They rip us off. It's so sad to see. It's so pathetic. 39%, we're going to charge them 20%, so we're charging them essentially half. Vietnam, great negotiators, great people. They like me, I like them. The problem is they charge us 90%. We're going to charge them 46% tariff. Taiwan, where they took all of our computer chips and semiconductors. We used to be the king, right? We were everything. We had all of it. Now we have almost none of it, except the biggest company is coming in. We're going to end up with almost 40%. Lee Zeldin's working to get their approvals. And it's an amazing company. Mr. Wei, of one of the great companies of the world, actually. They're coming in from Taiwan, and they're going to build one of the biggest plants in the world, maybe the biggest for that. But 64%, we're going to charge them 32%. Japan, very, very tough. Great people. And again, I don't blame the people for doing it. I think they're very smart in doing it. I blame the people that sat right in that Oval Office, right over there, right behind the Resolute desk or whichever desk they chose. Japan, 46%. They would charge us 46%, and much higher for certain items like cars, little items like cars. 46%, we're charging them 24%. India, very, very tough, very, very tough. The Prime Minister just left, and he's a great friend of mine, but I said, you're a friend of mine, but you're not treating us right. They charge us 52%. You have to understand, we charge them almost nothing for years and years and decades, and it was only 7 years ago when I came in, we started with China and charged them. We took in hundreds of billions of dollars from China in tariffs, and they understood, honestly. President Xi understood. He said, look, I understand, and the other countries, and they all understand. We're going to have to go through a little tough love, maybe, but they all understand. They're ripping us off, and they understood it. Prime Minister of Japan, Shinzo Abe. He was a fantastic man. He was unfortunately taken from us, assassination. But I went to him and I said, Shinzo, we have to do something. A trade is not fair. And he said, I know that. I know that. And he was a great gentleman. He was a fantastic man. But he understood immediately what I was talking about. I said, Shinzo, we have to do something. He said, I know that. And we worked out a deal, and it would have been a much better deal, but frankly, there were many years left on the deal that was made previous to my getting there, but it was something. If you look at Switzerland, 61% to 31%, Indonesia, Malaysia, Cambodia, oh, look at Cambodia, 97%. We're going to bring it down to 49%. They made a fortune with the United States of America. United Kingdom, 10%, and we'll go 10%. So we'll do the same thing. South Africa, 60%, 30%, and they've got some bad things going on in South Africa. We're paying them billions of dollars, and we cut the funding because a lot of bad things are happening in South Africa. The fake news ought to be looking at it. They don't want to report it. Brazil, 10%, 10%. Bangladesh is 74%. So you see what's going on. Pakistan, 58%. Sri Lanka, 88%. So what we're doing is we're taking not the full, we could take the full 88%. Thanks a lot, Harold. He's doing a very good job. How's he doing, all right? I think you better take it with you. It's not going to last very long. He's going to put it, it's going to follow you down with the wind. I brought a hat just in case it got too windy, but here, would anybody like a hat? I'm not giving it to a cabinet. I'm giving it to the auto workers. Come here. Thank you, fellas. Get it. That's it. That's it. They deserve it more than our cabinet. Our cabinet has plenty of hats. But you see the numbers. The numbers are so disproportionate. They're so unfair. At the same time, we will establish a minimum baseline tariff of 10%. You notice that on the chart. And that'll be on other countries to help rebuild our economy and to prevent cheating. So we're going to have a minimum of cheating, and we're going to be very severe on the people that at the gate that watch the tariffs and watch the product coming in, because there's been a lot of bad things happening at the gate because the money is so enormous that you're talking about. There's never been probably anything like it in terms of the enormity. And there are a lot of bad things happen at the people that do the check-in, and they're looking at 10-year jail sentences if they do play. We're going to treat them so good, but if they cheat, the repercussions are going to be extremely strong. Foreign nations will finally be asked to pay for the privilege of access to our market, the biggest market in the world. We're right now the biggest market in the world. We had a great country 4 years ago in terms of the economics. We were doubling up on China. We were doing so well. Nobody was going to catch us, but so much of it slipped away over the last 4 years under Biden. I campaigned on this policy throughout last year, and today that promise was made, and it was also a promise, as you know, that was kept. Promises made, promises kept. To any company that objects to our common sense reciprocal tariffs, again, reciprocal, back and forth, back and forth. And I call this kind reciprocal. This is not full reciprocal. This is kind reciprocal. But what we do is we cut it in half. We charge them. My answer is very simple. If they complain, if you want your tariff rate to be zero, then you build your product right here in America, because there is no tariff if you build your plant, your product in America. And we've seen companies coming in like we've never seen before. Likewise to all of the foreign presidents, prime ministers, kings, queens, ambassadors, and everyone else who will soon be calling to ask for exemptions from these tariffs. I say, terminate your own tariffs, drop your barriers, don't manipulate your currencies. They manipulate their currencies like nobody can even believe, which is a bad, bad thing and very devastating to us. And start buying tens of billions of dollars of American goods. Tariffs give our country protection against those that would do us economic harm. And many people were looking to do us economic harm. Maybe not so obviously, but they were doing tremendous economic harm. But even more importantly, they will give us growth. These tariffs are going to give us growth like you haven't seen before. And it'll be something very special to watch. I am so looking forward. And Brian, it's going to happen even faster than you said. You know, you might say, but it's already started. It's already started. Work's already begun on plants all around the country. And you see that it's before. These are big, rich companies. We have $61 billion started on a big plant going up. It's going to be announced over the next 2 days, and they already started work. Many of these the biggest companies in the world, they've committed to build, build, build. We're going to build, 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 sir. And they came here to see me, and they wanted to know if they could have a press conference. I do as many as I can. I'm pretty busy trying to stop Russia and Ukraine and the Middle East. We got to stop that. We got to stop the Houthis, which we're making tremendous. They like shooting ships down and out of the water, sinking ships. They get a kick out of it, but they're not getting such a kick out of it now, are they, Mr. Secretary? They're not getting such a kick out of that now. But here are just a short list of some of the companies that have already announced and committed to investment. And this is a company that built its factories and its plants in China. Apple is going to spend $500 billion. They never spent money like that here. They're going to build their plants here. SoftBank, OpenAI, and Oracle, great companies, are investing $500 billion almost immediately. NVIDIA, a hot company, is investing hundreds of billions of dollars. They just announced. TSMC, the biggest, most important company in the world of chips from Taiwan, with no investment from us, is investing $200 billion. And they said the reason was, number one, the election of November 5th, and number two, the tariffs. They don't want to pay the tariffs, and the way they're not paying it is to build their plant here. So we're going to go from almost no percentage. We used to have 100% of the chip market. Now it's all in Taiwan. Almost all of it's in Taiwan, a couple of other countries, but mostly in Taiwan. And think of it, we had 100%. We lost it because of people in that office that didn't do their job. They allowed it to be stolen from us. Johnson & Johnson, great company, $55 billion. Eli Lilly, $27 billion. Meta is investing $500 billion. Wow. DeMac is investing $20 billion. CGM, $20 billion. And then you have Merck and Clarios, Stellantis, General Motors, GE Aerospace, Honda, Nissan, Hyundai are all putting in billions and billions of dollars, and they're committed 100%. So. And we've never had, and this is after 2.5 months. This is after just a short, this all took place as soon as we came out with what everybody wanted to do. You know, I watched a gentleman today on television. He used to work with Lee Iacocca, a very respected automobile person, and he said, you know, because they're asking people, they try and get as many negative people as they can, but they can't find them too much. It's pretty hard to find in terms of what we're doing, especially when they see all this investment. They said, so tell me, what do you think of what Trump is doing from the automobile standpoint? He said, I can't believe it. Somebody is finally, he's an older guy, real pro, really top guy with Lee Iacocca. He said, I never thought I'd see the day when this would happen, where somebody had the courage to go and do what has to be done. This is transforming our nation. Our entire nation is going to be transformed, not only with the cars, but on every single other item that's built. We're going to become an industrial powerhouse. And he said that so beautifully today. In fact, I'm going to find out, I'm going to get a tape, and Bruce, I'm going to get that tape, and I'm going to send it to you out in Long Island, and you're going to play it for the people. And all your union workers and your non-union workers out there, you got a pretty even split. But we have, so far, it looks like we're going to have about $6 trillion of investments, and you wouldn't do that in years in this country over the last number of years. $6 trillion, and that's going to be much higher by the end of the year. And think of what $6 trillion is. You wouldn't have even a small percentage of that under this other system. We're going to be an entirely different country, and it's going to be fantastic for the workers. It's going to be fantastic for everyone. There will never have been a transformation of a country like the transformation that's already happening in the United States of America. It's an incredible thing to watch, and it's incredible to meet with the top people, people that you read about, very wealthy people, or people that are great managers and executives and presidents of big public companies, and to watch the enthusiasm they have now that they didn't have. They gave up on our country. They went to foreign countries and they built. Companies are pouring into our country at levels never seen before, with jobs and money to follow, and it's really beautiful. In the coming days, there will be complaints from the globalists and the outsourcers and special interests and the fake news. Always, fake news will always complain. But never forget, every prediction our opponents made about trade for the last 30 years has been proven totally wrong. They were wrong about NAFTA. They were wrong about China. They were wrong about the Trans-Pacific Partnership, which would have been a disaster if I didn't terminate it. If I didn't terminate that, United Auto Workers, you would have had no jobs in this country. You would have had no jobs. It was all going to other countries. In my first term, they said tariffs would crash the economy. Instead, we built the greatest economy in the history of the world. And again, I have great respect for President Xi of China, great respect for China, but they were taking tremendous advantage of us, and I commend them for that. I say, hey, if you can get away with it, that's okay. But, you know, they understand exactly what's happening, and they probably, most of them are saying it's about time they did something, but, and they're going to fight, and they're going to fight fair. Everyone's going to fight. You know, it's like, I say to the leaders, look, you got to take care of your country, but we have to start taking care of our country now. We can't do what we've been doing for the last 50 years. From the day of my election, the stock market went up in my first term 88%, with NASDAQ going up 155%, more than any president has ever had in any term in office, by far. And I think we're going to blow that away. And maybe the numbers won't show, but I think they're going to show much better than even those numbers. But what you're going to see is you're going to see activity, that empty, dead sites, factories that are falling down. Those factories will be knocked down, and they're going to have brand new factories built in their place. They're not only talking about renovating, they're talking about brand new, the best anywhere in the world, the biggest anywhere in the world. I have a friend who builds car plants, and I said, I want to see the biggest and the best. He said, well, we have to go to Mexico. I said, no, I want to see it in the United States. He said, we're not building them in there. This is a year and a half ago during the campaign. He said, we're not building it. You'd have to go to Mexico. When I was starting to decide to run, and I went to #1 in the polls very rapidly, I want to say, like let's say in the first hour, and then shortly thereafter, it looked like I was going to win, and the fake news was saying, "Oh no, don't do this." What they don't know is if I didn't win, they would have really been in trouble, because nobody wants to read them anyway. But I tell you what, when it looked like I was going to win, I announced that I was going to be doing exactly what we're talking about today. Great consistency, actually, because I've been talking about it for 40 years. But because I saw what was happening 40 years ago. If you look at my old speeches when I was young, very handsome, my old speeches, and people would say, I'd be on a television show, I'd be talking about how we were being ripped off by these countries. I mean, nothing changes very much. The only thing that changed were the countries, but nothing really changes. But it's why it's such an honor. It's such an honor to be finally able to do this. If you look at China, I took in hundreds of billions of dollars in my term, hundreds of billions. They never paid 10 cents to any other president, and yet they paid hundreds of billions, so much so that Biden couldn't do anything. They wanted to try and terminate it because he had a very special relationship with China. You know what the relationship was? He had a special relationship. But the numbers were so big. The numbers were so big that they couldn't do it. So they did ease it up. They did things that they shouldn't have done. They made it a lot more comfortable for them, but they couldn't do it because the numbers were hundreds of billions of dollars, and I did that. And we were on our way to doing something like incredible. And then we had a very bad election happen, a very bad election. A lot of bad things happened. So when I said we got to do it again, I said we have to make it too big to rig, and we made it too big to rig, and we won in records, and it was a monumental win. And it was such an honor to see so many of you, like Brian and your friends, here with us to celebrate, and to more importantly celebrate what we're doing, because that wouldn't be a full celebration if we didn't do this, because this will be an entirely different country in a short period of time. It'll be something the whole world will be talking about it. The critics made the very tired predictions earlier this year, but in February, core inflation dropped to the lowest rate in 4 years. And the price of eggs, as you know, just in a month and a half, we were there for 4 weeks. And the first week, I got blamed for eggs. I said, I just got here. They said eggs have gone up at like 250%, and you can't get eggs. And they were going crazy. And I said, I just got here. And then we got to work on eggs. We got to work on everything. And our great Secretary of Agriculture, you did a fantastic job. Brooke Rollins, she did a fantastic job. And as I said before, the price of eggs dropped now 59%, and they're going down more, and the availability is fantastic. They were saying that for Easter, please don't use eggs. Could you use plastic eggs? I said, we don't want to do that. We want to, and you really came through. It's an amazing job. Thank you very much, Brooke. You did great. But likewise, an old-fashioned term that we use, groceries. I used it on the campaign. It's such an old-fashioned term, but a beautiful term, groceries. It sort of says a bag with different things in it. Groceries went through the roof, and I campaigned on that. I talked about the word groceries for a lot. And energy costs now are down, groceries are down, gasoline is way under $3, and people are beginning to be able to buy things and live again. We brought prices way down. We created 10,000 already in a few weeks, new manufacturing jobs, and it was that took place in 1 month, numbers that they haven't seen in a long time. We had virtually no inflation under my term. We had virtually no inflation for 4 years. But after transitioning over to Sleepy Joe, it went from almost non-existent to the highest in the history of our country. They're the highest inflation in the history of our country, brought up by energy and bad spending and bad policy, and a lot of bad things happened. How about allowing millions and millions and millions of people to pour into our country with open borders, where it's so sad to see even now. And I see our great secretary you have done. Stand up, please, Christy. Stand up. Christy Noem. And Tom Homan. These people are doing a great job, but gotten them out in records. We have problems with judges that don't want them to go out. They want Tren de Aragua, and they want MS-13, the most vicious gangs ever. Nobody's ever seen anything like it. Absolute killer gangs. They kill people. They don't even think about it. And we put them out, and we have judges now, radical left judges that want to They don't want them to go out. They want them to even be brought back. Let's bring them back. You've done a fantastic job, and please thank everybody. Homeland Security, thank everybody. Appreciate it. And we now have a border that's the best border that we've ever had, even better than it was my first term. My first term we did good, but this one we really specialized in. We've done really well. And we had records then. We had the best, safest border. 4 years ago, we had the best border there ever was. And now we have, you've actually matched it and done even better. And we're going to get it down the right way. And we want people, by the way, to come into our country, but we want them to come in through a legal process. We want them to come in legally. We need more people. We need people to run these plants and to help the auto workers and the Teamsters and the non-union people and everybody else. But we need people and the farmers. And we're going to let people come in, but they want to come in. We want them to come in legally. They have to have the capability of loving our country, not people that hate our country. We don't want them in our country. And now we're going to pass the largest tax cuts in American history, and that's where we're relying on Mike and John Thune. And we will not cut Social Security, Medicare, or Medicaid benefits, and the Democrats will, because if they got in, the entire economy would collapse. This country was heading for a collapse under the people that you saw. They were horrible. I think one of the reasons people like the job, I have my highest approval ratings because I think they're comparing me to the worst administration in the history of our country, so I appreciate that at least. But Speaker of the House Mike Johnson and Senate Majority Leader, appreciate it, Mike. John Thune have been fantastic, by the way. But they've been working tirelessly on taking the next step to pass the plan for our one big, beautiful bill. I'd like to name it that if you can. One big, beautiful. I made that statement about 6 months ago, and everybody calls it one big, beautiful bill. And it will be that. It'll have everything, the big tax cuts and every incentive there is. And it'll be fantastic. And by the way, for the cars, we're asking for an interest deduction on a loan. So if you build the car only in America, we do it, Brian. If the car's not built in America, you don't get the interest rate deduction. But if you build the car in America, if you buy a car, if it's built in America, then you get an interest rate deduction, tax deduction, and that's a big thing. It's going to be a big thing. I think that's going to pay for itself very quickly, that deduction. Never happened. We've never had anything like that before. Somebody said, where did you get the idea? Because it's so basic. You would think that would have happened a long time ago. It never did, and I'm very happy it didn't, because now I can say that was my idea. But we're going to get us closer to the debt extension. We have to get the debt extension passed, and I know you're going to be able to do that, Mike, and it's very important that you do that. And all of the other things that the Senate budget plan gives us, along with working, because I know they're working together, John and Mike, and the two bills are going very well together. We need to get our shared priorities done, including certain permanent tax cuts. We want the tax cuts to be permanent, spending cuts, energy and historic investments in defense, border, and so much more. We're covering everything. These will be phenomenal. There'll be no bill like this going to straighten. One bill is going to straighten out our country for many, many years to come. And we said, let's just do it and let's get it done. And some guys will love it, and some guys will like it a little bit less because they're not getting what they were exactly looking for, but they're getting a lot. They'll never, if we get this done, it'll be the most incredible bill ever passed in the history of our Congress and Senate and congressmen, the senators and the congressmen, many of whom are here today, will be very proud of themselves. I really believe that it's going to set us on a whole new prosperous path. We're going to cut spending and right-size the budget back to where it should be. We're going to do that very strongly. Thank you, Rick. Thank you. John, thank you. Oh, look at all of our senators over there. Oh, boy. That's a nice group of people. But I won't like them so much if they don't get this bill done. That's a great group. And Congressman, thank you very much. I appreciate it. Tremendous people. The Senate plan is my complete and total support, and the House plan likewise is very similar. They're moving along pretty much at the same clip, and as soon as you're ready, you'll show it to me, and I'm sure it'll have my support, Mike. Every Republican congressman and senator must unify. We have to unify. We can't be separated. We have to get it done. We have to get absolutely everything we can, and we have to take care of the American people. That's the only thing that matters. We have to take care of the American people first. We need to pass this bill immediately, get it done, including debt extension. From this day on, we're not going to let anyone tell us that American workers and families cannot have the future that they deserve. We're going to produce the cars and ships, chips, airplanes, minerals and medicines that we need right here in America. The pharmaceutical companies are going to come roaring back. They're coming roaring back. They're all coming back to our country, because if they don't, they got a big tax to pay. And if they do, I'll be very happy, and you're going to be very happy, and you're going to be very safe. We're going to build our future with American hands, with American heart, American steel, and we're going to build it with American pride like we used to. We're approaching our 100th day as president and have been given credit by a lot of people, actually, even some of the fake news. Can you believe it? Which in this case hopefully isn't fake, for having done more in that time than any other administration in the history of our country in the first 100 days. I think we've had an amazing, in terms of what we've done, what we've gotten accomplished. I'd like to see if we can get that war ended and another war from not starting in the Middle East. We have to get Russia. They're losing 2,000 on average, 2,500 people a day, young people, soldiers, Russian. Think of that. 2,500 through some days, but on average, probably over about a 1 week period, it's 2,712, they say. They're losing those soldiers. They're dying. They're being decimated. And they're not from our country, but they're from other countries, but they're human beings. They're from Russia. They're from Ukraine in this period, most of them. And we're going to get it stopped. It's a senseless war that would have never happened if I was president, and it shouldn't be allowed to go on. And I think we're being given good cooperation by Russia and by Ukraine, but we have to get it stopped. It's humanity. It's humanity. It's a terrible thing. This will be a very big moment. I think you're going to remember today. It's going to be a free nation that we're dealing with. We're going to have a very free and beautiful nation. It's going to be Liberation Day in America, and it's going to be a day that hopefully you're going to look back in years to come and you're going to say, you know, he was right. This has turned out to be one of the most important days in the history of our country. God bless you and God bless America. Thank you, everybody. Thank you very much. Thank you. Thank you very much.
Live from the Rose Garden at the White House, speaking for the better part of an hour, President Trump finally putting some facts down when it comes to tariffs and what he dubbed Liberation Day, a massive ceremony with a flag-draped colonnade outside the Oval Office, with the president now stepping down from the stage where they had set up a desk, presumably to sign some executive orders. He may be on his way there with a crowd that is full of dignitaries as well as workers in hard hats. We'll keep tabs on this as he now seeks to put pen to paper, signing executive orders for reciprocal tariffs, announcing baseline tariff rate of 10% for all countries. Effective at midnight, we'll have the 25% tariff on foreign autos. Reciprocal tariffs will take effect later. Some of these will take effect over the next couple of days this weekend, and then later next week, reciprocals on the 9th of April, according to the White House. I'm Joe Matthew, alongside Kaylee Lyons in Washington, a couple of minutes ahead of our normal start time for Balance of Power. Kaylee, we finally have some, if not all, clarity on what's going on.
Indeed, as you mentioned, a 10% base rate on all trading partners will be imposed, and then other countries will face additional charges, reciprocal charges, that include non-tariff barriers in the White House calculation. Though the White House contends it is being lenient here by charging those countries a reciprocal rate only half of what the U.S. has calculated is charged on U.S. imports by those countries. So some examples from the graphics that the White House included in this announcement: China will face a rate of 34%. Obviously, that is materially higher than the 20% tariffs, which already were in effect on Chinese products. It'll be a 20% rate on the European Union, 24% tariffs on Japan. For Vietnam, the reciprocal rate is 46%. And of course, Joe, we are seeing markets react in accordance with this news, as you are seeing currencies and stocks, at least futures, on the move.
There is a 10% club here. The UK, Brazil, Australia, Saudi Arabia, among those countries with only that baseline tariff, Kaylee, as opposed to the reciprocals. President Trump now, if you're with us on Bloomberg Radio, holding up the binder here to show the signed executive order that makes this official. As we heard from the White House a bit earlier, Kaylee, tariffs going into effect April 5th on the baseline at 12:01 a.m. April 9th at 12:01 a.m. We will have the reciprocal rates taking effect on the countries that we're discussing.
But notably, two of the countries not included in this new regime are our two North American trading partners. Canada and Mexico will not be subject to these reciprocal rates. Instead, the USMCA exemption for Canada and Mexico will remain in effect. Remember, there were 25% tariffs placed on all imports from those countries, but those that were compliant with that trade deal were exempted, and that is expected to continue. Hence the reaction we are seeing in the Mexican peso, which right now is at the session high against the U.S. dollar. And we want to have more on that and the wider market reaction now and turn to Bloomberg's Romaine Bostick live from New York. And Romaine, obviously, initially markets reacted kind of positively to what they thought might be just a 10% flat rate, according to some reporting that came out, but very quickly things turned around.
Yeah, we actually had a really nice rally in the post-market, Kaylee, kind of an extension of what we saw during the CAS session. But once Trump actually held up that list of tariffs, it was hard to read, but of course our folks here at Bloomberg did a great job of really going through those numbers. The main thing that jumped out to traders was, quite frankly, there weren't any real exemptions or carve-outs. You mentioned the USMCA. That's really the only one here. People were looking for carve-outs not just on a country basis, but more importantly on a company and sector basis. When they did not see that, you saw a huge turnaround in the market. Futures went from being up 1% from where they closed at the 4 p.m. close to being down more than 1% from that 4 p.m. close. And it is the industries moving lower that you would expect. Some of the big tech names, like an Apple, like an NVIDIA, some of the automakers, like a GM, like a Ford, and of course a lot of companies in the materials and the energy space also taking a bit of hit here. Remember, it's not really clear right now, Kaylee, what the actual impact is going to be. Will this actually hurt their business long term? Is there going to be some mitigation effort by those companies to, I guess, defray those costs? That is still the unknown. And if you were looking for clarity today, out of what we learned out of that White House event here, at least based on what the market's pricing in, we did not quite get it.
All right, Bloomberg's